geopolitics and whether the geopolitical concerns will wane on risk assets in a meaningful way or not. Will oil spike enough to hurt macros within India? And we will at some point of time in the show talk about IT in great detail with our guest and never mind the corrective moves that we've seen thus far because of the lack of positive commentary. Does IT remain an avoid? Pose all of these questions to Nirav Sheth, CEO Institutional Equities at Emkay Global Financial Services. Nirav, great having you as always. Thanks for taking the time out. I hope all is well.
Thank you for having me, Nirav.
Now, the pleasure is ours, Nirav. Nirav, what do you do in a scenario like this, which is as fluid as it is right now on the geopolitical front?
Well, Nirav, over the last several years, I don't think that you've ever invested in a market where, you don't have, you move from one concern to another concern, right? You always need to be cognizant of what can impair the structural growth story or inflation outlook or your interest rate outlook. And in many of the cases, it's not very easy, right? The way to look at it is, the two things that has happened, right, over the last, maybe a fortnight or so. One thing that it increasingly seems that the pivot that Fed took was probably premature, in a sense that your inflation is moderating, but is not moderating fast enough, and this is largely around shelters and service part of the economy. Second thing is obviously the escalation that we are seeing on the Middle East front. To me, this is probably, I'm talking about the geopolitics, right? It is not a happy situation. A lot of human lives are involved, but this is of a degree considerably lower in intensity than what we had seen with Russia, Ukraine, right? And we are able to live through it. Russia is a far more dominant player in the oil market. Europe was completely dependent on energy for Russia, right? So the dislocation in the global energy market was of a degree significantly higher. We are not very close to that as far as the Israel-Iran thing is concerned. And it also has an offsetting implication, right? So if you every time you got an escalation in geopolitics, you will see that people rush into bonds, and therefore you've seen about a 10 bips rollback in the bond yields. I think that this will keep a lid on the risk assets for some period of time. I don't see a significant escalation. I don't see a significant risk of trade right now from what it looks like.
Okay. Nirav, are you a buyer, therefore?
I am super bullish on Indian economy, right? And by that definition, Neeraj, it is always, these are the times that you want to go and buy. And when I'm talking these are the times, maybe the stocks could be down another 5-7%. To me, that is the base case scenario. Given the fact that if you look at the economic narrative in India, if you look at the political narrative in India, and if you look at the macro scenario in India, these are very, very strong dynamics playing out, right? And therefore, you need to be buying equities with an horizon which extends into 2, 3, 4 years. I believe that you will have probably a lifetime opportunity pre-elections buying into Indian equities.
Mm-hmm. Yeah, Nirav, just wondering. I agree that the longer term view is very positive. You are not waiting for a tactical lower opportunity because it might be difficult to time the bottom. Is that it?
No, I don't believe that you are going to see a significant drawdown.
Okay.
Right? Because you need to cut the earnings for markets to go down. Right? So there are two levers to the market. A is your evolution of the earnings. Second thing is your discount rate. You slightly, sort of hazy around, how my risk-free rate is going to behave. But if you look at the earnings evolution, and if you are looking at the ROE evolution, you are talking about a $4.5 trillion economy, which is growing at about 6.5%. Earnings are going to compound at 14 or 15%. I don't know whether you'll see a meaningful correction.
What about the other overarching factor, which is the rates and the yields, much to the chagrin of bulls, we are not likely to see rate cuts in a hurry, at least as the sound bites go right now. And therefore, higher for longer rates, the multiples question, the discounting factor, all of that comes into question, Nirav. Would the street be disappointed with no rate cuts or not quite?
Well, it depends upon why the rate cuts are being pushed out, right? So if you look at since December last year, the first 4 months, you essentially had an unusually resilient US economy. Essentially, the payroll numbers were holding up very well, the wage growth was moderating, but the US economy was doing better than expectations. And if your economy is doing better than expectations, which is why you're pushing out the rate cuts, that is rich asset positive, as far as I am concerned. The last print that you saw was on inflation, right? And essentially around shelter, which is still seems to be sticky at about 5%. If the inflation print doesn't moderate in line with expectations, then you need to be slightly worried about the impact on the risk asset. So the question is that why are the bond yields holding up higher? Is it because of higher economic resilience, which means that I'm looking at long-term higher terminal growth rates, or is it because of stagflation scenario? If it's latter, the risk asset will sell off. I don't see inflation so much to be a concern, right? You would never have a linear disinflation anywhere in the world. It is always a bumpy ride. I would still believe that this is more of a noise. You should be seeing rate cuts sometime in maybe September onwards. Do keep in mind, if you look at the expectations for headline inflation in US and core inflation in US for 25, they are at 2.3% and 2.1%. So even if I reduce the rates by 50 basis points, you'll come to somewhere around 5% or 4.75%, which is still fairly restrictive, right? We are not talking about whether it will go back to 2% or not, but I think the process will start.
Okay. Nirav, now one more question, and you know, we'll actually just cover the macros here because we'll get into specifics in the next segment. If I heard you say that you do not believe that there will be too much of a downside, but that is ceteris paribus. If indeed the Middle Eastern issues around Israel and Iran escalate, then tactically, I presume, you would wait for lower levels. Would that be a fair assessment or not quite?
Yeah, of course. So in one of the scenarios that I try and build into, so right now it seems to be certainly an escalation between Israel and Iran. Now, whether that gets other Middle Eastern countries into it, and therefore it becomes a wider Middle East conflict, then obviously there will be a significant more impact on oil prices and your dollar inflows and stuff like that, and therefore you could have potential another 5 or 7% rate cut. It is a scenario that you have to build in. To me, there are reasonable odds, but it is not my best case scenario. The reason I'm willing to take this line of thinking is because Israel seems to be isolated in its attack on Iran, right? This is not, the allies have not been necessarily supporting Israel in terms of escalating this thing with Iran. But we'll have to wait and see. It is a possibility with lower odds, which can create a 5-7% cut in the markets.
So viewers, remember, I think it was important to lay it out because Nirav is per se bullish, with the base case being that this conflict will not escalate. If that were to happen, then some of his previous bullishness tactically gets revised, maybe 5 to 7% lower. But at those levels, presuming that things don't worsen too much, that is where his optimism around India earnings and thereby growth in equities in India come to the fore. Now, what within this whole sphere? We'll talk about that with Nirav on the other side of this very, very quick break. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
So the usual has happened, back with talking point of course, and the usual has happened in trade on Friday that oil spike has led to OMCs coming off and some of those. But the point with our guest is that some of these dips should be used to buy into. Now, Nirav, I'd like to start off with what is it that you are most constructive on? The biggest electoral exercise in the world is underway starting Friday, the 19th of April. We have this geopolitics, all of that, and the earnings season in full blow. Non-IT, because we'll talk about IT separately, Nirav, non-IT, what is it that forms a part of your ready reckoner list, if you will?
So, and I'm keeping the valuations aside right now because I'm talking about the macro. So, I am very constructive on how the capex recovery is going to come back. Right, and this entire chain from power to renewables to electric vehicles and green hydrogen and generally investment in cement, steel, stuff like that. So there's a big tail over there. So very constructive on how the capex recovery will happen. We are also constructive on the discretionary part, right? So anything that is leveraged to Indian economy at large. And that includes financials. Within that, obviously, constructive on the PSUs as well, and even the NBFC space. And thirdly, I am particularly excited about what I would call the shunt sectors for long and still trading at very, very interesting valuations, which is something like, an ONGC or Coal India. The free cash flow yields are even today at about 9 or 10%. I also would like to believe that I would expect the Prime Minister to use his political capital in the third term to dramatically change and raise resources through the public sector units. As far as the ideology is concerned, they are very, very prudent in terms of their fiscal prudence. You still have to raise resources to try and do some serious pumping up of infrastructure. Countries like India are asset heavy and income poor, right? So you can potentially raise billions of dollars through the public sector assets that have been created. And if you're not going to do it now, then when are you going to do it? I'm willing to take that call that you will see, they have laid the template for it. They are run very well. They are governed very well. Valuations have started to catch up. Now it's time to monetize them, raise resources, recycle those into more and bigger infrastructure projects. And therefore, you're going to see unlocking as PSUs as a space.
And remember, viewers, Nirav was amongst the first people to give a call way back, I think in 2020. I say this almost every single time, on PSU banks being the outperformers, and boy, did that call turn out to be true. We'll talk about these, but I want to invoke IT before we talk about it, because IT is the newsmaker. And let me first get in my colleague Rucha, who tracks this space very closely, to come in and talk about the key highlights for Infy. And viewers, don't get confused if they sound eerily similar in some fashion to some stuff that even TCS had to say. But Rucha, Infosys, correcting ahead of the numbers, correcting post the numbers, what were the three key highlights for you?
Infosys has given a very muted guidance, but the management has mentioned that the first half of next year will be strong on the back of ramp up of the BSNL deals in the BFSI sector, which means that the second half will largely be soft. Second, the deal wins are highest ever, but does that really matter? Because that was the case with TCS as well, and that is not getting converted into the top line. And lastly, clients are opting for more of cost optimization deals, and these kind of deals generally come with tighter budgets, which can impact the IT companies' margins, and this implies that there is still pressure on discretionary spends, which even the TCS management had noted on last Friday.
Rucha, net, Accenture, TCS, Infosys, as big as it can get, we're not seeing clarity on discretionary spends coming in thus far, right?
Yes, that's correct.
Okay, Rucha, thanks for giving us a very quick update on this. Now, Nirav, come in on information technology here. It's a sector that's long withstood every test. Is the timing, though, wrong for somebody to take a contrarian call?
Well, my sense is, it's a bit of a difficult call. And I believe that the things that are impacting the software sector are not only cyclical but also structural. Now just look at how the captives are building up their base in India, right? So if you look at broad evidences in terms of the real estate space that are being signed up by captives, I would like to believe that captives are outperforming the traditional outsourcing Indian IT companies, right? So that is a part of the growth that is being redirected towards captives away from our homegrown Indian companies. If you look at the mid-cap IT companies, they are outperforming the large-cap IT companies. So my sense is that you've got a growth distribution that seems to be happening because there is not too much of differentiation left. So part of the smaller deals are being taken away at the bottom by your mid-cap IT companies, which are probably growing at twice the rate of my large-cap IT companies. And obviously, the captives themselves are insourcing a lot of the work which ideally would have gone to the IT companies. So you need to adjust for that. So if you ask me, I don't have a great view in terms of what my long-term growth rate in free cash flows are going to be, right? So today we're going at 2 or 3%. The median expectations are the CC growth in dollar terms will be roughly about 6 or 7%. Whether it's going to be 5%, 6%, or 4%, at least to me, it's a bit hazy, number one. To me, a bigger problem also is the fact that when I look at the next 3 or 5 years, I believe that India rupee will be a significantly stronger outperformer. We are already seeing that right now, right? We are one of the best performing currencies year to date after US dollar, right? And this is despite the fact that we are still a current account deficit country, right? So when I look, just look at the latest print, right? Where trade deficit is roughly about $15.5 billion. And I think your service exports are close to about $15.5 billion. So there is a dramatic change in my current account situation, and try and forecast that over the next couple of years. So you're potentially looking at a significantly lower depreciation of the rupee. It could even be flattish as you move forward. And that has implications in terms of how you look at the margin outlook for a lot of these IT companies, because there is implicit building of rupee depreciation go forward. All told, I am negative on IT companies given the valuation they are trading at this point of time.
And therefore, viewers, at times it may not even matter. I mean, you don't necessarily have to have IT in your portfolio because you don't have benchmarks per se. I mean, unless you're a fund, of course, you don't have benchmarks to meet per se. And even if you do, I mean, unless you're a mutual fund, a PMS, a fund is okay to not necessarily stick to those benchmarks and outperform. Nirav, at the start of this segment, you mentioned that you believe that a couple of things could happen. One, some of the PSUs, independent of how hard decisions are taken or no, just the numbers, the dividend yield at which they are present in, etc. ONGC, for example, might do well. And there have been significant upgrades that have come in recent past as well. Is oil upstream and ONGC, Oil India, etc., all of them great plays, or do you like ONGC in particular? I'm just trying to think out loud.
No, I think I like the entire space. One way, like I said, is I'll never argue that the markets are cheap, right? But you cannot buy a great story cheaply. It is not possible. And if the big corrections come, they'll come because there is a dislocation in earnings. And by definition, that means that the outlook is not too great, and therefore maybe the investment may not be too great as well. To me, I always believe that one way to look at this is that you are bullish on India, you are putting 95-98% of your portfolio, consider portfolio. I always look at oil companies as an insurance play, right? The only thing that can derail India's story in the near term is an escalation in oil prices, which impacts my balance of payment problems eventually, and rupee depreciation and stuff like that, and inflation. This is an insurance to that portfolio that you are creating. And instead of paying a premium, you're getting a premium because they are yielding you about 8 or 9% in terms of free cash flow yield. In many cases, the dividend yield is about 5 or 6%. And therefore, it's a no-brainer. Secondly, I think markets routinely overestimate, what you would call this transition away from dirty assets into renewable assets, and we overlook things like Coal India and stuff like that. It is not possible to wean away of coal for a long, long time in the future, right? So usually that gives you very, very solid entry points in terms of valuation.
That's an interesting twist. Buy oil upstream as an insurance premium. Didn't quite hear that, but I think that logic is very sound. I just have one last question, Nirav. And that's on arguably the story of the month, the revival of Vodafone Idea, right? Now, is Vodafone by itself a good play to your mind, considering that there is a lot of smart money that is coming in? They are raising capital, they'll raise debt, they'll spend on 4G, they will stop losing customers the way they have, presumably, in the future as they have in the past. And does the revival of Vodafone Idea hamper Bharti Airtel and others, or do you think the space now looks pretty exciting? How would you characterize telecom?
Well, to me, a large part of the trade or investment in telecom sector is behind us, in a sense that logically you should expect a significant reset in tariffs as you go forward. And therefore, all of us know the investment case. It is a perfect duopoly, and there are two large players, and they are past their heavy capex phase, and therefore the outlook looks to be good. But you also want to keep in mind that this is finally an ex-growth market. So once you got a tariff which is getting reset and your earnings reset at a higher level, there is no growth. It is not a compounding machine by nature, right? And therefore, I'll be very circumspect about giving high valuations to these kind of assets. I have not looked at Vodafone in great detail, but I have always believed that when the sector turns around, you also make money with the laggards. Vodafone, to the best of my knowledge, will not be a price, setter. It will be a price taker. It's a high tide, and you'll benefit from that as well. And it's great that they've been able to raise money, and therefore you can restructure your balance sheet, which has been a great pain point. If I could think out loud, maybe at some point of time, after a couple of years, there could be even a significant takeout value sitting over there.
Great. Nirav, always great insights. This time, no different. Thanks for taking the time out and speaking to us.
Thank you so much for having me. Pleasure talking to you.
And viewers, thanks for tuning into this edition of The Talking Point.
if we want that those who are running our governments, who make our lives different, they must consider us as relevant, and we become relevant if we cast our votes. I have always been voting, and I have actually quite looked forward to the task of voting, and I certainly plan to vote as long as I'm able to vote in every election in the future, including the current one.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India,
Hello and welcome to the F&O show, where Agam and me will take you through all the action in the markets. It looks like a very, very stressful day of trade on the Lal Street. Stress across the world with Iran and Israel. Of course, Israel retaliating to Iran's attack is putting pressure on D Street. After 4 days of weakness, it looks like it's the fifth morning when there is some weakness. The good news, though, is we're off the day's low point, but the index still trades up 21,900, which was proving to be an important level of support on the street. We dipped below 21,800 as well briefly in the first few minutes of trade, but very quickly recovered from that to trade with a cut of about 130 points now. Well, while the benchmark trades weak, Bank Nifty is also having a weak morning, and the breadth of the market looks fairly disappointing at this stage, even though there has been a little bit of improvement coming through in the last couple of minutes. The only trade that we're spotting is crude, so you've got stocks that are gaining on back of higher crude prices, and you've also got stocks like OMCs that are actually losing out on back of higher crude. So BPCL, HPCL, IOC, your top losers. ONGC, Oil India, on the other hand, turning out to be top gainers. In terms of earnings reaction, it's been a pretty stellar quarter, record quarter for Bajaj Auto. The stock, though, unfortunately sees a slight cut in trade. Could be buy the rumor, sell the news that's playing out for this one. But talking about Bajaj Auto, we'll be joined by Rakesh Sharma, ED of Bajaj Auto, who joins us to take us through what the quarter's been like and how business looks going ahead. Hi, Rakesh. Congratulations. Another significantly great quarter for Bajaj Auto. I think you were spoiling investors by outperforming every single quarter. But let's start with it. What's worked for you? This quarter, I believe domestic demand was the key driver. Exports are also seeing a little bit of recovery on better product mix. So give us the key highlights.
Good morning, and yeah, thanks. It's been a very good run. FY24 has been a year of multiple records, highest ever revenue, EBITDA, free cash flow, PAT, highest spares revenue, Pulsar volumes, highest three-wheeler volumes, and highest ever KTM volumes in India. So it's a record. But if I have to sort of single out a couple of things which have driven this record performance, the first is really the progress we have made in the upper half of the motorcycle industry, which is the 125cc plus segment. Here, our flagship brand is Pulsar. We've had a slew of launches over the last 6-7 months. And I must say that all of them have been accepted very well in the market. So we have now almost 18 models which are spanning the entire top half of the industry. And therefore, there is a Pulsar for every kind of customer, a commuter-oriented customer, a style-inspired customer, a performance-driven customer. So under the one brand, Pulsar. To give you an idea, we sold our last highest sales of Pulsar was 0.9 million. And this year we've done 1.4 million. And obviously the margin profile of the Pulsar brand motorcycles is higher. So it has had a very good impact on both the top line and bottom line. Our market share in this the sports segment, as we call it, is standing at a very solid 41%, a gain of 6%. The second thing which I would single out is really the performance of the three-wheeler business, which has done very well. The industry has come back. The recovery, except for 1 or 2 states like Delhi, is almost complete to pre-COVID levels. It has been driven a lot by the advancement of the CNG infrastructure, which the government is putting in place. That covers now 60% of the districts of India. And we have seen that wherever the CNG is available, the three-wheeler, a diesel three-wheeler owner just shifts, attracted by savings to the CNG-driven vehicle. We have we have been leading this tech, and we have a 80% plus market share in this. This business has been growing, and on the back of the CNG advancement, etc. So these two would be really the key drivers. There are others, of course, but I would say that these two are the primary drivers behind the stellar FY24 performance.
Mr. Sharma, let's look ahead now. I believe export recovery still is gradual and maybe uncertain. In the next couple of quarters out, do you still feel like the industry-wide domestic demand, which is in expansion mode, could continue to, cushion the sort of slowdown in exports, the uncertainty across the export market, or there are some downside risks to the kind of expansion that the company is currently witnessing?
Well, you're right. The recovery in exports is going to be gradual and uncertain. That is the nature of the beast, given all the geopolitical scene and the macroeconomic challenges which many emerging markets are facing. So, however, in our planning, what we've done is we have sort of divided the overseas markets into 3 buckets. One is the stressed countries. Unfortunately, some large markets like Nigeria and Bangladesh are in there. And we've taken a rather conservative view of the development here, mainly because it is very difficult to anticipate and predict. The second is most of the other markets, which are very nicely now firmly in a recovery path, mainly in Latin America, ASEAN, Philippines is a large market. And there we are wanting to go faster than the industry recovery. And then, of course, we have new markets and new segments where we are sort of just, we have recently entered or about to enter. Our plant in Brazil is going to come on stream in May, which will open up some pent-up demand and allow us to expand the network. We are expanding our footprint in Europe. We have entered Venezuela, which has opened up. We have got a very fortunate development in Egypt, with the Egyptian government recognizing our quadricycle cute. And as we speak, shipments are going towards Egypt. So when I put these three buckets together, then on the basis of this view, we feel and of course there is the base effect of FY24 being low. We can expect some kind of growth in FY25 over FY24 in exports too.
Well, right, Rakesh, we also want to talk about Chetak. I know you have a lot of plans for FY25 going in, specifically because it's in the EV space as well. Can you tell us about what variants we can see being launched in the new financial year, as well as perhaps stores in terms of expansion there as well? What details can you give us here?
Well, Chetak, as you know, has really ramped up in FY24. We used to be number 6 or number 7 player, and we are now number 3. Just in the last quarter, we sold almost 40,000 units, which was what we had sold in the entire FY23. There has been a lot of supply chain and R&D work which has gone on so that, we are at a much better and comfortable position when it comes to the margin architecture. So on this basis, we are expanding the portfolio. We upgraded the product in Q4, and probably in about a month's time, we will add to the Chetak family with another model which will have a more mass appeal. We are taking now this portfolio very rapidly, trying to scale it up. We are in 200. We have 204 stores as we speak. These are exclusive dedicated Chetak stores. And I think in about 6 months' time, within 6 months, Chetak will be available at 600 stores. So that will give it a really good depth as well as reach. And on this basis, we expect that Chetak should continue to grow quarter on quarter.
Right, we're going between domestic and exports, but I want to talk to you about Egypt because I think that's a big market with the Qt being launched and being acknowledged by the Egyptian government. Some risk there because that currency is extremely volatile and predicting anything could be tough. But in terms of market share, market segment, what is the size of the market there that you're focusing on? And when will you see that rolling into or impacting your top line in terms of timelines?
So you see, Egypt was a very large three-wheeler market for us. And I would say that along with our partners there, we can take some credit for actually development of the three-wheeler category over 20-25 years. And, we used to do about 6,000, 7,000 units per month. And I recall that in some peak months, we even shipped 9,000 three-wheelers to Egypt. But for whatever reasons, the three-wheeler category was banned. And our last shipment of three-wheelers to Egypt was, I think, in April 22. So it's been a good 2 years. However, there is a strong need for short mobility. Not just about places like Cairo and Giza, but you see Egypt is a cluster, a lot of small towns, the Khalia, the Ridava, etc., where motorized mobility is possible only through vehicles like three-wheelers because of the narrow streets, etc. So there is a solution which was needed to address the growing mobility needs of Egypt. And we have been working with our partners in Egypt and the Egyptian government, improving the case for a quadricycle because the government wanted a slightly better product, and Qt was there, our quadricycle, and they recognized it in March. And we are, as we speak, starting to make the shipments. But you're very right. You alluded to the fact that currency is still an issue. So while the door has opened for us, and which is a very significant development, but how much we will be able to flow in depends, of course, the rate limiting factor or the pace determining thing is the availability of the currency. There has been some improvement because of all the 8 packages in the last few weeks. And hopefully things will stabilize in the region and we will get an opportunity to really transform the last mobility landscape of Egypt, along with their government, in a very nice way through the quadricycle Qt.
Mr. Sharma, very lastly, are you confident to maintain margins at current levels? I know some of your commodity prices have been going up, aluminium and copper, case in point. Nothing to worry about just yet, but any downside risk to margins, or you think you'd be able to maintain and sustain these levels over the next few quarters?
Well, it's looking like a benign environment right now in response to that little uptick in aluminum and copper. We'd already taken a small price increase on 1st of April, so that sort of trimmed the ship and brought it in step. However, there have been compensating declines in some of the other metals and the noble metals and things like ABS, etc. So this has offset the increases. And in addition to that, this gentle devaluation to 83.5 of the rupee to the dollar is very helpful because, over 40% of our revenues flow in as dollars. So that is sort of releasing pressure or whatever little pressure on costs there is. So therefore, everything combined, we seem to be in an equilibrium state right now. But we have to be watchful as always.
Sharma, we leave it at that. Thank you so much for joining us and taking us through the quarter as well as what we can expect going into FY25. It certainly seems like a very exciting year coming up ahead. But well, on that note, it is time for a quick break. And on the other side, we get you all the action from the FNO space.
Voting is the very, very essence of our democracy, and every single vote plays a crucial role in shaping our growth story. I urge everyone, my colleagues at Amazon, friends, family, and all of you, to actively participate in this democratic process and make our voices heard through the power of our votes. Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Welcome back to the FNO show. Let's take a look at how the markets are faring right now. As far as the futures and options space go, well, the Nifty at the moment, let's pull up the Nifty futures snapshot and see how things are, taking shape. And we have a recovery of sorts from day's lows. So, the Nifty is certainly off day's lows at the moment and a little bit of unwinding coming through. I reckon that this is a bout of those earlier shots made which have been covered, and And since then, of course, we have seen a little bit of that recovery from day's lows, as I've mentioned. And it's currently the Nifty is at around 21,800 and above that mark. So that 60-point up move from the day's low is where we have seen that short covering, and that's the reason, and possibly the reason why we're seeing that open interest number or decline by as much as 3%. I reckon a lot of people, a lot of participants may have gone ahead and sold those Nifty futures yesterday, and that was marked by a 10% increase in OI yesterday. And I reckon that a bit of a covering has come through in the last 1 hour of trade. What about the Bank Nifty? Let's take a look at that as well, and that's where we're seeing unwinding as well. Again, the Bank Nifty had also seen about 6% addition in open interest towards shorts yesterday, and because of that intraday recovery that we see, we are looking at well, once again claiming the Bank Nifty claiming slightly higher levels from what we saw earlier on in the day. A quick look at the options market as well, at least as far as the Nifty goes, and well, we're talking about 21,800 as a little bit of a line in the sand where we have about support, 22,000, and of course on the higher end, some amount of resistance now around 22,200, 22,300 levels as well. That's as far as your overall, futures and options markets concerned. But let's bring in an expert here. We have Kunal Shah, Senior Technical and Derivatives Analyst at LKP Securities, who's joining us on the show. Kunal, good morning. Thank you so much for joining in. What are your views on the benchmarks? How are you trading the Nifty and the Bank Nifty at the moment?
Yeah, I think overall, if you look at the markets, we have seen a gap down opening today, and I expect follow-up selling to come in. So for Nifty, the resistance is at 21,920 on the futures front. So my call will be to sell Nifty even at the current levels. We have got the minor pullback what we had. I'm expecting Nifty to touch 21,800 on the futures front in today's trading session. So Nifty continues to remain in a sell-on rise mode with 21,920 acting as a strong resistance. Talking about Bank Nifty, here we have got some support from HDFC Bank, which is acting positive. So for Bank Nifty, I'll be a buyer on declines. So if you get declines on the Bank Nifty index, you should buy the index. 46,800 is where currently it is trading. If you get somewhere around 46,500, 600 level, that will be the buy level for Bank Nifty, keeping a stop loss of 46,200 and looking for targets of 47,200 on the upside.
Right, Kunal. So constructive on Bank Nifty, but not so constructive on the Nifty 50. Let's go into stocks, Kunal. Top trading ideas this morning?
So as I discussed that HDFC Bank is looking good on the charts. It has formed a double bottom on the intraday charts as well. So I think there could be a move in Bank Nifty, or probably this will be the stock which will hold the index higher. So HDFC Bank is a buy at the current levels, keeping a stop loss of 1470 and looking for targets of 1530 to 1550 on the upside. The second call is on the sell side, and that is on Asian Paints. You have already seen the crude oil prices going again above the barrel of 90. So that will be, paint companies will be under pressure. We have already seen breakdown in Berger Paints. Asian Paints on the weekly chart has already given us a breakdown. So we might see some follow-up selling coming on Asian Paints as well. So Asian Paints is a sell at the current market price. 2850 is a stop loss on the downside, and looking for targets of 2600 on the downside.
Okay, so that's as far as your picks go. Well, very quickly, also taking a look at some of the key movers today, where we can perhaps take a pick or two from Kunal's point of view. This is as far as your increase in open interest is concerned when it comes to stocks, and M&M Financials, Syngene International, LIC Housing Finance, Info Edge, Asian Paints. All of them are declining in trade, and along with that, we're seeing an increase in open interest towards what looks like fresh shorts. Though, on an absolute basis, the numbers are not looking very large. So at the moment, it does seem like participants are also hesitant to go ahead and sell in a very, very large manner at the moment. That's notwithstanding, and let's not forget, we are heading into earnings season. So I reckon that, a lot of participants out there may have a different point of view of looking at whether or not to bet towards the long side or the short side, given the kind of expectations from earnings coming through. This is also your list of all the stocks which are seeing unwinding. We have about a short covering of Bharti Airtel and ITC. well, longs unwinding for Aurobindo Pharma, Exide and TCS. But that's as far as your stocks are concerned. Well, on that note, I'm going to take a moment to thank Kunal for joining us and taking us through his views on the markets and also, of course, giving us his top picks for today. And from there on, we get in, well, a view and a check on the commodities in the currency space. We have Ajay Kedia, Director at Kedia Advisory, who's joining us on the show. Ajay, good morning. Thank you so much for joining in. Let's start with your view on gold. This one is on the rise. Of course, a lot of this has been attributed to the conflict in West Asia. But what are the fundamental and the technical, well, parameters that you're looking at, and what's the view for gold going forward?
Yeah, very good morning. Definitely in the morning we have seen gold prices shoot up about 2400 level mark. As we know, the ongoing geopolitical tensions are still supporting bullion. No doubt technically market is in severely overbought zone, but I think the only thing that is supportive for bullion is purely a geopolitical tension. In the morning we have seen there was some update had released that Israel has taken an attack on Iran, then it has been denied. That is why prices are continuously trading near to 2400. But I think the volatility will continue to be there for next few days unless and until this geopolitical tension comes down. On the flip side, we have seen the expectation of interest rate cut by Fed members are being now slowly and steadily diminishing because of higher crude oil prices, or we can say higher inflation. So I think other stories are being slightly on a secondary part, but geopolitical tension would be impacting. So as of now, we expect already prices has rallied very well. In case of severe front-to-front war, maybe we can see prices moving towards $24.50, $24.80 in international, where silver may test around 30,000. But in case things are de-escalating, there could be a sharp correction of, let's say, $100 for gold, and silver might take support around 25, 26. But overall, by this 24, we are expecting bullion is going to be on a higher side. This volatility should come down. Then only the actual fundamental will support the prices.
Ajay, talk to me about crude. Very, very sharp spike this morning on crude. It's up by about $3 a barrel, close to 90. What is the trade? Are you using this current situation as a buying opportunity, expecting crude to rise? Or would you consider going short? Because I'm hoping the weekend comes in and things do de-escalate.
Yeah, I think shorting crude oil with current fundamental is a very risky task, because no doubt in last couple of days we have seen with the inventory rising, we have seen a slight pullback in the Brent prices to the level of 87. But I think due to geopolitical tension, supply concern, and even we were surprised to see the March figures from China was very lucrative for crude oil prices. So I think shorting at current level will be a little bit riskier unless and until this geopolitical tension come down. So maybe a little bit pullback towards 87, 87.50 would be a good buy to for Brent, targeting at least $92 on higher side. Whereas on M6 yesterday we have seen some correction to the level of, let's say, 68, 68.50. That was actually a good buying. But I think current level, looking to geopolitical tension, is very attractive to buy, targeting at least 71.50 on higher side. But please try to not to carry any position. As we know, in next couple of days, if escalations come, then only prices is going to be supportive. Otherwise, technical pullback again we can see in crude oil prices.
Okay, Ajay, we have a paucity of time, so very quickly, your take on non-ferrous metals. I believe you have a bunch of calls there. What's the view here?
See, I think with the numbers, what we have seen in the month of March from China and supply side concern has supported all metals. So I think copper, zinc, aluminum, all three seems to be trading with a positive bias only. Coming first for copper, we have seen supply concerns. Smelters are cutting down their production. Maybe we can see copper moving towards 844, 850 level in next 1 week period. Similarly, if we talk about zinc, that has rallied from 220 to almost 240 level. Still, we expect this rally will continue, and maybe a level like 250 would be there because of supply concern. Last would be the aluminum, where LME concerns have been there for Russian metals, and that is dragging the prices towards new high. A target of 240 to 250 is expected for aluminum. So all base metals seems to be trading with a positive bias. With a supply concern, one should take long
positions on some of these hard metals. Aluminium, constructive fall coming in from Ajay. With that, we're leaving the markets still trading weak, but not falling off the cliff anymore. We're still trading up sub 21,900, but remember 21,800 will be a key level of support. But if things do deteriorate between Iran and Israel over the next couple of hours, the volatility will be back to haunt us. So keep that in mind while we watch out for trade. Breadth as well looks weak, so no major recovery or weekend recovery expected for the bulls at least. With that, we're completely out of time. Thank you for watching. There's a lot more programming on the other side, so keep it with us.
If we want that those who are running our governments, who make our lives different, they must consider us as relevant, and we become relevant if we cast our votes. I have always been voting, and I have actually quite looked forward to the task of voting, and I certainly plan to vote as long as I'm able to vote in every election in the future, including the current one.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is
welcome. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani. Well, let's take a quick check on how the markets are panning out to be. Well, in terms of the benchmark indices, well, the Nifty and Sensex both are under pressure. In terms of Nifty 50, if we can pull up the chart, the Nifty is trading in a range of around 125 points. It's down around 0.6%. So, all the benchmarks today, in fact, even the broader markets are seeing the pressure of the Iran-Israel conflict. In terms of Nifty contributors, if we can pull up the contributors on the Nifty, we have something like an IT stock which is pulling down, Bajaj Auto which is pulling down, there you go, Reliance which is pulling down, weighing down the Nifty in heavy 22 points, Axis Bank around 16 points, L&T. Something that's weighing up the Nifty include HDFC Bank, ITC, ICICI Bank and M&M. But in terms of the broader markets, Nifty, if we can pull up the Nifty Midcap 100, well, Nifty Midcap 100 is also under pressure. The broader markets today are doing worse than the benchmarks. It's down around 1%. Small cap 250 is also down around 0.9%. Now, in terms of the breadth of the market, if we can see, I'm sure the breadth of the market is skewed towards the declines today. There you go. 419 stocks advance and decline is around 1526. But in terms of the sectors, let's pull up the sectors. How are the sectors doing? Almost all the sectors, there you go, all the sectors are trading in red. The worst performing sectors are Nifty Realty, Nifty PSU Bank, Nifty Auto. If you can pull up what is pulling down Nifty Realty, there's something like Phoenix Mills that's pulling down the Nifty Realty today. Sobha, which is also pulling down the Nifty Realty, there you go. Phoenix Mill down around 3.8%. Sobha down around 2.16%. DLF is down around 1.8%. If we can pull up the Nifty Media, also the Nifty Media is also under pressure today. Yesterday the Nifty Media saw a good rally, but today there's profit booking taking place in Nifty Media. There you go, almost all stocks in the red. Network 18, TV 18, Nazara Tech. If you can pull up the Nifty PSU banks, something like Canara Bank is pulling down the Nifty PSU bank today. It's rare days when Nifty PSU bank is under pressure. Canara Bank is down around 2.8%, PSU Bank down around 2%, UBI down around 1.8%. Now, something that should be in focus is OMC stocks. Well, because of the Iran and Israel conflict, we're seeing that the crude touched an intraday high of almost 4% today, and because of this all the OMC stocks are under pressure. If we can pull up something like HPCL is down around 1.7%. It did touch an intraday low of almost 3%. IOCL, BPCL is down around 2.27%. IOCL is down around 2.8%. If we can pull up Gujarat State Petronet, that is also under pressure. Castrol India is also under pressure. But let's shift focus to what the autos are doing. Bajaj Auto, well, it came out with its result yesterday. The results looked pretty well. The revenue is up around 29%, EBITDA up around 34%, PAT up around 35%. However, the stock has been overvalued. The stock is seeing some kind of correction today. Not some kind, in fact, the stock is under pressure if we see down around 3.4%. Moving on, if we can pull up SJVN, well, SJVN Unit Green Energy Incorporated, a JV with Assam Power Distribution Company, it's down around 2.85%. Then if I can pull up something like ITC has made a new acquisition. The subsidiary is to acquire something called a Blaze Clan Tech, which is which provides cloud services. The acquisition is for around 485 crores. There you go, ITC is up around 1.15%. So this is a stock which is keeping Nifty 50 in check. If you can pull up something like Vesuvis India, the stock has been doing good, and it inaugurated a mold flocks manufacturing in Visakhapatnam. There you go, the stock is up around 2.2%. So some stocks that are doing well despite the markets being under pressure. If you can pull up the Indust Tower chart, they've signed an MOU with NTPC Green Energy for development of power projects. There you go, the stock is up around 2%. Lastly, if you can pull up an HDFC Life, Morgan Stanley is rated overweight with a target price of 745. But the stock is not doing very well. It's down around 1.6% now. But something that we are going to focus today on the small and mid cap show is OrionPro. Well, the company has approved acquisition of majority stake in Arya AI. Well, the cost of acquisition is around 135 crores, and the stake that they're acquiring is around 67%. Now, to discuss more about this acquisition and the business outlook for OrionPro, we have with us Mr. Ashish Rai, CEO of OrionPro Solutions, who joins us now. Welcome to the show, sir.
Hi, thank you. Thanks for having me.
Yeah. So, Mr. Rai, my first question to you is that, you've acquired 67% in Arya AI. Now, I want to understand what kind of synergies are you expecting out of this particular acquisition?
Okay, yeah, thanks, Mahima. So, look, we've been, for the last few years, building out a global products and platforms player. Right, we've been reasonably successful so far. We're trusted by some of the largest banks and insurers across the globe, right, in terms of the enterprise software offerings that we built up over time. As you see, the world, the technology world at least, is going through probably one of the most fundamental platform shifts that we've seen in a generation, maybe since the internet or the coming of the mobile as well. Right, so it's a very major shift. We believe it is very relevant for our clients as well as the industry in general for us to really bring together a mature enterprise AI capability that comes through Arya. Arya.ai, right? So I mean, if you look back, right, I think there's obviously a lot of noise around foundation models and a lot of success with foundation models that's come in, right? But bulk of value creation in the enterprise happens around the business workflows that our mission critical apps support, right? So we bring together a highly mature enterprise AI framework, enterprise AI offering and platform that Arya.ai has built up for banks and insurers. They're actually trusted by probably 100 plus banks and insurers across Asia. We bring that together with OrionPro's enterprise application stack, and we create the next generation of offerings for banks and insurers who trust us, right? So that's essentially what we are bringing together.
And Mr. Rai, so I want to understand that, I was checking the revenues for Arya.ai have been, doubled over the past 3 years, from 3 crores to 8 crores to now 20 crores almost. So do you see that this trajectory will be maintained? Do you see that the revenues will double by the end of FY25 as well?
Yeah, look, we feel very, very strongly about the potential for both our organizations coming together, and you put together probably one of the most mature enterprise applications, enterprise software team in this part of the world, in Asia, together with one of the sharpest AI ML enterprise AI ML teams. Together, we believe the potential is immense. We do expect Arya to continue to grow because it's actually the 3x growth, that trajectory that they've been on the last couple of years. I believe that's reflective of the demand, and there is a significant amount of untapped demand for a mature offering in the financial industry, in the enterprise AI space, right? So I think we'll continue to do that. I believe there is a significantly larger opportunity we can tap in by both of us working together in terms of creating the next generation of offerings, right? So yeah, I mean that's from a longer term standpoint, enterprise AI is a $1 trillion opportunity, right? I think across banking and financial sector is one of the biggest spenders on tech. We are moving through one of the most fundamental shifts in the industry. So I believe, we work together in terms of tapping into that demand. Time will tell how much and to what extent we can tap into it.
Understood. So going forward, let's say in a long-term perspective, by FY25 or by the end of FY26, how much contribution from your total revenue do you expect out of this particular acquisition?
Yeah, look, I think it would be very hard to give out. We don't give out forward guidance that long, Mahima, so I would sort of stay away from that question. I think longer term, so OrionPro side is been growing at 30 to 35% for the last several years. That side will keep growing. Arya has been growing 3x or so. It will keep growing, right? So we don't give out forward guidances that way out.
Okay, so now I also want to understand that you recently raised a QIP of around 377 crore. So I believe that the 135 crore that you're going to pay for this particular acquisition will be used from that QIP. So the remaining amount, if you can elaborate on where this amount will be used it be used for further acquisitions? What are the plans with the fundraise?
Okay, yeah. So thanks, Mahima. So over the last couple of months, we've actually done a preferential for about 200 crores and the QIP for 370. So we raised about 570 crores with a set of investors who are aligned to the vision of building out global products and platforms player that OrionPro is building out. So we had a lot of marquee investors investing with us. A part of the proceeds obviously goes to M&A, and we'll continue to sort of do that. But as an organization, we've essentially been organically growing very strongly. A lot of the capital would go into funding the organic growth. We've expanded quite significantly. I think from a year back, just the staff strength has gone up almost, I would say, 50-55%. The order book is very strong, and we need to execute against it. So a lot of the capital would go into just for keeping the organic growth trajectory on, and then we'll continue to selectively do M&A where it makes sense in our strategic blueprint. So over the last, I would say 6 months, this is the third acquisition that we've done very, very specifically targeted towards a gap we had in the strategic blueprint that we are serious about doing it, right? So there is always a build versus buy choice when we're going after a very defined strategy that we have in terms of focusing on the select segments that we have, right? So we'll continue to do that. So I suppose there'll always be some level of capital that will go into M&A, and the rest of it goes into the organic growth needs of the enterprise.
Understood. Well, Mr. Rai, thank you so much for taking our time and speaking with us at NDTV Profit. We'll speak to you once the number for Q4 and FY24 come out.
Okay. Thank you.
Well, viewers, it's time to slip into a short break. But on the other side, we have Sharekhan's Kaustubh Pawaskar, who will be joining us to talk about the FMCG sector ahead of Q4 earnings. Stay tuned.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers, to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000, because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling?
Welcome back. You're watching the Small and Mid Cap Show. Well, FMCG Q3 earnings are in line next week. We have Tata Consumers who will be posting their results on Tuesday and HUL on Wednesday. But to discuss how the Q4 for FMCG company will look like, we have with us Mr. Kaustubh Pawaskar, Deputy VP Research, Sharekhan by BNP Paribas, who joins us now. Welcome to the show.
Thank you.
So my first question to you is how are you expecting the Q4 earnings for FMCG companies?
See, quarter 4 will be again a muted quarter for the consumer good companies.
Yeah, okay, sorry, you can go on, my bad.
Yeah, so quarter 4 will be again a muted quarter for the FMCG companies. We are expecting volume growth to be 0 to low single digit volume growth. Rural demand is yet to pick up, and that is the reason volume growth momentum would continue to be muted. We are expecting urban demand to be better. However, for last 2 months, we have seen some bit of improvement in the rural demand, but whether it will sustain or not, it is something which will be monitored by the companies, and that is going to be one of the key, highlighting point in the commentary of most of the consumer good companies in the quarterly results. Revenue growth will also be in low single digit to mid single digit, because FMCG companies had passed on the benefit of decline in the raw material prices to the consumer in the form of price cuts. So this quarter we will see annualization of the price cuts, but overall we should expect low to mid single digit kind of revenue growth for most of the consumer good companies. In terms of margins are expected to be higher on YY basis, and that should help PAT growth to be a little better than what the revenue growth would be. But Q4 would be similar to what it was in Q3 and what it was in Q2. So there won't be any significant changes in terms of performance we should expect. The only thing which will play out would be what kind of commentary managements come out with post the results, whether they are looking at any change in terms of demand environment in the rural India, or since monsoons are expected to be good, when can we see a consistent kind of a recovery in terms of volume. So that is something which will be monitorable in the quarters ahead.
Understood. But I just want to understand in terms of, volume versus value growth. I'm expecting that, the volume versus value growth should improve for Q4. But what are your views on that?
Yeah, volume growth will be better than what the value growth would be. As I said that, companies had undertaken price cuts, and the impact of that would be seen in Q4 as well. However, we believe that Q4 would be the quarter where we might see annualization of the anniversarization of the price cut, and from here we should expect stable kind of a value growth from Q1. And we have seen in the recent times commodity prices going up. Crude has reached to the level of $90 per barrel. There are some other commodities like palm or other key input prices have gone up substantially. So we should expect consumer good companies to start taking price increases if this uptick remains in the commodity prices, and that is why we should expect value growth to start coming back from Q1 of FY 2025. But obviously the volume growth is something which is very important for the consumer good companies to see in terms of recovery, and that is something which will be monitored in the quarters ahead.
Understood. And in terms of raw materials, especially, recently the cocoa prices, the sugar prices, the coffee prices have seen a sharp up move, right? So in terms of that, do you see that, some companies which have high usage of all of these components will see some kind of hit in margins? Or do you think that, there is slowdown in the milk prices and it will be compensated for the same?
So the impact would be there, but impact will come with a lag, because we will not see much of the impact in this quarter. But if prices continues to see up move, then from Q1 or maybe from Q2 we might see it start hitting the margins if companies do not cover it up with adequate price increases. But that is something which we need, as I said, which we need to wait and watch how the momentum in the commodity prices would be, and if that kind of momentum continues, I think definitely companies have to pass on it to the consumers, and the gap between the increase in the raw material prices and the price increases taken, I think that gap will have an impact on the margins in the quarters.
Understood. And Kaustav, when it comes to FMCG, there is always a debate that when will the rural recovery kick in, because we've seen that the inflation is hitting people's pockets very hardly. So there's one argument where they've seen that the rural base that we're comparing it with was COVID year, so the base is very erratic. But what do you think? Where do you think the rural recovery will, take its place, and the FMCG companies will see an up move in terms of rural recovery?
So if we go through the industry reports, in fact, January, February, there was good growth in the rural market. In fact, rural growth was ahead of the urban growth. Okay. And now, is it whether it will continue or not? That is something which we need to see in the coming months. What we believe is that post-election, post-election budget, we might see some kind of benefits coming in for the rural sector. Also, monsoons are expected to be good this time. So we have IMD, SkyMed, both of them stating that monsoons will be above average this year. So if monsoons are good, we might see good agri income as well. So both these factors, will play for the improvement in the rural demand. So if everything plays as per the expectation, I think from second half of the year we should see gradual recovery in the rural demand, and that should continue in the subsequent quarter, and then we can say that the recovery in the volume growth will be there, because urban demand has remained quite stable, and rural demand is something which need a push. So good monsoons, some benefits from the election comes in, I think that augurs well for the rural demand.
Right, I take your point. Now I'll shift focus to stock specific actions. All the large cap FMCGs are overvalued, and I checked the Bloomberg estimates as well. The valuations won't come down for at least FY25 as well. That's what the estimates suggest. But where do you think is the value, in large caps, mid caps, or small caps?
I think if you look into the performance as well, small cap or small companies have done better than the large cap. For example, Jyoti Labs or Vector Foods, Varun Beverages, or for that matter, the small players have done extremely well in terms of the performance if we compare it with the large companies. But I believe that we have to be selective in this space. I think companies who has a good earning visibility, decent valuation, I think these companies should be preferred, in the FMCG space currently. So we continue to like ITC in the large cap space, mainly on account of its discounted valuation and its the growth strategy what it has placed for its business. We like Godrej Consumer Products because of its revamped strategy in terms of the portfolio innovation, and some of its businesses like Indonesia is now recurring, doing well. Domestic business is expected to come back on track. They have already changed their Africa business model, where the large focus is on improving the profitability. So I think all these things should help GCPL to post a good earning growth in the near to medium term. Tata Consumer Products is another company we like, mainly because of its portfolio, and we have seen Tata Consumer Food business doing extremely well. They are filling the gaps by required acquisitions, and that will help them to achieve consistent growth in the coming years. So Tata Consumer Products is the another company we like. In the small space, we like Jyoti Labs because consistently it has delivered a good performance, for past few quarters, and we believe that should continue, and that is why Jyoti Labs is a good bet. Also, Varun Beverages and Mrs. Vector Food, these are the companies who are focusing on gaining more and more presence in the domestic market, and Varun Beverages is not only doing good in the domestic market, but now it is also gaining momentum into the international market where it has a good presence. So I think the company should continue to do well in the coming years in terms of earning prospect. So these are some of the companies which we like in the FMCG space.
Okay, interesting. I take your top picks from the FMCG pack, but do you also track QSR and the retail sector?
Yes.
So your quick top picks in both QSR and the retail sector, and where is the value in terms of large, mid cap and small cap?
See, QSR is reeling under the discretionary special. So we have seen that same-store sales of most of the companies are being under pressure. We believe that pizza companies will take some time to recover. We expect burger and sandwiches, so the lower value product to do well because of the the pressure on the discretionary consumption. Uh, uh, but the growth will be there for all these companies mainly because of the fact that they have not stopped with the store addition strategy and they are continuously adding stores. So that will drive the revenue growth. But for same store sales to see a material recovery, it will take time. Also, we have seen a lot of competition building up on the delivery platforms. So that is something which is also hurting most of these companies, especially the pizza players. So in this space, we like restaurant brand Asia, the Burger King, which is where its Indonesia business is on a recovery path. India business is doing good. In the retail space, again, the branded apparel, it will take some time for branded apparel to come back on track. But Trend is the only exceptional which is doing extremely well in this space. Jewelry companies are doing extremely well with the performance they have been giving in past few quarters. So Titan and Trend are our topics in the retail space. And in overall discretionary space, we like hotel companies. So hospitality as a sector. So we like Indian hotels, Chalet hotels, Lemon Tree, Shami hotels, and Wonderla holidays. These are the picks in the hospitality and travel tourism space.
Got it. Well, Mr. Pavskar, thank you so much for taking our time and speaking with us at NDTV Profit and giving us all those insightful points on FMCG. Well, that's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy and we fully support it.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock
Hello and welcome. You're tuned into Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is all about your stock-related queries. So write to us on any of our social media channels or on the WhatsApp number that will be on your screen. You can also write to us on the YouTube live chat and we'll take your questions from there. It may be a short-term query or a long-term investment strategy. Do write to us your queries. But before we do that, let's take a quick check of the markets. You have the benchmark not doing too badly considering the macros and considering the geopolitical tensions around. It's down only 0.4%. Then if you look at some of the sectors, the key sectors that are moving, Nifty has, it's down about 0.9% right now, almost 1%. All the sectors in red, not even one in green. You have PSU Bank down, Realty down, Media down. However, PSU Bank doing worse than others. But a lot of weakness based on the global cues that we're getting. Crude is up, you have geopolitical tensions brewing in Iran and Israel, that's impacting the markets as well. On the benchmark, on the broader end of the spectrum, you have the Nifty midcap down over 1% and the Nifty small cap down about 0.7%. So a bit of a weakness there as well. Let's also pull up the breadth of the market, obviously in the favor of declines today, but just to see, yeah, so it's about 1:5. That's the ratio that we're currently playing at in terms of breadth of the market. However, the focus for today, Alex, remains Infosys, right? We saw results, we've already seen results of TCS and seems to be on a similar trend there.
Yeah, absolutely. In fact, if anything, the deal wins being strong is something that is common. However, the ability to convert those deals into revenue seems to be a bit of a challenge for Infosys, and that is reflected in the stock price right now. Let's talk about the key takeaways though, and Richa is joining in to tell you just that. Richa, what can you tell us?
Yes, hi Alex. So as rightly mentioned, there are three key takeaways from the results yesterday. Infosys gave a muted guidance. However, the management also mentioned that the first half will be strong on the back of ramp up of deals in the BFSI sector. This means that the second half of the year will likely be muted. Number two, Infosys has given the highest ever deal wins, but again, does that really matter? Because this was the case with TCS as well, and these deal wins are not getting converted into the top line. Clients are also opting for more of cost optimization deals. Now, these kind of deals come with tighter margins and tighter budgets. Therefore, the margins of IT companies will likely go down because they will have to cut down costs internally to serve those clients. And this implies that the pressure on discretionary spends still remains in the sector, and this was also again mentioned by the TCS management last Friday.
Thanks so much, Richa, for breaking that down. In fact, let's get our experts on. We've got Sunny Agarwal, who's head of fundamental equity research at SBI Cap, and we've got also Vaishali Parekh, who is a technical specialist, joining in right now. Thank you so much to the both of you for joining in. Let's start with a fundamental check on Infosys. Sunny, what do you make of the results? One, and in the context of the wider IT space, would you say that Infosys can be picked up right now based on the kind of performance, or would you say that based on the underperformance, if you can call it that, it should be avoided?
Good morning, Alex, and thanks for having me on the show. I think after looking at Infosys and TCS number, one thing is pretty sure that the demand environment, at least in a short term, when I say short term, quarter or two is not very healthy or maybe kind of uncertain. That is what I can read from the commentary of TCS and Infosys management. Having said that, medium to long term outlook continue to remain robust, looking at a healthy deal wins. However, the way Infosys has cut the growth guidance for FY25, it seems that it will be clearly a relatively underperforming stock if I take next quarter or two from a quarter or two perspective. So if somebody want to invest in IT sector, I think first of all, the right place will be in a mid-size IT companies which are likely to post relatively better number as compared to tier 1 company. But if if somebody want to patiently want to invest through SIP route, maybe I would like to wait for numbers of HCL Tech, where I find relatively the company is likely to outperform in terms of growth. out of TCS and Infosys, definitely I would like to, at a current juncture, I would like to pick TCS among the Infosys and TCS.
Okay, that's a fair point. Very quickly, Vaishali, do you want to weigh in on Infy and the wider pack? And I completely take the point that Sunny is making on the mid-cap IT company. So are you seeing any opportunities there?
Very good morning. Actually, yes, I've been observing the IT sector on the whole since quite some time. But today we saw it has broken, but I would say stock per se. Infosys really has really corrected, and I think it's quite a fair value according to the technical parameters. So we were looking even before the results, 1400 levels was acting as a crucial support and a make or break. And if that was broken, we were looking at 1380, 1360. So we pretty much did 1380, I think, in the opening. And I would say for a long-term perspective, one should start accumulating Infosys from here on.
All right. Good morning, Vaishali and Sunny. Let's start off with the questions now. The first one is from Samir on Indiabulls Real Estate. Now, they say they bought the shares at 134 level. It's currently trading below that price. Vaishali, we've seen a good run in the stock in the last 1 year. However, some weakness in the last month or so. What would you suggest to somebody who's bought into the stock at a slightly higher price than what it's currently trading at? Should you continue holding on to it?
I would say so. Actually, there's nothing wrong with the trend. Keep 120 as the support level. If 120 levels break, then it calls for a negative move. But till then, I would say just hold on, wait for it to bounce back.
Okay, let's pull up Zomato. And in fact, quite a lot has been said about this, and I'm quite interested to find out what the earnings picture is going to be for this particular company. It's up about 0.5% and trading at 185, and we've got Mathan, who has bought at levels of 180. He's tuning in from Chennai. Sunny, on the fundamentals, would you say that it should be held, and this is a company that is operating in a space that understandably a lot of people are attributing a lot of potential to, but when do you think it's going to translate into the bottom line?
Yeah, I think the way Zomato has performed over the period of last 3 to 4 quarters, I think the company is on track to report healthy profitability, especially 1 year down the line. So both the food delivery business as well as the grocery delivery business, which is a Blinkit, the synergies are clearly visible, and I think both the businesses are growing at a rapid clip. I think one should remain invested, and I feel the fair value of the business at the current juncture is close to 220, 230 rupees if somebody has got an horizon of 6 to 12 months.
All right. Next question we have on the counter Vari Renewable Technologies, and this is from Abhishek. And Vaishali, Abhishek asking about the 2-month target on this particular counter.
The BSE stock, right?
Yes.
The one which is 2200, that's the one? Which
Yes.
Okay, so I think the stock is already surged pretty high. I won't have any view for now. Continue holding because there is no sign of exhaustion still if I'm looking at the larger term time frame. But keep a trailing stop loss and continue holding because this can go towards 3,000.
Okay, fair point. That's a view on Vari. Coming back to you, Vaishali, on this next one, not a specific stock, but Geeta is wondering whether you can suggest 2 stocks that you can buy today. And she's not really provided a time frame, but I'm assuming that she has a relatively shorter term time frame.
Shorter term. So I would say, well, HDFC Bank to start with, because that is what is supporting Bank Nifty today. So with a stop loss of today's low 1480, I would say buy the stock. It can go towards 1530, 1540 in a day or two. And the other one to my liking, well, is I would go for ITC. ITC is a safe bet at these levels, 423, 424, stop loss of 415 and target of 440.
All right. The next question is from Jaya Krishnan from Korikor, and so they've given a couple of counters here, and they want to pick 2 out of them. Sunny, tell us which one would you suggest from a medium-term horizon and a good stock to enter right now. So ABB, Bajaj Auto, Godrej, and Dixon.
Yeah, so I think I would like to go ahead with the Bajaj Auto, especially when the numbers are already out and we know the company has reported a decent set of numbers. And the outlook also continue to remain robust both on two-wheeler, three-wheeler as well as electric vehicle space. And our fair value of the company is close to 10,200 rupees. So I think Bajaj Auto is the one stock which I would like to bet my money on. And sorry if you can repeat all the remaining three names.
There's Dixon, ABB, and there was one more. Can we pull up the question? Yeah,
Godrej
ABB,
Properties.
but yeah, Godrej Properties.
Yeah, so among the remaining one, then I would like to go ahead with an. I mean, it's slightly difficult to catch because again, all the remaining three stocks are trading at a relatively expensive valuation. But I would like to go ahead with Godrej Properties, looking at a very robust provisional number the company has reported for the Q4. And but again, I would recommend a buy on dip strategy. We have already seen a huge run up in all the real estate stocks. So buy on dip will be the right strategy if somebody want to enter into Godrej Properties from a medium to long term.
I'm sure everyone will appreciate, and I certainly do, that you are saying Kozhikode much better than you did.
Well, I'm a fast learner.
All right, let's talk about the next question. It's coming from Swaminathan from New Delhi, and he's asking about Amara Raja, which he bought at levels of 744, and he's been holding since 2022. And he's wondering whether it can reclaim all-time highs. And this is given the potential in the space, and he's pointing out the transition from ICE, which is internal combustion, to EVs, and also the battery storage space. Sunny, so therefore it's a question based on the fundamentals. What do you say that it's a stock that you should hold on to, and what are the prospects for Amara Raja?
Yeah, again, looking at the way recently we have seen the deal which has been stuck between Exide and Hyundai and Kia. There's an expectation that one of the large OEM again may try to enter into agreement with Amara Raja for exploration of lithium-ion battery especially for electric vehicle. And I think after a long time, both these stocks are coming off after a long period of consolidation, even in terms of the stock price as well as in terms of the earning growth potential. So I think one can continue to hold Amara Raja in a long-term portfolio with an expected upside of 15 to 20% over the period of next 12 to 18 months.
Right. The next counter we're talking about is Axis Bank. This one's from Chandra from Bangalore. They've bought shares at 996 with a time horizon of 1 month. Where Shali, now the stock seems to be in a bit of a downturn in the last 1 month. But from here on, do you see it touching a target? I think they're going for a target of 1100. Do you see that happening in the next 1 month?
Well, actually, I still see, I mean, further downslide cannot be ruled out because the projected downslide comes to around 950. So hence, I would ask to accumulate because we are pretty much close to the support levels. And yes, if we see a good bounce market taking a U-turn from here on, why not? This can retest again 1100.
Okay. Let's take the next one, and it's from Jyoti, and he's asking about Deepak Fertilizers and another stock, JM Financial, which he's bought at 640 as well as 106 rupees respectively. He's looking at the next 4 to 5 years, so it's a long-term time frame. Sunny, what do you make of this?
Yeah, so for Deepak Fertilizer, I would recommend to hold on to the stock, although we have seen that entire agrochemical space has been under trouble since last 6 to 8 quarters. And I think with the recent commissioning of the backward integration for the ammonia plant, I think the company is well placed to deliver a healthy growth, especially in the backdrop of healthy expectation of normal monsoon, which will come in from the June. So I think risk reward is favorable at a current juncture. Nothing much to do as far as Deepak Fertilizer is concerned. Moving on to JM Financial. Again, JM Financial, we have seen some regulatory action against the company pertaining to the IPO funding and so on and so forth. But what I feel again here, all the negative is in the price. Maybe next 3 to 6 months is a time where stock may doesn't move much. But if you look at a pedigree and the kind of business which the company has built, I think, and the way capital market is flourishing in India, I think long-term growth prospects continue to remain healthy. But till the time this regulatory action is behind us, maybe in the next 3 to 6 months, the stock may continue to hover in a certain range.
All right, fair point. Next question is from Satya, and Vaishali, this one's for you. However, now the time frame is 1 to 2 years, but they've given a couple of names, and they want to pick some of them as essentially, is it the right time to enter into any of these stocks? They are PNB Housing, Gland Pharma, and Man Infra.
Just have a look.
Sure.
So PNB Housing, the one which is 749?
Yes, that's right.
Yes.
I think technically it is very well placed. It's getting into momentum. I mean, there is a trend formation. So as long as 720 levels are held on as prominent support, and once the stock moves above 780, because right now it's going through a consolidation. So keeping this level in mind, above 780, it holds and confirms a further strength. So I would say this one can go for a buy at these levels.
And
the other one you
Gland Pharma.
Gland, right?
Yeah.
Yes, so Gland, in fact, it is looking quite positive because we've seen a good consolidation. I mean, right after making a high of 2200 to currently at 1700 odd levels, I think this 1000 and higher.
All right. We have to slip into a very quick break. We've got an interesting question that will come up on the other side. And in fact, if you've got questions, keep them ready. We'll be back before you know it.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting.
Welcome back. You're watching Ask Profit, and I promised it was an interesting question. This is from Sagar, and the question is for you, Sunny. He's asking about volt-amp transformers as well as transformers and rectifiers India. He's holding on to both. He's got a nice chunk of volt-amp from levels of 1002, and the stock is currently trading at 10,000 plus levels. And he's also got TRIL, which is transformers and rectifiers, from levels of 63. And the stock is currently at 655. So he's seeing a 10x jump in his holding. What is the short to medium term outlook on the sector as well as the companies? Any expectations on the results side if you have coverage? And also, do you like any other stocks in the power ancillary space, not the traditional power companies like NTPC and Adani Power, because he already holds them?
So first of all, congratulations for bagging a 10 bagger in both TRIL as well as Voltam. And again, the entire transformer as an industry continue to look very bullish. The reason being that the way capacity is being expanded both on thermal as well as renewable energy side, it is expected that the demand for transformer will continue to remain healthy. As we go from close to 250 gigawatt of capacity to 400 gigawatt by 2030. The transformer and rectifier as an industry, will continue to do well. And I would recommend to continue to hold on to the both these stocks with an investment horizon of at least 3 to 5 years. So even at 10,000 rupees, all-time market cap is close to 10,000 crore only. So equity base is very small. And Trill, which is a transformer and rectifier India, we have seen a very good turnaround in the business. And at the same time, the order book is very robust, and I would recommend to continue to hold on to Trill also. And in terms of other recommendation in the power ancillary, I think cable is one of the space which will be one of the beneficiary of the expansion of the power network. So companies like Polycab and RR Cable, these are the two names which comes to mind if somebody want to invest in the power ancillary space from medium to long term.
Right. The next question is on Vedanta. Now, this one's from Ramakrishna from Vijayawada, and they bought the shares at 233. It's currently trading at around 388 rupees. From a shorter term perspective, Vaishali, the question here is, should you book some profits? Should you keep holding on to it? Now, it has been doing quite well in the last couple of months. That pace has kind of picked up in the stock now. Would you suggest taking some profits off the table, or would you suggest holding on to it?
So, of course, if it's for a trading perspective, I would say keep a stop loss of 370. But if it's for longer term and doesn't mind the whipsaws, then I think continue holding for a target of 450, 480 from.
Okay. Cupid is the next stock, and we've got a question from Gurjot. He's writing in from Chandigarh, and he's got a view of the next 4 to 5 years. I'm not very certain as to whether he's bought or not, Sunny. But do you have coverage, and would you suggest holding on or buying fresh at these levels for the next 4 to 5 years?
Sorry, Alex, I missed the name of the company.
We're talking about Cupid Limited.
Cupid. So Cupid, again, not seen much in detail. But what I would suggest is that there are many other better consumer plays which are available in the market. A case in point, companies like Vector Food or Senco Gold. So any company from the discretionary consumption side can be on radar. Sorry, I can't. I'm unable to give my view on Cupid.
That's understandable.
All right. The next counter we're talking about is Angel One. This one's from Pratik, and they're writing in from Greece. They bought the stock at 3,200, slightly elevated levels. Sunny, we saw the Q4 results, pretty good Q4 results. Brokerages continue to remain positive on this counter. From a longer term perspective, they're clearly sitting on some amount of loss here. But from a longer term perspective, what are your expectations from a stock like Angel One?
Angel One, very robust set of number for March quarter, and what I feel is that as we were discussing for one of our earlier question also, that capital market as a theme is looking very good. The kind of demat account addition which we are seeing to the ecosystem is likely to give a lot of business, especially on equity cash as well as F&O side, and a lot of ancillary business which Angel One is building around that ecosystem. So Angel One is migrating from a pure broking play company to the super app company, wherein it will be distributing a mutual fund insurance product. At the same time, they have themselves established one asset management company. They are going to distribute loans also. At the same time, they are themselves venturing into the NBFC business. So I think long-term outlook continue to remain robust in Angel One. And it's a clear story of migration from a pure play broking company to the financial conglomerate having a presence across multiple products. So I would recommend to remain invested in the company from a medium to long term.
All right. Hold is the view on Angel One. The company posted results not too long back. Let's talk about Abhinandan Prasad's question, and he's asking about a stock that has run up quite significantly over the last 12 months or so. And I'm talking about Suzlon. He's asking though why it is so reactive when it comes to news. Well, understandably, it has been volatile in the recent past. He's bought at levels of 36, 37, and he's holding on at these levels, which is very close to 40. Vaishali, the question is, should he hold with the expectation of upside, or should he move to something else at this point?
I think right now it's looking quite positive. It's quite promising that we can see 46, 47. But I think keep a stop loss of his buying price 37, because that happens to be the crucial support also. And I guess the results are also around the corner. So once we see the result and we see how the movement takes place, technically it's quite well placed. 37 should act as a stop loss.
All right. Thank you so much, Sunny and Vaishali, for joining us today. Unfortunately, we're completely out of time on this edition of Ask Profit. And viewers, thanks for tuning in today. We'll try and take more questions. If we were not able to take your questions today, we'll take them on Monday. So do tune in and keep writing to us. And don't go anywhere. We have lots more lined up on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI.
If we want that those who are running our governments, who make our lives different, they must consider us as relevant, and we become relevant if we cast our votes. I have always been voting, and I have actually quite looked forward to the task of voting, and I certainly plan to vote as long as I'm able to vote in every election in the future, including the current one.
Benchmarks trade lower amid weak global cues. Sensex above 72,300 while the Nifty trades around 21,900. IT major Infosys falls as much as 2% after reporting subdued revenue guidance for FY25. Company's 2024 headcount declines by over 25,000. And voting for the first phase of Lok Sabha elections begins as many as 102 parliamentary constituencies are polling today. The counting of votes will be on June 4th. In tit-for-tat exchanges continue between Iran and Israel. Reports suggest Israel launched a strike on Iranian soil today morning, raising fears of a widening conflict across Middle East. Meanwhile, Iranian official denies the report of missile attack, calls it a false alarm. Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which have been the flavor of the season and also the day. But before we take a look at all those stocks, a quick look at the markets which are currently, well, consolidating. At least that's how it's been over the past, well, half an hour to 45 minutes. And there's been a gradual up move as far as markets are concerned after a very, very weak start to the day. And at the moment, we are looking at the Nifty down by just as much as 0.3%. Remember, at one point in time, it was down well over 200 points. And at the moment, it is shedding just about 70 odd points. So there has been a gradual recovery. The question really is that where can we expect a little bit more strength to come in? Are markets looking to shrug off all that is happening in West Asia? Or can we expect more weakness to come through? Of course, at the moment, a lot of factors have changed, and the advance decline ratio as well, which was incredibly wide between advances and declines, has possibly narrowed down, as you can see on your screen there. We still have more declines as compared to advances, but that gulf is not as wide as what it was earlier on in the morning. And even in terms of the Nifty, it made an intraday low of well below the mark of 21,800. In fact, 21,777 to be precise. It is now well over 21,900 at the moment as we speak. So there is a recovery of sorts underway at the moment, but you never know how the last 1 hour of trade can pan out, because there is certainly a lot of volatility, and the VIX in fact has risen quite substantially. Even at the moment as we speak, I'm looking at a 5% gain. Of course, at one point in time it was higher by as much as 10%. So these are some of the factors that you want to keep an eye on. To talk about the constituents of the Nifty as well, very quickly, and how things are panning out there. Of course, earlier on in the session, we saw a lot of weakness in Infosys and a handful of other IT companies, but that weakness is not as accentuated at the moment. That said, we do also have a little bit of strength returning to something like an HDFC Bank, ITC, M&M, which is also providing a little bit of support, and which is why the Nifty at the moment is only down about 80, 90 odd points, as against well over 200 points earlier on in the day. Even in terms of the broader markets, and this is perhaps where things are a little bit more volatile. Well, we do have weakness in Tata Communications, that's down around 4.7%. Besides Tata Communications, something like an Supreme Industries, that's taking a knock as well. 3.8% declines there. Dixon Technologies down 2.5%, along with something like an HDFC AMC down 2.8% as well. But the good news is that with an improvement in your overall advance decline ratio, the market breadth, we are also looking at advances for Indust Tower, up around 2.6%. Escorts is up around 2.3%, and so is Kalyan Jewellers. So we're looking at a recovery of sorts in the broader markets too. Now, with that, let's take a look at all the stocks that we are going to address in this show today. And naturally, we are going to take up Infosys and the earnings. We also want to address the earnings from Bajaj Auto. It's broken some amount of records, some personal records for the quarter gone by. Indus Towers, of course, and of course that's going to be linked with Vodafone Idea. So we're going to talk about both these companies. In fact, we have a special conversation around Vodafone Idea as well in just a few minutes from now. And Angel One is the other one, which has also reported earnings. Again, something that we're going to talk about. But let's start off with Infosys. But before I do that, of course, let's also get in our expert for today. We have Mr. G. Chokalingam, founder and MD at economicsresearch.com. Mr. Chokalingam, good afternoon. Thank you so much for joining in. Before I come to you, let me get in my colleague Rucha to give us an update on how Infosys earnings have been. Rucha.
Let me start with the guidance which Infosys gave for FY25. It really guided for a softer range of 1 to 3% in constant currency term for the FY25 revenue growth, while operating margin was in line with estimates of 20% to 22%. Now, talking about the fourth quarter results, it was a disappointment on revenue, EBIT as well as PAT. However, PAT saw a softer uptick, but that was on the basis of interest on the IT refund that they have got. Excluding that, PAT also fell down. Talking about the FY24 numbers, revenue grew 4.7%, EBIT grew by 2.7%, while PAT largely remained flat. now Infosys acquired a company called Intech Holding for euro 450 million, which is 2.5 times of its CY23 revenue. This is in the engineering and ER&D space. Now, let me go through the EBIT margin walk for the fourth quarter. Margins were impacted by 100 bips of contract negotiation with the BFSI client, and this is why BFSI is one of the worst performance for the fourth quarter for Infosys.
Right, that's Infy's earnings coming through. Mr. Chokalingam, how are you reading into earnings? What's the way forward? How are you dealing with this stock?
Yeah, the result is not surprising because last several quarters, it's very clear in the market that IT industry, the growth story is gone. Everybody was expecting poor 2 to 3% growth for the whole industry. So therefore, slightly deviating from the industry and such a low base of industry growth is not a big surprise for me as far as Infosys is concerned. Now, how to handle the stock? The stock has been already punished. It's already down 20% from the peak. And the PE multiples also have contracted for large IT stocks in line with the changing fortunes of the industry. But however, I would still say that one should hold on. One can even buy the stock now because the global political tensions are conducive for defensive sector like IT. We have already seen rupee hitting all-time high, all-time low against the dollar. So in my view, rupee might come under more stress, and so therefore holding on to beaten down large cap IT stock like Infosys would be a good defensive strategy. Also, the company has indicated that 85% of the cash flow they would return, and they made a lot of progress in AI also in writing the codes. So I'm pretty confident that the company within a quarter or two, it would come back to a reasonable growth path. Therefore, I would give a buy rating on Infosys.
Okay, so that's the view coming in on Infosys. Let's move on and talk about Bajaj Auto then. And of course, this has slipped in trade today, but that's largely not because of the earnings, in fact. But before I go in, let's get in my colleague Puneet to tell us about what the brokerages are making of the earnings coming through.
Yeah, thanks for that, Agam. So we start with a brokerage view of Citi on Bajaj Auto. They maintained a sell rating with a target price of 6,500 rupees, which is a 27% downside from the current levels. They do mention that the results were above expectation on better realization, and that's why they've increased the target price from 5,500 to 6,500. But they see that the three-wheeler demand will moderate versus the high growth that it had seen of roughly 50% in financial year 2024, and are expecting this to moderate going forward for FY25. They've also said that the focus will be on the 125cc segment and how it gains, as well as new launches, while also they say that the export revival remains an uncertain. They've seen that the high growth markets such as Nigeria is a key issue for Bajaj Auto because of the geopolitical issues, while they have said that the current valuation also adequately priced in the earnings which have been given for this financial year as well as the next one. But Nuvama, on the other hand, has a real positive view on Bajaj Auto. They maintain their buy with a target price of 10,340, which is a 14% upside from the current levels. They say that the results were above expectations owing to richer product mix, while also estimating roughly 9% volume CAGR for two-wheelers over the next 2 to 3 years. They also estimate that the replacement demand has improved, while also business and economic data, which is for the economy in general, will lead to better three-wheelers going forward as well. While exports have been in the doldrums for the last year, they expect better export margins for the company as well as demand going into the next year. They build in a revenue as well as EBITDA CAGR of 13 to 17% over the next 2 years, and at 30 times, they have a price target of 10,340 rupees. So both divergent views, but both have one commonality, that the results were ahead of expectations. Back to you.
All right, Puneet, thank you so much for getting us those brokerage updates. Of course, we also spoke to the management of the company, Bajaj Auto's Rakesh Arora, on the growth drivers for the company going in. Listen in.
If I have to sort of single out couple of things which have driven this record performance. The first is really the progress we have made in the upper half of the motorcycle industry, which is the 125cc plus segment. Here, our flagship brand is Pulsar. We've had a slew of launches over the last 6-7 months, and I must say that all of them have been accepted very well in the market. So we have now almost 18 models which are spanning the entire top half of the industry.
Right, that is Rakesh Sharma of Bajaj Auto telling us about all that is in store for the company. Mr. Chockalingam, well, certainly the stock has done very well, and even the price has moved up substantially over the course of the last 12 months, taking into consideration the kind of personal records that the company has broken. That said, at least one broking house on the street does believe that Bajaj Auto is expensive at the moment. What is your take on this?
Yeah, certainly it is little expensive, and therefore I would give hold rating rather than sell rating, because the March month it has done reasonably well. Though the full year year-on-year growth was not much above the industry, but in March month it has done reasonably well. And secondly, the way the oil price is moving up now, already almost 25% up from the bottom. In my view, that would be positive for a two-wheeler industry. At the low end of a car, the shift to car from the two-wheeler may be delayed in the current fiscal. And thirdly, the industry tailwinds are in favor of these companies. The two-wheelers segment within the automobile sector has posted the highest growth when you compare with other segment of automobile sector. I think that trend is likely to continue in the current year as well. So therefore, I would give a hold rating on Bajaj Auto.
Okay, a hold rating on Bajaj Auto, and we talk about Indus Towers then. There are two reasons why we've taken the stock up, because firstly, it's up as much as 2%. One reason potentially could be that it signed an MOU with NTPC Green Energy, and this is for development of a renewable energy-based power project. And this would include solar, wind, as well as energy storage solutions. But, well, we also understand that Indus Towers is likely to reap some benefits from Vodafone Idea, and perhaps it could make a realization of as much as 5,000 crores from Vodafone Idea. That said, these are receivables, and we're not entirely certain whether or not this will in fact come through. But these receivables are key as far as Indus Towers is concerned, and again, this is a decent amount of cash flow coming through. But Mr. Chockalingam, what's your stance on Indus Towers? How are you reading in this one?
The stock has already done very well in the last 1 year. In fact, if you see the last deal happened in the tower business and compare the EV per tower, I believe Indus Towers is too costly stock. Still, as you rightly mentioned, the developments happening in Vodafone are positive for this company. So therefore, I would say that hold it, but in case it jumps another 5-10%, one should exit purely based on the valuation.
Okay. Well, Mr. Chockalingam, stay with us. We slip into a short break. And on the other side, we also get you a special chat with Deepak Shenoy on Vodafone Idea. Stay tuned in, and we'll be back in just a bit.
As voting day is at our doorstep, I want to take a moment to talk to you about the importance of voting. Every citizen has a right and an obligation to vote, and each one of us can shape the future of the country by exercising our votes. I'm going to be able to do that by signing this pledge, and you must do the same.
Hi, I'm Tanuj Bhojwani, and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing. or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find
Welcome back to Hot Money. We are taking stock of Vodafone Idea at the moment. Let's pull up the stock and see how it's doing. Of course, the stock is also open in terms of its follow-on offer. At the moment, we are looking at a 21% subscription to its FPO, but we still have a couple of days left before the FPO shuts. That's on the 22nd of April. But we're in a conversation now with Deepak Shenoy, founder of Capital Mind. And Deepak, good afternoon, welcome to the show. We were just going through your latest tweet on Vodafone Idea. Sure, it raises about 18,000 crores through the FPO, it's provided that it does manage to get fully subscribed. But that said, you suggest that it may not be enough, and in the long run, it's going to need a lot more than just these funds to go on with its business. Can you tell us a little more about this?
Yes. So what happened was after the AGR case and spectrum commitments that they have deferred payments for the past spectrum and for the past AGR dues and all of that stuff, and capitalize the interest in terms of giving the government shares. The government owns 33% of the company now, roughly, and the promoters own 50%, or a little bit less than that, I think. But here is where it gets complicated because the deferment happens till October 2025. That's next year, 2020. Next year, October is when they have to start paying back whatever they have said they've deferred. Part of it is spectrum payments and part of it is going to be AGR dues. Now, they have estimated, and in their own DRHP, that the amount of money they have to pay is 30,000 crores roughly for next financial year. That means starting October 25 onwards, they will have to pay 30,000 crores. And then after that, 40,000 crores per year for 5 years, FY27 to FY31. So that is effectively a fairly large cash flow out. They don't. They're going to have struggled to make that cash flow from their current investments, and their equity is already a negative. I think negative 100,000 crore plus. So they're a fairly large number. This 20,000 crores that they're raising is going to be very little to bring their net worth back to positive. Remember, banks also cannot really lend to you if your net worth is already negative. So for instance, if I go in and say, listen, I have 5 years of losses, my shareholder equity is negative 5,000 crores, will a bank give me even 100 crores? Answers no. So the question then will be, then a bank will say, listen, I can give you this money, but I'll have to give it to on the guarantee of another entity. And I don't think the Birlas really want to, put their other entities stake or give guarantees of something of that magnitude in order to get bank loans of any decent size. However, our country is very, it's very the world works very differently for the Birlas versus for the rest of the world, for the rest of India at least. And so it may be able to pull off something in the near term, but in the long term, think about it, 30,000 crores per year of next year, 40,000 crores after that every year. it's very difficult to imagine how this company will survive. And as a disclosure, we are invested in their competitors. So their competitors stand to benefit if something, does not happen well with Vodafone. So I'm biased. But I find this a very difficult proposition to think about from a cash flow perspective. Essentially, what you're doing is you're giving money to the company that will almost directly straight go back to the government. People are thinking that the government will convert the rest of their obligations to equity, but they won't, because already 33% is with the government. If the government converts, even say at current valuations of about 66-70,000 crores, if they convert the rest of say 15,000 crores out of the 30,000, the next 30,000, and converts 50,000 to equity, the Vodafone will become a PSU, because then the government will own more than 50%, then all sorts of rules apply. I don't think that is desirable from Vodafone perspective, from a government of India perspective. Then they have to figure out what that means for support and all that stuff. So I don't think this is workable. The government can't write off the dues, because if you write off the dues, everybody else is going to come and complain and saying, excuse me, why do you write off Vodafone dues but not my dues? It doesn't make any sense. So it's not an easy game to play in. It's not going to be useful for people. I mean, from a shareholder equity standpoint, it sounds like one of the most difficult investments to make. We like telecom, but honestly, we think the survivors will be the other two, and perhaps maybe another player that may come in once there's enough weakness in Vodafone.
Right. Good afternoon, Mr. Shenoy. Smriti joining in here as well. So a couple of things here. So the company seems to be banking on something like a tariff hike. Now, there is an expectation that there's going to be an industry-wide tariff hike post-elections. And Vodafone Idea is talking about 2 tariff hikes in the next 3 years itself. However, of course, even if you take a 15 to 20% or even 20 to 25% of a tariff hike, that still doesn't seem enough. And these FPO proceeds, they have talked about how this will not be used for payment to the government, the spectrum dues as well. But a couple of things that they're banking on seems like that after they're able to put in this FPO money into capex, they're going to able to have more subscribers back. The churn has been very high till now. So that's one thing. They're also banking on a curative petition that's been filed in the Supreme Court for recalculation of these AGR dues. A brokerage is talking about how 50% of that can be, they won't have to pay that sort of 50%. And of course, if that recalculation that happens industry-wide. So these are a couple of things. They're also talking about some revenue numbers, how they plan to go and increase their revenue in the next 2 years itself. So a couple of things they're banking on. Do you think that's kind of a way for the company to move forward? And then they'll talk about debt once they have subscribers coming in, expansion of 4G, 5G happening in. Then maybe they can have go and get some debt based on that.
I'll come to the debt question first. How does a bank lend to a company with negative shareholder equity? That's why they don't have bank loans. They have only some 4,500 or 7,000 crores of bank loans. All the remaining debt, which is mentioned on their books, is either a lease liability, small amount, or the government liability, which is the largest amount. It's 1 lakh plus crores or 1,60,000 crores, something like that. So getting a bank loan will be difficult from a perspective of, boss, why are you giving this company, which has negative 160,000 crores of shareholder equity, any loans, when the promoter is only going to put in 2,000 crores? That's all he's putting in this whole 20,000 crore issue. 18,000 crores coming from the FPO and 2,000 is coming from the promoters. That's it. Vodafone is putting zero. The government is putting zero. So there is no more support from the largest shareholders in the company. Roughly 83% of the shareholders, which is held by the government plus the Vodafone and Idea, they are not putting in any significant amount of money. How does a bank or a financial institution get confidence that this company will be a going concern going forward? I mean, even with this 20,000 crore fundraise, sounds extremely difficult. But the rest of it, I think those are like little bit of lottery tickets in the sense of, oh, the Supreme Court may come with a favorable order. The Supreme Court has not come with favorable orders for the last 7 years. I mean, assuming that the next one will be favorable, I understand it can happen. But that's like betting on a horse that hasn't won 7 times and then saying that, oh no, it's a fitter horse now, it will win. Possible if you know well enough and all that, but who can predict what what a court will say and what logic may be used? I don't think the logic that will work will be something like, oh, if you charge this much, then we'll all go bankrupt. Therefore, you shouldn't charge it. I don't think a court will listen to that. But a court may listen to the fact that, listen, maybe you've done a mistake in the calculations. Remember, they've gone twice and said, listen, there's been a mistake in the calculations. They said, no, there's been no mistake in the calculation. This is how it's supposed to be calculated. Therefore, banking on the Supreme Court case, fine. If you're doing that, you should know that you're betting on a lottery and you should do this. Tariff hikes. Tariff hikes have two players are profitable, one player is not profitable. The two players that are profitable have actually increased tariffs from 2022 December to now, roughly 45 to 50% in different ways. So what used to be a 2,000 rupee annual charge is now a 3,000 rupee annual charge. I'm saying this from a user perspective. I have both Jio and Airtel SIM cards. So therefore, I am aware of what the costs are and how they've changed over the last 2 years.
Right.
So that has already happened. Now to imagine that the hikes will be another 25 or 50%, at some point you have to ask whether, the competition will really want this just to save you. Would Bharti and Jio increase their tariffs just to save Vodafone? I think expecting a 20-25% may be okay, but expecting a 50-100% is close to impossible.
All right. Thank you so much, Mr. Shenoy, for joining us today and for your views on Vodafone Idea. It was great talking to you.
Well, yes, that's an interesting conversation that's going on as far as Vodafone Idea is concerned. Smriti, again, thank you for joining us and taking us through that conversation as well. Some very pertinent points made and a lot of challenges up ahead for Vodafone Idea. And as Deepak has mentioned, that there are a lot of unknowns as far as Vodafone Idea is concerned, also known unknowns, but it's not something to bank on going forward. That said, we're going to continue to give you an update as far as the FPO is concerned, which currently stands at around 21% in terms of its subscription. And with that, we're completely out of time on this show. Lots more lined up on the other side. Stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem.
Thanks for tuning into this leg of Profit Insights. What we are trying to dissect over this segment is the rise in demand for commercial real estate as an investment alternative. It forms under the whole alternatives bucket of conversations and coverage that we've done. And we talked to Anshu Kapoor, who is president and head of Nuvama Asset Management, and they've launched a very interesting vertical, if you will, on real estate side. Anshu, in your own words, you're trying to build out an institution that hitherto doesn't exist in India, so to say. But let's try and understand how do people view commercial real estate as an investment destination, and how can institutions like you get in or mobilize some of the capital that people might want to do?
Sure, thank you, Neeraj, for having me. Great question, yeah, to begin with. Let's talk about the appeal of real estate. I would say after gold, real estate has the universal appeal in this country. 99.99% of investors want to access real estate. Until now, as an investor, what could you do? You could access maybe residential, right? You could buy land, you could access residential, that was available to you. But unknown to you, a very large asset classes got built out over the last 10-15 years in India, which is commercial real estate, and of which office is a large segment, and then there's warehousing, and there's retail, hospitality, and so on. This asset class, Neeraj, today is $140 billion in size. Office only is 100 billion, of which that doubles every 10 years. Now, the beauty of this asset class is it is globally relevant. What do I mean by that? India office consumption is 50% of Asia Pacific consumption every year. Just to give you a sense of size and scale, a city like Bangalore over the last 5 years has consumed as much office space as Shanghai. So that is the relevance, that is the size. Until now, as an investor, you had very few options to access and invest in this asset class if you are an Indian individual investor, right? Until 2018-19, when the REITs came, all you could do was invest in this asset class by buying out units, small retail outlets, office spaces, and so on, which come with their own issues and problems. REITs came in 2018-19, and now we have 4 REITs listed, about 80,000 crore market cap. You have 4 options only available. Liquidity, good return profile, reasonable return profile, and that's about it. The asset class is so large, largely invested by foreign institutions. Indians are kind of excluded from this. So that is the endeavor we have, is to bring access to our investor base to an asset class which is as large, so institutional and liquid also.
Establish that it's large, establish that now with paper investments possible, it's liquid as well. One, what are the kind of returns that can come in through something like this? Are these lumpy in nature or linear in nature? And how liquid are these?
Right. So like I said, the asset class is very large. And because of the nature of this asset class, let's talk about office, because that's the largest part of the asset class. So grade A prime offices today will yield you anywhere between 6 to 8%. Right? That's an annual yield. Stable, real asset based, there's a good quality tenant profile. So that's the earning profile of this asset. Now your risk or return will vary as to when you come in to this asset class. You come in at the land stage, development stage, near completion stage. Are you assuming leasing risk? Not assuming leasing risk. So let's consider REITs.
But that is for somebody like you, right?
Yeah.
Or not from an investor who invests into the fund. They are investing into your fund independently.
I'll simplify this. If you are coming into a REIT, your return profile is about 10 to 12% pre-tax.
Okay.
With about 6 to 7% yield coming to you every year. Right?
Okay.
Because REITs are allowed to invest largely in ready assets. A small percentage can be in under construction, but largely in developed assets, and they have to pay out a large chunk, most of the net operating cash flows that accrue to them. So that is your most liquid, most institutional, largest asset class available, which is easily accessible.
Right.
Now you go into what you call private investing, which is what all the funds have been doing in this country, is to buy out leased out ready assets or about to be ready assets, and then see how you can upgrade the tenant profile, upgrade the cash flows, bring efficiencies in, and eventually sell down in the market, right? That is the private investing part of it. Returns can be lumpy. You have to assume illiquidity, so you may not be able to exit out of that. So that is what it's called category 2 alternative investment fund, AIF in India. And therefore you are invested for about, let's say, 6 to 8 years. And your return or your cash flows could come to you 4th year, 6th year, 7th year, and so on. That is what you are assuming, but you are likely to receive a higher return profile for assuming this risk. So your return profile could be anywhere between 18 to 25%, depending on the nature of the product that you invest in.
Got it. Okay. Okay. Yeah. And how do investors invest? Let's say you are building out a product. People trust your brand. People trust you because you've been around. How do they invest into something like this?
See, to the end investor, it's very simple. You can just invest a minimum 1 crore into.
Minimum is 1 crore.
1 crore.
Independent of the investor, because there's some talk that an accredited investor can get a slightly lower check.
Yeah,
as
true.
Well.
But that's really not, a very large base of investors today.
Okay.
So for most people in India, they can come with a minimum 1 crore rupee investment into a product like us. And I think the key here is because there are not many good quality managers or good supply is the problem. Demand is, like I said, infinite perhaps from our investor base. Supply of high quality solutions, good quality teams out there. So that is the risk assessment that the investors have to do. The suitability of the product, suitability of the manager, credibility of the manager, reputation of the manager. So I think those are the more important points for you to consider. Minimums are only 1 crore now today.
Okay, for now minimum is a 1 crore. Okay, and large, a couple of other questions. One, is the demand largely towards office space per se, or in products like yours, the demand for some of the other residential or real estate projects are also picking up?
See, per se real estate is a very vibrant market right now. Right, residential we all know is doing very, very well. Every month we are seeing month on month records are being broken in terms of the total supply and absorption of the market. All the real estate developers are doing very well. RERA has helped, right? So regulatory regime coming in, the right market environment, everything is working well. So is the case with commercial real estate. Actually, that is where global demand comes into play in a country like India. 25% of that is global demand, what you call GCCs, right? GCCs now are 25% of the market today. But in India, what is happening is it used to be an IT services play earlier. It is now moving from IT services to GCCs and a lot more broad-based Indian consumption, as in Indian corporates wanting to get the best quality workspaces for their employees. So BFSI, manufacturing, and other pharmaceuticals, chemicals, and other companies want to get the best quality space, like I said, for their workforce.
Got it. Okay. My final question, Anshu, and that is because this is more an HNI product, if you will, do you see at some point of time this becoming a mass market product as well? Could regulations evolve?
Yeah. So actually, regulators are doing a very good job out here. So there is this SME REIT proposal and guidelines that have come out. So conceptually, REIT needs a certain size. Let's say 1 million square feet minimum for anyone to launch a REIT. So it needs size, it needs that scale, organization, capital, so on. But now what is possible is at a smaller level, 50 crore kind of a level, you can have a SME REIT. So think about financializing of real estate, commercial real estate in India is going to be possible. And office is the beginning, like I said. There is warehousing, the whole logistics play, hospitality is very large, retail is going to be very large in this country, and then will be data centers and so on. So it will start with the biggest, most liquid market, and in my opinion, go down into a lot more larger asset classes as we evolve. So you as an investor can, pick and choose. You want a hospitality REIT, you want a small REIT, large REIT, or you want to get into a private fund like what we offer.
Got it.
So you will have choices.
Interesting. And I presume that a higher ticket viewers would mean that the probability of getting into the fund is higher and all across asset classes, and therefore you have the choice of choosing a fund with the risk and return profile that each of those individual products, whether a REIT or a fund, is to offer. But Anshu, this was nice and informative. Thank you so much for joining on this leg of Profit Insights.
Thanks a lot. Thanks for having me.
The pleasure was ours. Viewers, thanks for tuning in. Hope this helped. Stay tuned to NDTV Profit for more news and updates.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly.
Welcome back. You're watching NDTV Profit and my name is Alex Matthew. Over the past several weeks, we've been bringing you a very unique segment, and that is to tell you what your candidate owns, what their wealth is like. Today, I'd like to talk to you about Nitin Gadkari. And in fact, let's look at what his portfolio looks like. He's got total wealth or total value of assets at about 8.33 crore rupees. But this is split between obviously movable and immovable assets. First, let's look at the movable assets. They stand at about 1.3 crore rupees. He's got more money in immovable assets, and that stands at as much as 7.01 crore rupees. That's in the form of buildings as well as agricultural land. Now let's delve a little deeper into the movable assets. He's got domestic fixed deposits of close to 49 lakh rupees, and in fact he had taxable income of 13.8 lakh rupees in 2023, which is a reasonable growth, not a very substantial growth from 5 years ago. Now he's got fixed deposits, as I mentioned, of about 49 lakh rupees. He's also got cash of just about 12,300 rupees, and he's not somebody obviously who holds a lot of cash. Jewelry of 31.9 lakh rupees. What else does he have? He's got investments in bonds as well as shares and certain other assets that are about 3.5 lakh rupees. So most of his wealth is held in immovable property. Now, let's in fact get you the next piece, which is a conversation that Neeraj Shah had with a few veterans in the markets to talk about what you need to bear in mind with the elections kicking off. Listen in.
Today, India is one of the most expensive or highly valued market in the peer group. And that confidence to pay higher valuation comes from the fact that everyone believes India will be the fastest growing major economy. And more importantly, economic growth will also convert into profitability growth for corporate India, unlike in many other parts of the world where economic growth didn't translate into corporate profit growth. So the base fundamental for the market in terms of expectation from the government is to continue faster growth, continue higher corporate profitability growth, and continue best governance.
Got it. Okay. And in that, I mean, the conversations can vary from what could happen to the policies that have been continuing with an assumption that the current dispensation comes back to power, and what could be the newer things that would come into place as well, innovative things that could come into play as well. Are there hopes that you're penciling in on either of the two ends, Nilesh Bhai?
Undoubtedly, keep on doing the good work like fiscal prudence, like out-of-box thinking, which we saw during COVID time, and also keep on improving on things which have not been attempted so far. For example, farm law reforms, for example, rationalization of subsidies, for example, focus on manufacturing growth. Essentially, if we have to summarize India's challenges in one line, about 10 to 15 crore people are working in agriculture. If they're removed from agriculture, I doubt there will be any material impact on output. But if they are employed in services or manufacturing, our growth orbit can change. Now, this can't be achieved overnight, but is there a roadmap to achieve this? Faster growth, better governance, and higher corporate profitability. These are the trico on which markets will be evaluating government's next steps.
Okay. Now, I have a question. Mark Matthews may not exactly understand up ki bar 400 par, but Mark, what I'm trying to ask Hiren Ved and then to you is that will the extent of the victory make a difference? Up ki bar 400 par, Mark Matthews means can the BJP or the NDA go over 400 seats this time? So, Hiren, can I come to you? Will up ki bar 400 par matter, or will the markets be happy with the majority government coming into play, enacting the policies the way markets would want them to?
It's quite interesting. I think this government coming with a comfortable majority should do it. But maybe in the short run, because to use our stock market or corporate language, there is a forward guidance which was given by the Prime Minister of 360 for the BJP and 400 for the NDA. Certainly, these are the two numbers that everybody will look out for. Again, predicting elections and seats is a science in itself. I don't think I'm qualified to do that. Only thing that I would say is that if somebody of the stature of the Prime Minister has mentioned these numbers at the floor of the House, I'm sure that there is a lot of confidence and backing in their calculations for him to kind of give a number like that. But is it going to be like earth-shattering if they get 380 or, it could well be 420? I really don't think so. I think as long as they get a comfortable majority, I think the willingness to do what they want to do is there, and there should be a fair continuation of policy.
Okay. And Hiren, would the fair continuation of policy be good enough for our markets to sustain the valuations? And then I'm going to go to the relative valuation question with Mark. But to you, in absolute terms, we are not cheap, yes. But is that good enough to validate the valuations? Because then the markets will believe that there is policy continuity, hopefully no disruption to the earning growth trajectory that India has had. Will that be good enough?
So, all things being equal, I think when you do good work, right, there is some immediate impact, but there is also a far-reaching cumulative impact that kicks in, right? So I think, for example, what we are seeing in GST revenues today is a result of formalization of the economy and better compliance that has not achieved one shot, but it has happened over a period of time. So my sense is that the continuity itself should create a certain momentum, right? So for example, a lot of private sector capex programs and projects, I think will continue to unfold. Question is, what else can this new government do, which is an unfinished agenda? That can only add plus to the growth. Having said that, the thing about earnings is that sometimes it's nothing to do with the policy, right? Because let's take the example of fiscal 22-23. So for example, when the Russia-Ukraine war broke out, commodity prices rallied, and companies which use commodities saw a hit on their EBITDA margins, right? And obviously earnings for the broader market got impacted for a while. And all of that reversed in 23-24 as commodity prices normalized and logistics costs normalized. So sometimes in the short run, you can't correlate what happens to earnings in a particular year to just what the government policy or reforms is, right? Because sometimes some reforms take a lot of time, and how they get realized into corporate profitability is a completely different mathematics altogether.
Yeah, point well taken. Okay, Mark, coming on this, there is this belief that there is policy continuity, government continuity, so on and so forth. How are you, sitting from where you are perched, look at what the global view would be on the election season in India and the outcome thereof?
Well, the first thing I'd say is I don't think it's particularly important, because unlike, say, 20 years ago, foreigners don't move the market anymore. That's patently obvious in the way the market has performed in the last couple of years, despite foreign net selling. Now, to answer your question, I don't think foreigners do look at Indian politics very closely, because they're complicated and it's hard to understand them. What they know is that this is a pro-business government that has enacted some really deep structural reforms, which are unusual to do in a democracy, because they cause short-term pain, and that's the way you usually get voted out of office. So I would say they recognize the good work that's been done. I don't think many of them know about the potential for further reform. They're just happy with what's been done, and I think they feel that the momentum from the reform that's already been enacted and the plans, with the railroads and electrification and internet and all those other things, there's still so much room to do good work in those areas. And so, long-winded answer, I don't think foreigners are spending that much time looking at Indian politics, but I also don't think that foreigners are the movers of this market anymore anyway.
Yeah, no, that's a fair point. And just before we take that break though, Mark, the consistent opinion that we've gotten from everybody that FIIs are probably waiting for the election outcome to happen before they commit more money. You are saying that is not the case, to your mind?
Yes, I don't think they are paying much attention to it. Indians are always so preoccupied with the budget, for example. I can tell you no foreigner cares about it. Sorry.
Yeah, the budget, I completely agree, but I thought the election was a different kettle of fish altogether, Mark. You completely decrying that. Interesting thoughts.
Hi, I'm Rohit Kapoor. I'm the CEO of food marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection.
Benchmark indices off lows, trading in the green, Nifty above the 22,000 mark amid weak global cues. Broader markets continue to underperform. Geopolitical tensions shake global markets. Asia and Europe trade with deep cuts. The Dow futures are flat, sharp slide in the US 10-year yield. Gold is above the $2,400 mark. Crude prices are volatile. IT major Infosys in deep waters after reporting subdued revenue guidance for FY25. The company's 2024 headcount declines by over 25,000. And voting for the first phase of the Lok Sabha elections begin. As many as 102 parliamentary constituencies are polling today. The counting of votes will be on June 4th. Tit-for-tat exchanges continue between Iran and Israel. Reports suggest Israel launched a strike on Iranian soil today morning, raising fears of a widening conflict across the Middle East. Meanwhile, Iranian officials denied the reports of a missile attack, calling it false alarm. Hello and welcome welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a quick look at where the markets are at first. Now, given global cues and the geopolitical tensions prevailing in the West Asia, the Nifty 50 started off on an extremely weak footing at the start of today's day of trade, but it's recovered significantly ever since, and we're actually now trading in the green. We're currently trading above the 22,000 mark and trading up by almost about 0.25%. Similarly, the Sensex too up by about 0.25%, very much in the green, up by almost about 200 points. Let's have a quick look at some of the key constituents of the Nifty 50. And currently, we're looking at almost an equal number of advances and declines in the Nifty 50. In the key contributors, HDFC Bank in the green, leading and contributing almost 40 points. ICICI Bank, ITC, M&M are some of the names which continue to hold up and are responsible for where we're looking at in the Nifty 50. What's not performing well is L&T, Infosys, Axis Bank and TCS. The markets have staged quite a recovery that's reflecting in the sectoral indices too. The Nifty FMCG is up by almost about 0.5%. The Nifty Bank up by again about 0.5%. What's not performing well is Realty. It continues to drag. It's down by almost over about 1%. Media, Pharma, IT, PSU Bank continue to remain in the red. Let's also have a quick look at the broader markets. Despite the recovery we've seen in the Nifty 50 and the Sensex, broader markets continue to underperform at this point, both in the red, the Nifty Midcap 150 as well as the Nifty Small Cap 250. Let's also get you a quick global market check. Now, Asian markets have been cracking since the morning. Nikkei with most losses, it's down by about 2.66%, followed by Korea, which is down by about 1.6%. European markets as well are tracking Asian market losses. All benchmarks are down. The US 10-year bond yields, as you can see, have come off. They're down to the 4.5% mark. Gold is above the $2,400 mark, and crude is volatile in trade. While the Brent crude had touched $90 a barrel today morning, it's come off its highs, and we're currently up by only about 1% at this point. But let's move on to a special guest, Alistair Newton of Alawan Business Advisory. He joins us today to give us his perspective on what he's been making of today's developments. Mr. Newton, thank you so much for taking time out for us today.
Good morning.
A very good morning to you as well. So I'd like to begin by asking you about what you're making of today's developments, and more critically, how do you see these developments unfold in the near term? What is the probability of these tensions escalating going forward from here?
If we look back over the course of the way in which this conflict has developed since 7 October, we have to assume that further escalation in tensions is probable. Probable, despite the efforts of the international community, perhaps particularly the US, to lower the tensions. We know, for example, that putting Israel-Iran to one side at the moment, we know that Israel is still planning to attack Hamas in Rafah. And that alone will significantly raise tensions, especially given pressure from the international community on the Israelis not to do this. So tensions will continue to rise, in my view. Going back to the question of Israel-Iran, my personal view is that what we saw this morning is very unlikely to be the end of Israel's retaliation, as they see it, for the Iranian strike against Israel last weekend.
Okay, all right. I mean, while it is very much an evolving situation and we're all tracking and waiting to see how the situation unfolds, you do believe that the situation could possibly deteriorate from here on, but would you expect this to be a prolonged sort of skirmishes, or can we expect some betterment maybe after initial deterioration? I mean, I know it's an evolving situation and it's extremely hard to say at this point, but from a timeline perspective, are we looking at a prolonged situation?
Yes, in short.
Okay.
I think we can reasonably predict that this is going to be prolonged for one main reason. Benjamin Netanyahu's security in the office of Prime Minister of Israel seems to be largely dependent on him continuing to pursue the conflict. And Netanyahu has a big vested interest in staying in office. If he's out of office, he may well finish up in prison. And whichever way I look at this, and with all due respect to Israel's other leaders and the Israeli community at large, my personal view, and I'm not alone in believing this, is that a great deal of Israel's approach to this conflict is being driven by Netanyahu's personal interests and his related support on what one can only reasonably describe as right-wing members of his cabinet, without whose support the government would collapse. So I'm afraid that to a certain extent, what we're seeing in the Middle East today is being driven by probably actually a minority of Israelis who happen to be in leadership positions. If we look at the street protests against Netanyahu, demands for efforts to release, to negotiate with Hamas to release Israeli hostages still held by them, all of this is running against Netanyahu, who is under considerable domestic pressure.
Okay. Also, I do want to ask you...
That's all because of Netanyahu's personal interest.
Okay, Mr. Newton, I do want to ask you how you see reactions coming in globally, if that's expected to sort of pressure the countries into reaching consensus sooner. Well, I believe we've lost Mr. Newton. We'll try and reach out to him once again as he continues to give his views. But at the moment, like a lot of other market experts, he too appears to be of the opinion that we are likely to see some acceleration in geopolitical tensions before we can see any relief coming up on that front. Well, the Nifty continues to remain in the green. It's up by almost about 0.25%. It's managed to shrug off global cues coming in, despite how we've seen the Asian markets close. The US markets are, of course, yet to open. I believe we have Mr. Newton back on the call with us. Mr. Newton, I hope I'm audible to you now.
You are. I think it's the network here rather than at your end. So I apologize for that.
Oh, that's absolutely all right. But Mr. Newton, I did want to help, I did want some help understanding from you how you expect global players to react, and if that's expected to sort of exert any pressure and possibly help de-escalate the situation a little faster. I mean, how are you looking at that angle?
I think there will be continued pressure, perhaps particularly on Israel, although it's tricky because on the one hand, Iran is something of an international pariah. I know it has close relations with a number of countries, but in the eyes of the West, it's an international pariah. I think we will see some more measures against Iran from Europe and the US. However, I do not think they are going to be successful in stopping Iran's oil exports. And this is perhaps one of the most critical factors for markets. You said it yourself earlier in this program that Brent has come off again from the 4.5% increase, which we saw in the immediate aftermath of the strike, and is now back down below 90. I think markets since the 7th of October have been very, very pragmatic about oil. And I think what we've seen this morning is a classic knee-jerk reaction followed by a more measured. The Iranians are not going to close the Strait of Hormuz because they're exporting oil. The Americans have a big interest in the price of oil, or at least the Biden administration does, because it has a direct electoral impact in the US on the way in which voters view the administration. So I do think we're going to see continued international pressure. I do think the Americans are going to be pressing the Chinese to bring any influence they have to bear on Tehran. But I actually think the Iranians so far have been pretty moderate in their response to, let's remember, a direct Israeli attack on Iranian diplomatic premises which killed Iranian citizens. This is where this most recent series of events actually started. So most of the pressure has to be exerted on the Israelis, in my view, not on the Iranians.
Right. Okay, I do want to ask you one last question before I can let you go. You did touch upon where we are at on Brent, and given your commentary, would it be right to sort of assess that at this point we might not necessarily see too much of an upside from here? And I also want to ask you about global markets. We have seen Asian markets close in the red, and the US markets are yet to open, but at least for the time being, given how volatile the geopolitical scenario is, can we expect negative cues for global markets going forward?
Well, I think markets are responding to all sorts of factors going on at the moment, not least perceptions which are shifting quite significantly of what the Federal Reserve is going to do during the balance of this year. There's now a school of thought which says that we will not see US interest rates cut at all in 2024. Compare that with the beginning of the year when some commentators were suggesting we might see up to 7 interest rate cuts in the US. That's clearly a major factor. Market behavior is not just about the conflict in the Middle East. Indeed, I would argue that it's actually been a fairly minor factor. And if we look at oil, that's a classic example. There's a lot going on in oil at the moment.
Okay, all right. Well, that was extremely informative, and given the scenario and as it unfolds, we hope to be in touch with you for more of your analysis and expectations going forward. Thank you so much for taking time out for us, Mr. Newton. And with that, it's time for a break. But as we do that, here's something to note. As a part of NDTV Profit's special series on AI, we're covering ventures and startups doing definitive work in the realm of artificial intelligence. This week, we're covering Vodafone, an emerging startup developing AI solutions for the social good. We leave you with a special report. Take a look.
Among a sea of artificial intelligence ventures in India that are aiming to monetize the pace and ease of cutting mundane tasks is an outlier. At Vodafone AI, the sole focus is on developing AI-based solutions for underserved communities in developing countries and completely not for profit.
Our goal is to use a technique where we actually experience and allow the people to experience AI in actual use. So a lot of our work tends to be directly on the field, working with people, working with the government.
To get a flavor of what exactly Shekhar means by Vodfane's people-centric approach, we reached their offices in Delhi to get a demo of their AI agri-tech solution, Cotton Ace.
We have developed this solution, which is an AI-based early warning pest management detection, as well as it also, provide advisories to the farmers. After installing the application, farmer has to monitor with the screen. Okay. It usually take photographs, the farmers can see report and get the recommendation based on the economic threshold level of the pest. So once the AI model detects it and accepts it, and then accordingly it will generate advisory.
Vodafone AI has been able to make progress backed by a massive team working across the tech backbone, and also because of financial backing by the founder-donor Vodafone Brothers, Google.org, and support from institutions such as the Bill and Melinda Gates Foundation. While Cottonase is just one example of Vodafone AI's work in agriculture, it has developed several solutions in healthcare and education as well, which should be the key focus areas of development in developing and underdeveloped countries. To really reach India's masses is possible only with public-private partnerships as well as intent-driven non-profit organizations such as Vodafone AI taking on the mantle and reaching crores of Indians in the next few years.
Hi, I'm Rohit Kapoor. I'm the CEO of food marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
It's an eventful day here in the newsroom. India begins voting. The first phase of one of the world's largest election exercises has kicked off today. The first phase of the 7-phase exercise is being held in 102 seats across 21 states and union territories. 1,625 eligible candidates will cast their vote, with 134 women candidates. Today, as the first phase begins, a mere 24.5% of eligible voters turned out to cast votes till 11 a.m. Prime Minister Narendra Modi is eyeing a third term. The ruling BJP aims for a steep rise from 2019. It expects to clinch 370 of 543 Lok Sabha seats. In the last election, the NDA won 353 seats, up by about 5% from 2014. The BJP won 303 seats. But what makes the first phase of the elections important? My colleague Tamanna Inamdar tells us why.
The dance of democracy begins. The 2024 elections officially kick off today with phase 1. What's happening in phase 1? You'll see polling in 102 out of 543 seats, so nearly 18-19% of the seats in the total election go to vote today. You have a total of 102 constituencies, 1,625 candidates. Out of those, women candidates are 134. Now, that's not all. This is also an important election for several reasons, and one of them is because of the key candidates and key contests that you're seeing today. You have big ministers. You have 8 ministers who are going to be contesting today. You have 2 former chief ministers, 1 former governor as well, and we'll pull up some of those key candidates in just a bit. So this is the first reason that it's important. You have 8 union ministers, 2 former CMs and 1 former governor in the fray. Apart from that, 19% of all seats will see votes cast in phase 1, but it's a big one because all of Tamil Nadu's 39 seats go to vote. So it's a big test for the DMK and the India alliance and see if they can retain all their seats in Tamil Nadu if you see the breakup. It's also a question of whether the BJP can make significant inroads into Tamil Nadu. That has been one focus for the party. And can they actually become a key opposition player with a presence in that state? That will be the aim. All of Uttarakhand's 5 seats also go to the poll today, and the BJP will want to have a hat trick of getting 5 out of 5 seats once again for a third election in a row. Let's pull up some of the key candidates that are going to be in the fray today, and that will give you a sense of why this is also a crucial election. So you have, for example, a Bhupinder Yadav, union minister, who will be fighting from Alwar. You have several others, Gaurav Gogoi. This, a lot of seats in Assam are also going into the polls today, and that is a key contest for the BJP. So you have from Jorhat, his constituency has actually moved, so Gaurav Gogoi there. Nitin Gadkari, of course, union minister and BJP heavyweight from Nagpur, his own constituency, which he has consistently won as well. You have Arjun Ram Meghwal from Bikaner, who will also be in the frame. So you have a whole host of big fights that you will be seeing through and through. Dayanidhi Maran, the big one from Chennai Central, who will also be in the fray. So you can look at it as a kickoff, really, of the whole election battle coming in with phase 1 playing out today.
And now from the hot seat, Chennai, at 11 a.m., 4 hours after polling began, Tamil Nadu had recorded 23.7% turnout. My colleague Sam Daniel Stalin joins us from the heart of the city to talk about voter turnout percentages. Listen in.
We come to you from the Madras Veterinary College in Chennai as part of the Chennai Central constituency. Traditionally, this is known to be a DMK bastion. The ruling party has fielded incumbent MP Dayanidhi Maran. The AIADMK has given the seat to their ally, late actor Vijaygan's DMDK, that has fielded Parthasarathi as their candidate, and the BJP has fielded their firebrand youth wing leader Vinod P. Selvan. Till 11 o'clock overall across Tamil Nadu, there's a 17% polling percentage, and many, including superstar Rajinikanth, have appealed to the people to step out and exercise their franchise. In Tamil Nadu, it's technically a four-cornered contest, but the key fight is between the ruling DMK, the opposition, the AIADMK, and the BJP that's trying to break new grounds in this Dravidian heartland. The ruling DMK has retained its formidable alliance that swept the polls in 2019. It's confident of making a repeat taking on the BJP on issues of federalism, states' rights and financial discrimination, as it calls it. For the AIADMK, it's the first election under the singular leadership of Edappadi Palaniswamy. He is hopeful of reclaiming lost ground after parting ways with the BJP. The party had suffered 2 consecutive elections. It fought in alliance with the BJP. The ADMK too is raking up the issue of states' rights. For the BJP, there is no major ally this time in Tamil Nadu.
Well, we'll continue to bring more updates to you as and when they unfold. But in another NDTV Profit special, how rich is your candidate? Today, the focus is on Nitin Gadkari's portfolio. My colleague Alex Matthew breaks it down for us.
Today, I'd like to talk to you about Nitin Gadkari. And in fact, let's look at what his portfolio looks like. He's got total wealth or total value of assets at about 8.33 crore rupees. But this is split between obviously movable and immovable assets. First, let's look at the movable assets. They stand at about 1.3 crore rupees. He's got more money in immovable assets, and that stands at as much as 7.01 crore rupees. That's in the form of buildings as well as agricultural land. Now let's delve a little deeper into the movable assets. He's got domestic fixed deposits of close to 49 lakh rupees, and in fact he had taxable income of 13.8 lakh rupees in 2023, which is a reasonable growth, not a very substantial growth from 5 years ago. Now he's got fixed deposits, as I mentioned, of about 49 lakh rupees. He's also got cash of just about 12,300 rupees, and he's not somebody obviously who holds a lot of cash. Jewelry of 31.9 lakh rupees. What else does he have? He's got investments in bonds as well as shares and certain other assets that are about 3.5 lakh rupees. So most of his wealth is held in immovable property. Now, let's in fact get you the next piece, which is a conversation that Neeraj Shah had with a few veterans in the markets to talk about what you need to bear.
And that's all we have on the show for now, but do stay tuned to NDTV Profit and do vote.
As voting day is at our doorstep, I want to take a moment to talk to you about the importance of voting. Every citizen has a right and an obligation to vote, and each one of us can shape the future of the country by exercising our votes. I'm going to be able to do that by signing this pledge, and you must do the same.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
What does it take to get rich? There's no easy answer, of course, because if there was, there'd be a lot more billionaires. But if you ask people who have managed to build wealth over a period of time, you'll probably get a fair idea of the thumb rules to follow, and more importantly, the pitfalls to avoid. On this episode of Big Decisions, we're talking about the rules of the mind and the rules of the heart that will help you create wealth. My guest today is Feroze Aziz, Deputy Chief Executive Officer of Anand Rathi Wealth. Over the years, he's helped millions set out on their path to create lasting wealth. Feroze, thanks so much for taking the time.
Thank you, Alex. It's great.
So let's start with that first question, right? The rules of the mind. And that's the most critical part, because equally, there are rules that you follow and there are rules that tell you what to avoid. But according to you, in the years that you've spent telling people how they should better manage their money, what's the first rule to follow?
See, the first rule to follow is to understand where you are very correctly and where you wish to go, and equally correctly. Of course, this path of where you wish to be is not going to happen as you envisage all the time. But having a clear plan of where you wish to go is seldom there. Now, I was speaking to some large guy who has about 35 crores of his current net worth. Okay, if I ask him what's the end point, what's the destination you have, he says, I don't have a target. Jitna paisa ban jaye utna acha. So मैंने कहा यार, ऐसे थोड़ा ना आप अपना business, when you're running your business, you will have a target, you will have a guidance. We gave our results a few days back. People, if I said jitna profit ban jaye utna acha, people laugh at me, right? So when it comes to personal wealth, people not wanting to set clearly defined endpoints.
Targets,
goals, right? You should have goals. There's no goal in life which is cast in stone. Doesn't mean that you don't have one. Now, if I want to lose weight, I'm going to start with saying 5 kg ghatana hai. I'm not saying that 5 kgs in 2 weeks, 2 months will exactly happen on the 61st day or the 60th day. It might take me 2 months more, or it might happen 15 days sooner. But not having a goal is something so popular. Profit maximization being the objective is so superfluous. It's a moving goalpost.
Yeah, and most people would say that, Feroze. And in fact, anecdotal evidence suggests that if you were to go to somebody and just off the bat saying, what do you want to do with your money? I want to build more money. That's essentially what most people say. I want more money. But they don't tell you what they need the money for.
Correct. Yes, they don't know what's the application of the money, and they also don't have a target date and an amount to that. English hides more. So I want more money. Okay, great. You don't know what you're going to use for. Okay, chalo, no problem. But how much and what date? Then you would work backwards to understand what you will need to do and to enhance the chance of that happening.
So, especially today, because of the kind of financial products available, do you think as an advisor and as a person that speaks to people, do you think that it's that much more important to ask this question first before saying, what do I need to invest in? Because invariably, Feroze, the first question that people ask is, should I invest in A, B, or D?
Correct. It's like so elementary, this question, that you can't begin to solve a jigsaw puzzle without having seen the full picture, right? So it's very, very important and irrespective, but people want to just buy products on their individual merit, which is not a great idea. Now, Google Map, now let's assume if I have to come here to your studio, which is a very, very fancy and a great studio, and the first time I'm here, congratulations on a great studio. But Google Map will also ask me for a destination before it tells me the time I will take. It may go right or wrong. But not having a destination and then embarking on a path is so popularly incorrect in the world of finance.
So, I've asked a lot of young people this as well, and we've kind of gotten a sense that a lot of people think nowadays that YOLO is in vogue. YOLO is you'll only live once. You don't need to worry about something that's 20 years down the line. Maybe people are saying, I don't want to settle down. I don't want to have kids. I don't want to set aside money for that. These people say, hey, why do I need to have an idea of what I need the money for? I have enough. I'm earning enough. I'm getting handed enough money. What's the answer to those people?
You live only once, right?
Yeah.
So then you plan for that once life at least properly. If you're going to live 7 times, then you have room for error.
Yeah.
Right? If you're believing in reincarnation, then you can say, okay, I went wrong this time, I'll go right.
In any case, you can't carry anything with you.
No problem. But the whole point is, if you're going to live once, you're going to plan for this one life properly, right? So I think whatever you're going to spend on, it's fancy to say that I have enough money today, but the life expectancy is going up, right? I was just reading, pardon if I'm wrong, but at independence, our life expectancy of an Indian male was 38, 39 years. Today, it might be 72 years. So by the time this young man becomes old enough, the life expectancy could be 85. And if it is 85, you may be 30 today, you have 55 years to live. You're going for a holiday for 5 days, you're planning for 5 days. A 55-year life, you don't want to plan for 5 hours. That's sensible, great. If it makes sense to that person, then it makes sense.
Okay, so we've established the first rule of the mind, and the most important one, therefore, is to set a goal. What do you do next? Once you've decided that, okay, you've identified these are the primary goals, how do you move forward from there?
Then you check whether the goal is reasonable or unreasonable.
Okay.
Sometimes goals, if they're so aspirational, they become dreams. There has to be a balance, right? Now, of course, if you say I have a goal that I will make sure that my money is 10 times in 10 years, that's like 26% compounded return. If Warren Buffett is so popular with 23% compounded return, if I set a goal which is 26% compounded return, is it realistic? If it's realistic and if you have a strategy, great. But I don't think you can strategize for a dream. You can only strategize for a goal. The second litmus test your goal needs to go through is a degree of fairness and high probability achieving of an outcome. I can't say I'm going to shed half my weight and think that that's a great goal to have, right? I would be happy to lose that, but...
it may not be good for you either.
It might not be good for you, right? You may fall flat on your face and you may set yourself behind, then forward. So the second is to do a litmus test of whether your goals are fair or not. How do you do that litmus test? For an Indian investor, first you see what's the birthright of your return. If all of us, right, don't give any advice, and if I am an investor, if there's an investor who does not have any advice, he always has the right to take his money, give it to Government of India and sleep tight, no professionals needed, no expert, no market. He gets 7%.
Fixed deposit.
Fixed deposit. Right. Or Government of India, which is practically a zero risk.
Yeah.
If your goal is to make twice more that, it's a sensible goal to have. Because you have professional mutual fund guys, you have distributors, you have 2 layers of professionals to hire. Now, can you aspire to have 14% compounded return? That's a sensible target, and you can have a 80-90% probability to achieve that.
Why is 14% sensible?
It is sensible because if you have 7, okay, 7 is your birthright.
Sure.
You have 2 degrees of professionals.
And it's risk-free. Right.
7 is risk-free.
Right.
No professionals needed, no risk needed.
Yeah.
Now you have risk appetite, you're bringing in risk appetite, that should give you a fillip.
Sure.
You're bringing in professional expertise, which might have a cumulative learning of years as an organization or as an individual, that can give you some fillip. And then you're also adding some fillip of a time. You're saying, I am okay to be patient for 10 years if you're a youngster.
Sure.
So these 3 give you a premium. And that, I think, there's no right answer, 14 and 13 and 15. I'm just telling you a thumb rule that anybody who's aspiring to have 30% return is not a great strategy because you will not be able to.
What I was getting at is that, incidentally, I was speaking to a friend and they were saying, look, the last 2 years, I've been investing with this advisor and they've gotten me 18% compounded over the last 2-3 years. But my aunt is getting 23%. So why should I not get 23%? And I was struggling to explain that perhaps your aunt is taking on risk that may not be good for her, and she didn't listen to me ultimately. So that's what I was trying to say. Why is 14% okay and 23% not?
Phenomenal. See, I get posed this question, okay, very, very frequently. 14 doesn't sound fancy for sure.
Yeah.
Right? So there will be fancier numbers which can be put on the table. But the most important thing in this case, where a lady has made 23% compounded, the most important question is, what was the Nifty at that point in time? Okay, let me give you another example. I went to Calcutta. The gentleman said, I am making good 27% compounded return. Why do I need your services? I said, great. Then we got talking. I said, sir, I never lose. I either win or learn. So here I think there's a huge opportunity for me to learn. So I would want to dig deep, because 27% aap bana rahe hain, then I'll learn and teach it to 9,011 families, which I'm responsible for. So what's the harm in learning from you? So then he told me that his business was sold in June 2020.
Right.
Which was almost the peak of the COVID.
Yeah.
So he got a reasonable amount of money in June 2020 when Nifty was 9,300. Nifty delivered 35% from that day when he invested, and he has got 27. So if passing mark is 35, because you'll at least have to do 35 if you're at least beating Nifty.
Because you're benchmarking it. Right.
So 27 in the context of a June 2020 investment is a ridiculously bad investment. But the same 27% return made when Nifty was at 18,000 and somebody made 27%, he's God. I would love to learn from him. So people generally look at absolute numbers. If my child came back from school and said, I got 32 marks, the next obvious question I would ask him is, out of how much? Is it out of 100 or 50? Right? I would not judge 32. I don't know if it's out of 100, I would be really upset. If it's out of 50, I would be relieved that my son is not the last in the class.
So, okay, so we've talked about benchmarking, we've talked about setting realistic targets. And I think to a certain extent, we've also talked about reasonable expectations for the returns that you will get in the investments that you make. We will talk about a few more rules of the mind, but we have to slip into a very quick break before that. So do stay tuned. We'll be talking about more rules of the mind, and then more importantly, we're going to talk about rules of the heart, because without those rules of the heart, those rules of the mind are not going to work. Do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Welcome back. This is Big Decisions, and we're talking about the rules of the mind and the rules of the heart that will help you get rich. We're in conversation with Feroz Aziz. Feroz, we've established a couple of rules. Let's talk about the next one. And you mentioned that 14%, which is a reasonable assumption to have, or a reasonable estimate to have to work with for your returns. But that's a blended thing. That's for your entire wealth, right?
Yes, that's for your entire wealth. You might have PPF, you might have real estate, all your wealth, which you're not consuming, other than the house you live in. Everything else has a purpose of growth. The aggregate return of all those assets should be 14%.
So how do you decide the combination of all of that? Because ultimately, I think, and this is where we try and get into the nitty-gritties of it, but it's hard to explain risk, right? So each asset class, and here we're talking about the likes of equity or fixed income, you mentioned fixed deposits, gold, real estate, various other things, all of them have a degree of risk associated with them. So how do you explain that?
Correct. I think the third rule is to develop a strategy.
Sure.
Strategy has different building blocks. Risk is one of the building blocks. And what is the proportion in each asset is one building block. What mutual funds will you buy will be another building block. So now coming to the risk part, risk is also easy to understand. If you define risk correctly, what happens to my money when worst happens? If you know that, then you have understood risk 80%. If 2008 kind of a situation were to happen again,
and you drop 30%.
What will be the value of my money? If you can compute that, which you can approximately, and if you are comfortable with living with that and you will still sleep that night, then you have understood risk correctly. So that's where comes the choosing the strategy. Understanding your risk is to simulate the worst possible days and internalizing that. And if you're not comfortable with that, change your strategy and choose another strategy which you can still sleep well. Any amount of money is not worth a bad night.
So, okay, so you've established and here you're talking about an asset allocation strategy, I would think, right?
Yes.
And deciding how much or what the proportion in each asset is. What comes after that? Because, and this is the tough part, right? Because how do you arrive at your strategy? Of course, you get advice from various people, but if you don't have access to that, how do you go about it?
See, I can tell you what strategy I follow. I have 55% in equity mutual funds, 10% in debt, and 35% in structured products. This is my strategy. Something like a hybrid. 35% is a little hybrid because everybody can't access structured product because the minimum amounts are large. So something in a hybrid, 10% in debt and 55% in equity mutual fund. This strategy, if I back test for 22 years and also front test, there are simulators, we'll not get there, you will get about a 14% kind of a return with this combination. If you're patient with it for 5-year periods.
Right.
That's the strategy. So this is the third rule. I've just told you what's my strategy for my
Fair point.
Right? Each one of them will have to dwell a little deeper.
And we'll discuss this on the show as well. So, okay, so establish your strategy. What's rule number 4?
Rule number 4 is don't get distracted, implement your strategy.
Okay.
See, when you're running a business also, like ARWL is a business, we are running, right? We have a certain strategy. When somebody else in your companions or your competitors, whatever you want to call them, do something else, if they do well, you might get tempted and have a FOMO. Am I missing out? You will have to put blinders and implement the decided strategy. That's a tough thing to do because investing world is very distracting and everybody has an opinion on investing, right? People might not have so much of an opinion on a lawyer's job, but on an investment job, people will have an opinion. यार तू Bitcoin क्यों नहीं खरीदता? Right? Bitcoin 70,000 पे जाएगा तो सब Bitcoin की बात करेंगे. अगर NASDAQ बहुत ऊपर चला जाएगा तो उसकी बात करेंगे. So people will distract you, don't get distracted.
Or is the uncle at the party saying that I bought land in 99 and see where it's at right now?
Absolutely.
Okay, so that's stick to your strategy, stick to your guns, and then what is rule number 5?
Rule number 5 is monitor. Right? You have to decide the frequency. I have decided my frequency of a 6-month monitoring of my portfolio. I might do a high frequency. If it's a beginner, at least a 1-year full review, like a health checkup is critical because you can't be a pilot. Of course, in aircrafts, there is autopilot. Doesn't mean that the pilot can keep sleeping, right? So you have to see whether you are on course and simple monitoring mechanisms have to be decided when you embark on this.
Could you elucidate on that briefly? If you're talking about very simple, I would think that if you have an overarching idea of the allocation towards equity and debt, if there is a deviation from that, that would entail correcting it at that moment.
Absolutely, Alex. Like last year, my mutual fund model portfolio went up 43%. So automatically, even if I started on 1st April with 55, that 55 outgrew the rest of the 45. So I have to bring it back and recalibrate it to 55, right? Which means I have to sell equity funds and buy a structure product or a debt fund. It's very difficult to do because equity is done so well, you don't feel tempted to sell.
But at the same time, if you make a formula, it becomes easier to do because you're not trusting your gut. Which comes to, I say trusting your gut, but trusting your heart, right? Because your heart sometimes tells you what your mind tells you not to do, right? So therefore, what are the rules of the mind? And we said at the start, without the rules of the heart and following these rules, the rules of the mind go out of the window.
Yes, rules of the mind are very difficult to follow unless you're very conscious about your heart. Like you said, heart and mind speak different languages and several times diametrically opposite languages. The mind of the fifth rule, which is to monitor and rebalance, which you just said, is very difficult to do it as a heart. Because when I meet people, when you have to reallocate money from an asset class which has done very well, sell that and buy something which has not done very well in the recent past, is very difficult heart-wise. And there is a name for it called a bias called recency bias.
Right.
You're going to be swayed by, your decision is going to be swayed by what has happened in the last 6 months, 1 year. Right? And that's where any stock which runs up, people go to buy it. Ideally, books will tell you, which is mind, more mind, will tell you buy low, sell high.
Yeah.
But the heart will make you do exactly the opposite. Now, let me give you some very stark data. Okay, and it's a very painful data for me. India, in the year FY21, equity mutual funds, Indian HNI sold close to 1,25,000 crores of equity mutual funds, sold it, when Nifty was averaging at 11,000. Ideally, that was the time, as per the mind, everybody should have been buying. It was a screaming buy, but India equity mutual funds, other than SIPs, lost 1,25,000 crores. So that's because the heart took over. When emotions are high, heart takes over. So that's what's called recency bias, and you have to be very careful about.
Any others?
The second thing which is definitely going to happen is not measuring. It's called the self-serving bias. You will always give more credit to yourself. When you're evaluating a mutual fund, okay, I met this gentleman, very large portfolio. The man says all mutual fund managers are duds, quote unquote.
Okay.
I said, 152 guys, all of them are idiots. I said, great.
That's probability is not very high, right?
Right, you can't pay all 152 guys, highest paid professionals in India, one of the highest paid professions. All of them are idiots is a very sweeping remark. So I said, okay, तो फिर आप किसको पैसे देते हो? मैं अपने खुद के manage करता हूँ. 153rd fund manager, he has become his own fund manager. So I asked him, how much have you beaten Nifty? He doesn't have the measurement, and he's accusing the 152 to not beat Nifty.
Right.
So then if you are the 153rd, should you at least not measure it?
Yeah.
So people will always give them more credit, and they will not be as answerable. That's called the self-serving bias.
And
the last one is to measure all of them in the same scale of measurement. See, real estate is, I have met so many HNIs. There's a guy who has 700 crores of real estate. Across so many properties, you can't even put it on an Excel sheet. You'll take time. Of course, you can put it on an Excel sheet. I was exaggerating. But he doesn't know the compounded return of one of his properties. And he tells me, my portfolio's compounded return should reach me third of every month. I said, for the financial assets, you want compounded return to be reported to you 12 times a year on the third. And on your physical assets, you have not measured it for the last 27 years. Measure it in compounded return. Nobody has measured real estate returns and compounded. So when I calculate a property bought in 1990 in Lodha, in Lokhandwala area, a 64 lakh rupee apartment has become 3.5 crores. The guy was so thrilled. I computed his compounded return, 7.3% return.
Right.
Worse off than Government of India bought. So always use the same unit of measurement.
Or yardstick, correct.
Yardstick. If I am measuring my weight in kgs and I'm comparing with Alex's weight, it has to be better in kg, not in pound.
Yeah.
Right? Both have to be the same scales of measurement. It's so ridiculous that the entire country never uses different scales of measurements for different asset classes and concludes where should the money, which is hard earned of 10, 20 years, be invested without even having the unit of measurement equal.
So 3 rules of the heart and 5 rules approximately of the mind. But Feroz, it's been an absolute pleasure having you on Big Decisions. Thank you so much. All right, so there you have it. We've discussed some rules that you should follow, but you know, nothing is guaranteed. There's a lot of it that is going to take work, and it's going to take time, and it's going to take iteration. But let us know what you think about these rules that we've discussed. and we've got lots more lined up in the coming weeks. Do stay tuned. This is NDTV Profit.
As voting day is at our doorstep, I want to take a moment to talk to you about the importance of voting. Every citizen has a right and an obligation to vote, and each one of us can shape the future of the country by exercising our votes. I'm going to be able to do that by signing this pledge, and you must do the same.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
And
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and stocks that have been buzzing on the back of higher volumes. I'm your host Mihika Barre and with me is Agam Vakil. But before we go to the stocks that we do have in focus today, Agam, how do markets look like?
Very good, in fact, Mihika. There's been a substantial improvement in the markets at the moment. In fact, if you look at the Nifty, it's up around 0.7%. Now, starting off in the day where we saw so much weakness, down by as much as 1%. We have seen a recovery of sorts, and in fact, at the moment, we're looking at that key index up by as much as 0.7%. And a lot of that strength has come in the last 15 minutes specifically, because until then, we were trending marginally in the green. But after then, we have seen a lot of improvement and a lot of short covering as well, based on what we have been observing. And this was perhaps on expected lines. There were traders out there who were suggesting and anticipating, an up move there coming through because of the kind of weakness that we've seen off late. And now that, there's been a little bit of play out as far as West Asia is concerned, both from Israel as well as Iran's point of view. And I reckon that at that point, traders may have taken that as a cue to close their short positions and perhaps, come back next week and look at things anew. At the moment, advances coming in, and in fact, the bank Nifty is up as well by as much as 1%. So there's recovery across the mid-cap and the small-cap indices is where we are looking at a little bit of slackness. Just a step behind, because they are not as much in the green. Mid-cap is marginally in the red, and the small cap is up by around 0.2%. All the action at the moment is with essentially the large caps, and we're starting to see a lot of traction towards the positive end. Now, let's consider the constituents of the Nifty and see where there is a pull and push out there, and I reckon that a lot of the gains, okay, there you have it. So that's essentially HDFC Bank providing a bulk of the weight on the upwards, and that's up as much as 2% as well, along with ICICI Bank, which is also up and about, and something like a Grasim and M&M are among others which are actually contributing to the up move there, among the top gainers on the Nifty 50. And on the losing end, we do have a little bit of weakness in Bajaj Auto. Of course, a little bit of reaction to earnings, though. We must remember that on the whole, well, it's largely profit-taking because of the kind of strength that Bajaj Auto has seen. Save for that, HCL Tech and Hero MotoCorp are also looking at a little bit of decline. But it does seem like there is a recovery of sorts in play at the moment, and a lot of short covering coming through in the last 15-20 minutes, Mahika.
Yes, thank you so much, Agam. So now let's look at the stocks that we do have in focus today on the back of higher volumes. We have something like a Kaveri Seeds, a Hitachi Energy India, a Vesuvius India, Tata Communications, KSB, and much more. But up first, we have Kaveri Seeds. Now, the stock has been gaining since the start of day to an intraday high of 10.8%. But we have Mahima joining us to give us some more insight about the company.
Right, Mika. So as you rightly mentioned, the stock is buzzing in trade today. The volumes are around 17 times its 30-day average, and the stock did touch an intraday high of almost 10.8%. Now, recently, Kaveri Seeds had announced its buyback, where it was a buyback of around 325 crores, and it was done at a premium of 9%, and 8% of this was paid up share capital and 4% was free reserves. Now, in terms of the product performance for Q3, Kaveri Seeds has seen cotton revenue increase by 6%, rice revenue increased by 8 to 9%. In terms of maize, they saw an increase of 5%. And in terms of vegetable seed, they saw a revenue increase of around 24%. Now, the management guidance, for the commentary that the management has given, they've said that the export revenue is expected around 100 crores in the next 3 to 4 years. The overall revenue is expected to reach around 2,000 crores by 2030, and from this 30% will be exports and 70% will be domestic. The non-cotton volumes are expected to contribute around 70%, and cotton volumes are expected to contribute around 30%, and the EBITDA margins are expected to grow by 2 to 3% in the near future. Now, in terms of stock performance, the stock has been under pressure. One month it's been, past 1 month the stock has been performing well, but before that it was under pressure. 1 month it's been up around 16%, 6 months it was up only 10%, and 1 year the stock has been up around 44%. So this is all we've got for Kaveri Seed so far.
Okay, Mahima, thank you so much for getting us that update on Kaveri Seed. Let's move on and talk about Vesuvius India. Now, Vesuvius India is one of those stocks which actually, where it's not as liquid, but when it does move on substantial volumes as well. Today, it's at around the 3,600 mark and up around 3.7%. Let's get in Varsha to tell us more about what's really happening behind the scenes here. Varsha.
Well,
Well, thanks Agam for that. So if you see the company's volume are trading over 3x of its 30-day average, while stock has seen an intraday high of almost 6%. Now this is on the back of company inaugurating a new plant. We'll have a look in a bit, but let's see what this company does. So this company is a part of UK-based Vesuvius Group, which is engaged in manufacturing and trading of refractory goods and providing services in relation to refractory products. Now what are refractory products is, for these refractory products are used in steel industries or cement and glass industry. So because steel is made at a very high temperature, a lot of heat is produced. So these refractory products are used in furnaces. So without these products, your furnaces get damaged. So this is basically the business model of this company. They manufacture refractory products. Now why the stock is buzzing is, they've inaugurated new mold flux manufacturing plant in Visakhapatnam, and the plant will meet increasing demand for the flux. Now flux is a component which is used in continuous casting process in steel industry. Now over the last couple of years, if you see, company has been making significant investments in India by expanding its capacity, and they're setting up three new greenfield manufacturing plant which will create an additional capacity of almost 250,000 tons per annum. And this new flux manufacturing plant in Visakhapatnam is first of 3 facilities which is expected to be operational in 2024. Now the main thing here is that they are increasing their investment plan from 500 crores to 1,000 crores. So this is one of the good things that is happening with the company, and we are seeing the stock is buzzing. Also lastly, if you see the stock performance for the company, last 1 year company has given almost 114% returns to its investor, while in last 6 months the returns have been around 5%. So this is all we have on VOVS India.
Okay, Varsha, thank you so much for getting us that quick update on Vesuvius India. In fact, a lot of ground covered there by Varsha as well. This is one to keep an eye on as well, because in the last 12 months, it's certainly done quite well. That's something that we are going to be watching out for. But, well, summers are here, and we're naturally looking at a lot of sales with respect to air conditioning. And Mika has one more stock on the radar in the same sector. Mika.
Yes. So we have Hitachi Energy India, which is in focus today. Now, if you look at the the charts in the day, it's been pretty volatile. 470 points. It fell as low as 3.12% at the start of the day, but then recovered to an intraday high of 2.55%, and actually hit a live high today at 8,500. Now volumes were over 2.2 times its 30-day average. Highest volumes at a price of 8,250, where sellers did outnumber the buyers. Now the stock is up 52% year to date and 1.7 times in the past year itself. And while there was no company specific trigger today, while the company does stand to gain from the upcoming power demand and the higher temperatures expected in the summer season, we did have a brokerage note, and that's Goldman Sachs, which has initiated a buy rating at a target price of 8,250, which the stock has now passed. Now what it says that it's a direct manufacturing play on India's energy transmission. Now Hitachi is one of the global leaders in high voltage equipment manufacturing, and actually Hitachi Energy India manufactures 80% of parents Hitachi Energy's global equipment portfolio, and that's a pretty big chunk. And the company is also set to benefit from Goldman Sachs' estimate of $105 billion of grid capex over the period of FY24 to FY32, and in this estimated capex, Hitachi's grid capex total addressable market would be around $50 billion. And additionally, the tailwinds from technology leadership as well as supply chain diversifications are set to benefit the company. Tailwinds like grid digitalization, the global transmission equipment shortage, as well as the global supply diversification theme that is currently taking place in the market. In terms of financials, the margin mix improvement could drive further upside, and Goldman forecasts an 84% earnings CAGR from FY23 to 26, which will mostly be driven by the order inflow uptick, which Hitachi Energy India has seen a 28% uptick, and the company is also seeing a 510 basis point margin expansion. And the only risk that it does mention is a delay or a slow pickup in the transmission projects coming forward, and also higher intensified competition. But good stock performance in this year past year nonetheless. But up next, we do have an IT company, which is Tata Communication. Now, it's intraday low of 6%. It's down in trade today. And we have Rucha joining us, telling us more about what's going on with the company.
Yes, hi Mika, as rightly stated, it touched an intraday low of 6% today, while the volumes were at 3.4x of its 30-day average. Now, Tata Communications reported its 4Q numbers on the 17th, while revenue was up 25%. There was a disappointment on the margin by 400 basis points, and net profit margin also went down sequentially by 1.6%. Although the largest segment, the data segment, crossed rupees 17,000 crore mark for the first time ever, implying a growth of 21.9% YOY in FY24. Now, what are the analysts saying on the street? There are 5 buys on the stock, 3 hold and 1 sell. The target price is 2,000 rupees approximately, with an implied upside of 14%.
Okay, Rucha, thank you so much for getting us that update on Tata Communications. Of course, we've had the numbers come in, very recently, and we've had a stock reaction. But today, if you actually go to see how things are panning out, we're looking at a decline around 5%. And that's not to speak and not to forget that it did in fact weaken even on the day of its earnings, where the earnings look pretty steady at the moment, but we are looking at, I reckon, a round of profit taking, and now it's at around 1,766 odd rupees. One to keep an eye on for now, but the real question is that, is there an opportunity in the long term, and in the long term, can we expect a little bit of a re-rating coming through based on their expectations of doubling their data revenue? That's something to keep an eye on. But let's move on and talk about KSB then. That's the other one which is on our radar. That's also up around 3%. Let's get in Anushi to tell us more about this one. Anushi.
So KSB is in focus today on account of higher volumes over here. Again, we are looking at a scenario of which there are no fundamental drivers driving this kind of stock performance we are seeing. If you have to look at the intraday high, that stands at about 4 to 5% over here, while the volumes traded in the 3 times its 30-day average. Now, the company has had quite a stellar year. If you have to look at its stock performance, about 26% of an upside in 1 month, while the stock has doubled in just this 1 year period itself. And overall company background over here, it is involved in the manufacturing of range of industrial and suction related high pressure pumps and valves. Also, current market cap, if you have to look at that, is in the 16,000 crore of range. So if you have to look at the last month, couple of order wins that they had recorded, which included a 267 crore for supply of pumps, along with a 63 crore of an order for 2,500 solar water pumping systems over here. Again, accounting for the orders that stood at hand, that stood at about 1,170 crore, which is in line with what they had recorded last year in December 23 as well, which stood at about 1,046 crore. Now, their top customers include Thermax Group, IG Sec Heavy Engineering, and Patil Engineering. So these are the 3 in higher in account of the mix that they make up. If you have to look at the Q3 performance, the revenue saw a decent growth of about 15%. It was the margins and the net profit that disappointed, with about 120 basis points of a decline in margins at 13.4%, while the net profit was down about 2%. So again, that is the whole scenario going on. Now on to what we are looking for in the terms of recent news. KSB board is meeting on April 26th to consider a stock split for the company. So this is all that is happening in KSB Limited.
Thank you so much, Anushi, for that update. But viewers, it's time to slip into a short break, but do stay tuned as we have lots more lined up on the other side.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers to come out, and those who are eligible, vote and exercise their choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing.
Welcome back, viewers, and you're watching Large Trades. Before we go on to the stocks we do have in focus today, let's just take a quick look at the markets. Well, the Nifty 50 is in the green, up about 0.7%. And when you look at the broader markets too, we have the Nifty Small Cap 250, which is in the green. However, the mid cap is trading in the red today. But up first, let's just look at what's gaining on the Nifty 50. We have Bajaj Finance, Bharti Airtel, and M&M that have more than 2.5%, are up 2.5% in trade today, while Infosys and HCL Tech and L&T are the ones that are dragging it down. However, the Nifty is in the green nonetheless. And when you look at the broader markets, I want to look at the Nifty Midcap 150 to be specific, which is in the red right now. And the ones that have been dragging it down are counters like Tata Communications, which we just spoke about. We have CRISIL as well as a Phoenix Mills, all down in the range of 3 to 5%. I also want to just mark some of the block deals that we do have in focus currently that just took place in the past 5 to 10 minutes or so. We had something like a Glenmark Pharma. We had HDFC Bank. Now, HDFC Bank saw a block deal of 0.05 million shares at a price of 1,521. It's up in trade right now, almost up 2%. We also and there were multiple block deals in HDFC Bank. In fact, we also had a block deal in Glenmark Pharma. When you talk about some of the companies that are moving in trade today, we have Castrol, which is down 2% from its day's highs, and a counter like a Nucleus Soft, which has lost over 2% in the last 10 minutes itself, at a price of 1,270. When you look at maybe, let's just take up a Nifty Oil and Gas, which has been a sector that has been in focus today. Now, the Nifty Oil and Gas, which will be right up on your screens right now, has been in focus today. It's down 0.15%. It saw extreme weakness in the start of day on the back of geopolitical tensions, where the Indian oil marketing companies like HPCL, BPCL or an IOCL went to an intraday low of 4%, but they have gained a bit in the red, but not as extreme losses that we did see at the start of the day. But I want to bring out all the sectoral indices right now to just see which ones are the top gainers currently. And we have the Nifty Bank and the metal index that is in strength. And well, we now move on to Timken, which has been, in focus today since the start of day. And we have Puneet joining us with more details on the same.
Yeah, thanks for that. So the stock did hit an intraday high of roughly 6.5%. and has paired gains post that. While there has been no major update to drive these particular the particular stock today, we did look at a few factors, the Q3 earnings as well as the commentary that the management had given after the third quarter. So for Q3 24, the company reported flat revenues as well as not much happening on the EBITDA as well as on the PAT front, just roughly 1 to 2% or roughly flat revenues coming in. While margins were also around 3.2% for the particular quarter. Now, the company has mentioned in the conference call that the rail market has been very robust for the company, which forms roughly 18% of its revenue. They have seen good demand in India, Brazil, as well as in North America. Now, do know that this is a bearings company, so a lot of its products and it goes into the railways as well as the automobiles. And they have said that the rail market in India is expected to do much better next year compared to financial year 24, which has been a lackluster year. Expectations of growth in the domestic railway business is key for the company going forward, while focus on the industry growth such as steel as well as cement and power generation is something that's a key monitorable. Now, the company's Bharuch plant is expected to start contributing meaningfully in the year 25-26, which will be financial year 26. So it is expecting a very small turnover from this in the year in FY25. That's going to be a key problem for the company, and we will see more commentary on this in the Q1 of FY25 and see what the company has to say. On the revenue mix, process industry as well as exports have been doing very well. So Brazil, as highlighted before, is one of the key markets for the company, and commentary post this Q4 will be key. Back to you.
All right. Well, Puneet, thank you so much for getting us that update on Timken. Again, one of those counters which not only just serves as something towards the auto sector, but the capital goods sector as well. And Timken has had its own share of gains too, as explained by Puneet. But let's move on and talk about Ask Automotive. Let's pull this one up as well. A counter that doesn't always move substantially, but today it is advancing in trade. And I'm going to get in Kanika to tell us a little more about what's buzzing behind this one. Kanika.
Right, Agam. So Ask Automotive is one of the largest manufacturers of brake shoe and advanced braking systems for two-wheeler OEMs in India. Now the stock is buzzing in trade today with an intraday high of almost 5.8% and its volumes trading at 2.2 times its 30-day average. Now the company had approved a capex spending of an odd rupees 220 crore to set up a new manufacturing facility in Karnataka, and the facility is targeted to be operationalized by Q4 2025. By Q4 FY25. Now, recently JM Financial had initiated coverage with a buy rating on the stock, and it has an upside of almost 18% as per the current market price, and it believes that the company is well positioned to continue its healthy growth momentum, and it expects its revenue EPS to grow at 14% to 29% CAGR respectively over FY24-26E. Now, this growth will primarily be driven by rising two-wheeler, three-wheeler electrification, strong momentum in non-auto exports, and expansion into the passenger vehicle segment. Also, there's a key monitorable, which is slowdown in electrification of domestic two-wheeler, three-wheelers over here.
So much, Kanika, for that update. Up next, as a part of NDTV Profit's special series on AI, we're covering ventures and startups doing definite work in the realm of artificial intelligence. This week, we're covering Vodafone, an emerging startup developing AI solutions for social good cause. Here's a special report.
Among a sea of artificial intelligence ventures in India that are aiming to monetize the pace and ease of cutting mundane tasks is an outlier. At Vodafone AI, the sole focus is on developing AI-based solutions for underserved communities in developing countries and completely not for profit.
Our goal is to use a technique where we actually experience and allow the people to experience AI in actual use. So a lot of our work tends to be directly on the field, working with people, working with the government.
To get a flavor of what exactly Shekhar means by Vodhafane's people-centric approach, we reached their offices in Delhi to get a demo of their AI agri-tech solution, Cotton Ace.
We have developed this solution, which is an AI-based early warning pest management detection, as well as it also, provide advisories to the farmers. After installing the application, farmer has to monitor with the screen. It usually take photographs, the farmers can see report and get the recommendation based on the economic threshold level of the pest. So once the AI model detects it and accepts it, and then accordingly it will generate advisory.
Vodafone AI has been able to make progress backed by a massive team working across the tech backbone, and also because of financial backing by the founder donor Vodafone Brothers, Google.org, and support from institutions such as the Bill and Melinda Gates Foundation. While Cotton Ace is just one example of Vodafone AI's work in agriculture, it has developed several solutions in healthcare and education as well, which should be the key focus areas of development in developing and underdeveloped countries. To really reach India's masses is possible only with public-private partnerships as well as intent-driven non-profit organizations such as Vodafone AI taking on the mantle and reaching crores of Indians in the next few years.
And with that, it's a wrap on this edition of Last Trades. And on the other side, we get you India Market Close. Stay tuned in.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy, and we fully support it.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
stock selection.
Thanks for tuning in to India Market Close, and you have to admit when you look at the intraday of the markets today that the numbers could have been a lot worse and they are just so much better. 133 points in the green for the Nifty. There is a risk premium being taken back on the geopolitical front, and which explains why we started off the way we did, and which was also better than what the implied open was suggesting, and where we are trading right now at the high point of the day. The highlight is the Nifty. Never mind what's happened to the mid-cap and the small-cap indices, they'll come up on your screen as well. But just the resilience that the Indian markets have shown today is pretty strong. Get up the mid-caps and the small-caps also. Down about 0.5% for the mid-cap space. They'll probably start moving around on Monday. Small-caps, flattish really, but the highlight is the Nifty, as I said. And pull up the heat map on the Nifty just to show you what's really moving in trade today, and then we'll of course talk about the recovery as well. So HDFC Bank being up 2% is your principal contributor. There is a call given by multiple people in the last 2 or 3 sessions on the channel of going long on HDFC Bank. That one is certainly piling on the weight. There is strength in Bajaj Finance, but more importantly Bharti Airtel, another 2% up for this one. It's had a really strong week, this one. Much as people have spoken about piling on into Vodafone, Bharti Airtel has come up smelling like roses really out of what's really happening to Vodafone, I presume. Bajaj Finserv, Bajaj Finance doing well. There is strength in Maruti. Wipro ahead of the numbers is up about a couple of percentage points, quite unlike what Infosys was doing ahead of the numbers, must say. So that's the long and short of what's really gained in the session today, including an ITC, Adani Port and HUL. So FMCG not doing too badly ahead of results next week. What's not done well? Some bit of stick for Bajaj Auto, though much better than what it was trading for a better part of the day. HCL Tech slightly under pressure. Autos per se have taken a bit of a back seat. So clearly, save for Infy, IT is doing well. Ahead of results, FMCG seems to be doing well, and a lot of high beta names and heavyweight names like HDFC Bank trading in the green. Not to take away from the fact that mid caps and small caps have specific movers, Tamanna, but the highlight is the resilience of the benchmark.
I would say it's astonishing considering the kind of bearish sentiment we were seeing at open, and perhaps some of those comments with Iran and Israel both trying to pull back has helped global markets and helped the mood. But in any case, you are seeing a market that is consistently trying to prop up and buy on dips. Not so much of a recovery on the small cap and the mid cap, but relatively yes. If you're seeing these indices in the green, then believe you me, it's much better than it could have been. Specific stocks that we're seeing really popping in trade today, Just Dial for a second consecutive day. It already responded positively to its numbers yesterday, but you're seeing it uptick once again despite a City note which is not that enthusiastic about Just Dial, mind you, but the stock about 4.5% up. Elecon Engineering is the other one. Numbers out, good numbers, about 50% plus, 52% up on the net profit year on year, but they've also announced a stock split of 1:2, so that's a stock in focus. 9% up this afternoon. Motilal Oswal has sent a message to the exchanges saying that they will be considering bonus shares. That stock has seen a smart up move. Now, Indus Towers has been in focus for various reasons. Of course, if you want to actually do the Vodafone play, then Indus Towers seems like a great bet. 2.5% up, but they're also, have announced that they've signed an MOU with NTPC. So that's why you've seen Indus Tower definitely in focus. On the downside or on the sell side, I would say Telecom continues to suffer. Second consecutive trading day in a row, Telecom is suffering 5% down. Spark again another 5% down. We should in fact pull up the chart of what's happening with Spark in the last 1 week if we can very quickly. I mean that stock is just completely plummeted day after day after day. It has been on the lower circuit. So we'll try and get you broader detail of what's been happening with Spark. But those are really some of the names that are standing out.
But as Tamanna and me said, that the story, whether you call it astonishing, whether you call it resilience or both or more, is what's happening to the benchmark indices. Nagaraj Shetty of HDFC Securities with us to talk about this and more. Nagaraj, good having you. Thanks for taking the time out. Are you? Good afternoon. Good afternoon, of course. Did this surprise you, the strength on the Nifty and the Sensex? And what does that mean for trades? Because this 22,000 on the call side was such a strong, high OI number. It would have been a difficult resistance to break, and we kind of done that.
Yeah, of course, rightly said, because the Nifty, we have seen a sharp decline after that phenomenal upside bounce from the lower levels. I'm expecting the pattern that has formed technically in today's session so far is encouraging for the bulls to make a comeback. I'm expecting the low of today around 21,770 odd levels is going to be a short-term bottom reversal, and upside momentum is likely to continue for the Nifty from here on, and 22,500, which is the next set of resistance, is going to be the short-term target. Today's pattern is almost now market need to close for the today to gauge the pattern, but that looks like a bullish piercing line pattern, which is a bottom reversal. I'm expecting Nifty to show some upside momentum from here onwards.
Okay, so how do you play that momentum, Nagaraj? Would you trade the index itself, or would you trade specific stocks?
Yeah, I have two stocks for this show, and even if anyone wants to trade in index, I think it is good to buy at this point of time. Any intraday dips towards the close 30, 40, 50 points dip in the Nifty is going to be a buy on dips opportunity certainly, and I'm expecting this short-term upside momentum to continue. I have two picks from the broader markets. Neeraj, we have seen some good upside momentum in the broader market. Broader markets have outperformed the benchmark Nifty recently, and this upside momentum is likely to continue in mid-cap and small-cap segments. I have a couple of stocks.
We seem to have lost that line with Nagaraj, and right at the point where you're saying, I have some stocks, and going to continue that sentence, but we'll bring him back and get that suspense out of the way. And the fact is that if you look at that intraday Nifty chart, it's really showing you what the story of the day has been. And time and again, Neeraj, I was looking at this quote from Devina Mehra. She tweeted out today saying that when the Russia-Ukraine war broke out, she stuck her neck out and said geopolitical factors have a sharp but short impact, and the recovery is quick. And we've seen that time and again, even through this. I'm not to say that everything's fine in the Middle East and it's over. I mean, that's a decades-old conflict. But the way you've seen markets just scrambling for any positive cue is telling you a lot today. I think definitely you will see that, position being built in ahead of big numbers. I think the focus, once this is out of the way, moves to the big numbers, doesn't it?
Yeah. And as you were saying yesterday, Tamanna, thus far, save for IT, which was expected to not be that great, the numbers haven't really disappointed, and it'll be imperative upon some of the consumer-facing companies and some of the economy-facing companies to come out with good numbers. So I think we'll watch out for that. But let's wait and watch. It's a packed week next week, by the way. So what trades you take today have a big impact or big bearing on what happens the whole of next week for you, considering that it's an event-heavy week with a lot of results, particularly on the consumption side, from HUL to Tata Consumer. 3 or 4 Nifty names and some others come out with numbers. So I think it's going to be a very, very interesting week for sure.
Even some of the smaller companies, we were talking about an Telecom. That's a strong set of numbers on the face of it, an Telecom Engineering. And of course, you're seeing that spike also because of the stock split, etc. But solid numbers coming in here. Even a Just Dial, second day on a trot. You have the sense that Q4 has largely been good. It's largely been positive, of course, for a few spots. I would be very keen to know what your consumer companies and your FMCG companies are doing next week, because then that's the big question, isn't it? Is this still a K-shaped recovery, or what exactly is happening here? Well, we've got Nagaraj Shetty back on the line. Nagaraj, can you hear me?
Yes, I can hear you.
Okay, so we left off on a cliffhanger. Basically, when your audio went out, you were talking about, I think, the large cap companies that you would buy in the market today. Let's hear your top picks in any case.
Yeah, I'll continue that mid caps and small caps along with the large caps are outperforming in today's session. I have 2 picks from the mid and large cap segment. First one is Durochem. Chartically, if you look at the fluorochem, has been in a consolidation mode over the last couple of sessions after showing a sharp up move in the previous week. Currently placed at the resistance of around 37.50 levels. I'm expecting a decisive upside breakout of this resistance in the near term. One can look to buy around current market around 36.12. The target would be around 37.50 and 3500 is going to be the stop loss. The next one is Escorts. We have seen Escort was showing a high volatility recently, and it has bounced back sharply from the lower levels in today's session. Currently placed to move above the consolidation around 3130 odd levels. I'm expecting this to move up further. One can look to buy at current market, which is around 3131 for the stocks, and 3300 is going to be the upside target. One can place a stop loss at 3000.
Nagaraj, sorry, we missed your first stock. What was the first stock and what are the levels thereof?
Yeah. First stock was the fluorochemicals, Gujarat Fluorochemicals.
Gujarat
currently trading around 3610 levels.
Okay, let's pull up Gujarat Fluorochem. That's the other one. And there, Nagaraj, you have buy with a target of?
Yeah, buy with the target of 3750, and one can place a stop loss at 3500.
Okay, 3750, stop loss of 3500. Point noted. Nagaraj, thanks for that. Stay on, so much more to talk about. The stock of the day, though now on hindsight is just about 1.5% lower, so may not have been. But otherwise, for the better part of the day, was Bajaj Auto or is Bajaj Auto. The company reported numbers. There's some key takeaways of the con call as well. And my colleague Puneet joins in to give us a snapshot of some of the key statements that came out of the investor call. Puneet, good afternoon.
Hi Neeraj, good afternoon. So as you rightly said, really strong earnings from Bajaj Auto. Revenue upwards of 29% growth compared to last year, while EBITDA and PAT grew roughly around 30 to 34%. Now the management also for financial year 24, highest ever revenue, EBITDA, PAT, KTM volumes, Triumph volumes, you name it, it was breaking those records. Now we just looked at a few data points that the company had given. Now for three-wheeler specifically, the industry has seen big growth in the last year, up 54%. The management has guided that it won't be such a big growth compared to this financial year, but is expecting positive momentum going forward. Do note that in the CNG three-wheelers, it has an 88% market share, so a really strong player in the three-wheelers and is expecting good growth there as well. Now, on market share, the company said that above the 125cc, which is roughly like the 75% of all vehicles sold by Bajaj, they have a 27% market share, up from roughly 21% last year, and now is the number 2 player there, just 2% below the number 1 player. While also the one key important update was that it has received PLI certificates for all its three-wheelers as well as its two-wheelers. Now this was key for it to get unit level economics right, and the management also mentioned that for three-wheelers it will achieve benefits of this PLI, which will lead to profitability, but for two-wheelers it is still some time to go to get the unit level profitability even after these PLI benefits have kicked in. On capital infusion, they have invested roughly 2,250 crores. Well, it has got approval to invest this over the next few months in a phased manner into Bajaj Auto Credit. Now, this is the financing arm of the company. Do know that earlier on that Bajaj Finance had said that they will be looking at to tie up with other players as well. So Bajaj had taken the call to start investing into this and helping finance. A key data point that the company gave: 75% of all two-wheelers sold are financed, and out of that, this 70% is done by Bajaj Finance itself. So of course that the company had to take a step forward, and they have given that update of 2,250 crores of investments. And finally, what to look forward to. The company said that it had 9 launches in FY24, and it is expecting 6 more launches in just the next 3 to 4 months, while it is also expected to launch the world's first CNG motorcycle in the month of June. It is expecting the biggest Pulsar to launch in the next few months, along with the biggest KTM as well. So for bike enthusiasts, this is a great time, as well as increasing the Chetak presence from roughly 200 stores to 600 stores. It's sold roughly 1 lakh scooters this year, while Triumph will also be scaled up to 150 stores. One key data point which is very interesting is that the quadricycle Qute will now be exported to markets like Egypt, where they have banned the three-wheelers. So just some excitement there coming on that particular vehicle as well. But yeah, overall, really good set of numbers for Bajaj Auto. Brokerages have been decently positive as well. Back to you.
Yeah, we are seeing a bit of selling pressure because remember the stock price had run up as well. So are these numbers priced in is the question. Thank you for that, Puneet, and for that analysis. Let's just listen into what Bajaj Auto's Rakesh Sharma said when he spoke with us today. He talked about the growth drivers for the company.
If I have to sort of single out a couple of things which have driven this record performance, the first is really the progress we have made in the upper half of the motorcycle industry, which is the 125cc plus segment. Here, our flagship brand is Pulsar. We've had a slew of launches over the last 6-7 months. And I must say that all of them have been accepted very well in the market. So we have now almost 18 models which are spanning the entire top half of the industry.
Nagaraj, wanted to know your take on Bajaj Auto and if you like anything else in the two-wheeler or four-wheeler pack. But let's start with Bajaj Auto. Numbers are good fundamentally. The question is it overvalued? What are the charts telling you?
Long-term charts are still positive, continuously moving up. Higher tops and higher bottoms is visible on the chartically and currently showing consolidation pattern. I'm not expecting any bigger decline from here onwards. Around 8650, 8700 is going to be the immediate support for the stock, and I'm expecting eventually the stock would move up in the near term. At the higher levels, around 9450, 9500 is going to be the next resistance for the stock.
We'll take a very quick break right now at this point, but just a quick look at what markets are doing before we get into that break. And I must say it's looking fairly decent here, 22,120 levels and above right now. On the Nifty, Bank Nifty 0.75% up as well. IT is the one that's lagging, sulking possibly because of Infosys. Very quick break, but on the other side, we're talking with the M&M Forgings and a lot more coming up. Stay tuned.
As voting day is at our doorstep, I want to take a moment to talk to you about the importance of voting. Every citizen has a right and an obligation to vote, and each one of us can shape the future of the country by exercising our votes. I'm going to be able to do that by signing this pledge, and you must do the same.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We're back with India Market Close right here on NDTV Profit. A lot of conversation around global PMIs moving up, as a result of which the belief might be that because manufacturing activity might pick up, that CV demand in general, US, Europe, some parts of Asia, India might pick up, which in turn has an impact on forging companies. It might be interesting to get in a view about this from Mr. Vidyashankar Krishnan. He's Chairman and Managing Director of Forgings. The stock is up 7% today, has been active for the last few days. Mr. Krishnan, great having you. Thanks for taking the time out.
Hi, Neeraj. Nice to be here.
Yeah, no, lovely having you. I remember a conversation some time back wherein we had spoken about replacement demand in Europe being strong enough to keep forging demand steady for 12 to 18 months. I'm adding a layer of rising PMIs, rising factory activity, and possibly therefore higher CV demand as well. Are you sensing that? Is business picking up or looking strong globally?
I'd like to split the global market into kind of 4 areas. The first, let's talk about the US. North American truck sales expect to be very strong in 2024, right up to middle or end of 2025. So that's a real positive market. South America is also doing pretty strong on the CV side. Europe is kind of moribund. Partly, I would say, the long distance traffic between Russia and Western Europe has crawled to nothing. So you see that Europe is doing sluggish. India is right now, we have had a very, very lean fourth quarter, almost, I would say, non-existent fourth quarter like. But the first quarter of this year is reasonably strong on the CV side because bus demand is pretty strong in India, right across the country, across manufacturers, probably due to the missed COVID years, and the replacements are catching up now.
So, Mr. Krishnan, without getting into what you will do for the quarter, because you will be in a silent period, just trying to understand all of these factors put together, what's the extent of growth that one can expect, let's say, year on year for, let's say, FY25? Do you expect a moderate 10-15% uptick, or do you expect it to be even stronger?
See, this growth rate depends upon each player. And one is the overall trend of the market, whether it goes up or goes down. And we would have to be modulated by the market. The other is that what other new products are we launching across markets, and the forging industry is not all just a CV play, right? So about all the serious players, 80% or so is CV dependent. Take your pick, 60 to 80%. But the rest of it is also pass car, tractors, and so on. So there is some good variety over there.
Mr. Krishnan, good afternoon. Tamanna here, and great to speak with you. Since the context is positive, you've had construction activity pick up, you've had manufacturing pick up, and obviously CVs have also been doing well. I just want to get a sense of what this quarter is looking like for you. I know it's your silent period, etc. But are you seeing a positive trend overall and looking like you will hit all your margins which you have guided?
Overall, I would say first quarter is pretty positive.
Okay, that was brief.
I can talk about the first quarter. That's not an issue. It's about the previous quarter. That's a silent period. So the first quarter is reasonably positive.
Okay. Okay.
Considering that that the bus demand in India is picking up.
Yeah.
Has picked up, not just is picking up, has picked up.
Right.
So considerably. And some of our customers are talking about their defense forays coming in very strong. So all told, I would say the first quarter is...
sector are you seeing firing? What sector are you seeing firing the most? Is it commercial vehicle? Is it defense you mentioned? Or can you just give us a sense of what are the areas that are firing?
Defense has gone through the roof, but defense as a percentage of the pack is a very small piece. So defense can't contribute too much to the top, the top line. Right. But it's moving forward very, very consistently, and Q1 is slated to jump for us.
Okay, so that's
through our customers, not direct defense. It's through our customers.
Yeah, no, of course, of course. I just want to get a sense, now that we are in election season, you're going to have a new government, possibly policy continuity, etc. And a lot of schemes have been announced. For example, the PM e-bus Seva, there's going to be a fleet of electric buses, more move on public transport, etc. Does that augur well for you, Mr. Krishnan?
Yeah, it augurs well for us because we supply to largely, right now our sales to the CV market is on the axle side. So we are inured to the EV penetration in the CV market in India. So that's not going to have a negative impact on us. And in any case, if you see, EV buses are so highly priced that it's going to be largely on a seeding basis, get public opinion around, and then move forward. It's not going to be, come in and then take over the market all on one day.
So with, say, a Musk coming next week, all the focus is on EV. I just wanted to get your sense of what this means for the industry and for MM Forgings. I think important point that you made there, you're immune to, the EVification also of the space. So good tidings in that sense?
Yeah, Tesla coming here is definitely a good sign for the auto market in India in general. Let's face it, Rona, the auto market is, the pass car market particularly, is going to be seeing a lot of volatility because of EV penetration and the mix of fuels towards green. So we have battery EVs, we have fuel cell EVs that are not so very popular right now, but possibly in design and test labs. And then we have hydrogen combustion engines coming up. The penetration of all these things is going to make a very, very curious and interesting mix of powertrains in the months and years to come.
Mr. Krishnan, one final question. When I see how well you've done post FY21, you can ignore the 2 COVID years, but the growth in operational metrics, in revenues, etc., has been very, very strong. Do you expect such a pace can continue? I mean, the TTM 12-month numbers also almost as steady as FY23 was over FY22. Do you expect this pace of growth to continue on a higher base?
I would expect growth to continue. See, we've grown from 500 crores around pre-COVID years and to around 1,500 plus in the last couple of years. So we expect strong growth in the months and years to come. But being a tier 2 or a tier 1 player, depending upon the customer, we are naturally, we take the form of or the speed that our customers run at. And therefore, we see that this will be subject to overall market conditions. Subject to that, we see reasonable strong growth in the next couple of years for sure.
I'm just stretching it. Last question. I'm just stretching it. One last question. Reasonable strong growth ranges from 10% to 99%, even if it's double digits. So just trying to get some sense.
Let's say something in the region of around upper teens.
Upper teens.
As CAGR.
Yeah, fair call. Okay, Mr. Krishnan, wish you all the best. And when your numbers do come out, we'll look forward to talking to you again.
Fantastic. Thank you, Neeraj and Tamil Nadu.
All right. That's Forgings. Not quite impacted by the EVification, as he said, but expect upper teens growth. And it's interesting, Tamanna, that you look at the pure forging companies, because Bharat Forge is now anything but a forging company, but a Happy Forging, MM Forging, etc. Just the differential valuation differential that exists is so stark that sometimes it doesn't surprise when stocks suddenly wake out of a deep slumber and just suddenly spike up, as MM Forging seems to have done this week. I mean, 1 month return 24%, 21%, 7-day return 21%.
Wow.
The last 2 days, it's just had a very big spike.
I think some big investors also perhaps
very likely,
coming in, and that would also have an interesting view. But what was the good takeaway is, and I thought interesting takeaway, of course, small part of their revenue, but the way he's described the defense portion just zooming up. And that's a bigger theme to actually explore. Make in India defense, what companies it impacts, and the ancillaries it impacts as well. So a lot to unpack there.
Yeah. Nagaraj, before we take that break, a quick word on forgings. The last 2 or 3 days has seen a bit of a spike. Can it do more, or is the juice out already?
Yeah, it has moved up quite well. 23% up move in a week is quite a strong move. And we have seen this stock has moved within a broader range of 850 to 1050, 1060 level in the past as well. And whenever the stock has reached the 1060, 70 level, it has witnessed a reasonable downward correction. I'm expecting some consolidation is likely to occur from here onwards, because it has moved up swiftly from the lower levels. Small range movement or a consolidation or a small dip, 1000 towards the 1000 or 980 is expected in the near term.
All right, thank you for that, Nagaraj. Just before you go, are there any BTST calls that you want to add? BTS Monday, I suppose, but any calls that you want to add? Because because this is also going to be a weekend which is a little stressful in terms of you don't know what's going to happen geopolitically in the next 2 days. Is there anything that you would bet on?
Yeah, I'm continuing with the same call I mentioned. Gujarat Fluorochemicals technically looking very strong, and it has shown a resilient move during this volatile broader market, even benchmark Nifty, as well as the Escort, which has given a strong upside momentum in the short term. So both the stocks are looking positive with the same target and stop loss.
So sticking to those calls. Thank you so much, Nagaraj. Always great to have you on the show. We'll take a very quick break, but on the other side, we're getting you a preview into HDFC Bank ahead of its Q4 numbers and the latest from the F&O side of things. Stay tuned.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers, to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
All right, welcome back. It's feeling like TGIF a little bit, considering that it was quite a somber morning and a fear-filled morning. Things have improved on the Nifty as well. Just quickly pull up and look at what the intraday chart is looking like. Agam is joining us as well. Agam, that optimism can be seen very clearly, isn't it?
I'm sure a lot of bulls are heaving a sigh of relief. They've finally got what they wanted, but they've had to wait for a very long week. And this one was a one with a holiday. A lot of weakness earlier on has now been covered. Of course, there were some shots into the system which are now unwinding, which is explained by the unwinding of a decline of around nearly 6.5% in the open interest as far as the Nifty futures go. The Bank Nifty futures, again, that's where we did see a lot of traction coming in, up 1% and a decline of 10% in open interest. Short covering seen there as well. As we move into another week, another very volatile trading week, or at least that's what the expectation is. Well, this is, of course, in terms of change in OI. Naturally, a lot of traders took this as an opportunity to go and sell puts, which is why the red bars are a lot higher as compared to the green bars. Red bars, of course, are the ones where we seen a lot of put writing coming through around those strikes. And moving on to your overall open interest distribution picture, it seems at the moment that participants are betting against the Nifty closing below 22,000 in the upcoming week expiry, which is well, based on the max OI that we have in the 22,000 put. On the higher end, of course, we're going to continue to see changes as far as your call max OI is concerned, but for now it stays with 22,500. Let's move on and talk about stocks as well. Well, shorts for M&M Financial, L&T Tech, Bajaj Auto, and IGL and Syngene International, on the other hand, looking at longs. And among stocks which are seeing unwinding, we have long unwinding for Exide, Aurobindo Pharma, TCS, along with Gujarat Gas. Bharti Airtel, on the other hand, looking at about a short covering. Mixed market, but it does seem like we're ending this truncated week on a positive note, and I reckon that will be something that bulls will take with both hands.
All right, definitely. The fact that you're ending on a positive note is something that will be seen, and I think your bank's financials leading that tree. Deepan Mehta is joining us now. He's founder and director of Elixir Equities. Brijesh of Retail Research IDBI Cap is also with us. Brijesh Ale, I hope I'm saying it correctly. Please tell me if I'm wrong. Is also joining us now on the show. Welcome to both of you. Deepan, let me begin with your take on the Bank Nifty and also on HDFC Bank. We're going to be seeing those numbers coming up. We'll have a preview shortly from my colleague Vishwanath Nair, but I just want to understand how you're feeling about the banking space and an HDFC Bank right now.
Yeah, good afternoon, Tamanna, and thank you for having me on your show. I think we are positive on HDFC Bank. The Q4 update was very optimistic, and maybe the bank has turned the corner as far as its performance is concerned. At least the stock price seems to have found a bottom and is gradually moving up from there. Generally, if you're positive on the Indian economy and corporate earnings, and so many industries are doing well, like real estate, capital goods, and automobiles, then demand for credit will be strong. And as of now, the NPA cycle hasn't turned negative. So keeping that in mind, we are positive on banks and Bank Nifty, and also particularly positive on HDFC Bank and other peer group banks, which have underperformed for the last so many years or so. And such underperformance cannot last forever. It has to reverse, because at the end of the day, these are essentially growth companies with very good earnings visibility as well.
What about Wipro? We saw Infosys get the brunt of it, I suppose, and a bit of recovery, I think, from its lowest levels. Wipro is expected, and broadly, the street's not expecting much. How would you look at a Wipro right now, Deepan, and the IT results that you've seen so far?
Well, I think both Infosys and TCS were not that great. And even the commentary coming from the management was not as optimistic as we expected it to be. I think there is some more stagnancy in corporate earnings of tech companies for maybe 2 or 3 more quarters. And then let us see how the tech spending picks up globally. It's also not very clear whether this AI and related generative AI technologies, how much they're going to contribute to higher tech spendings. So looking at the entire picture and the way geopolitics is playing out, as also the fact that US economy, the Fed is just not looking at reducing interest rates, so that may have a pressure on US economy, and that may affect tech spends as well. So the picture is not that clear at this point of time. So let's just wait and watch. In any case, companies which are growing at 1 or 2% quarter on quarter will never really interest investors who are looking for an alpha in their portfolios, and that certainly doesn't seem to be provided by large cap software shares at this point of time.
Okay, well, so that's HDFC Bank and Wipro. And speaking of HDFC Bank, before we get in Brijesh's view out there, let me get in our banking editor Vishwanath Nair to tell us what is it that would be the key monitorables for HDFC Bank as they report the numbers tomorrow. Vishy, what are you watching out for?
Right, Neeraj. So it's all about the deposits. Now, at the end of the day, HDFC Bank did suffer during the last quarter, the December quarter, because of their deposit number. It didn't grow as per what the market was largely expecting. And now, when you look at for the March quarter, the provisional numbers that the bank has put out, there are signs of improvement. Deposits have risen about 7.5% on a quarter-on-quarter basis, compared to a loan growth of about 1.6% QOQ. So things are looking better, even though that boost on that 7.5% is coming from the wholesale deposit portfolio, something that the bank had said previously that they were very price sensitive and they don't want to be in the pricing game, but we need to see how that weighs on the net interest margin. Now, as far as the street expectations go, net profit is estimated about 17,900 to 18,000 odd crore during the January-March quarter. The net interest income is going to be largely stable, flat quarter on quarter, simply because advances are not really growing that fast. And on the net interest margin side, we are still expecting some contraction, about 10 bips odd of contraction that is expected on the NIM side. We need to see how the management is guiding for the next financial year and FY25, what exactly is going to happen, because that advances growth being slower may look good for now, but eventually as the system starts to gear up, things may not look so good for HDFC Bank later on.
All right, so those are the concerns as far as HDFC Bank is concerned. Thank you for that, Vishy. Brijesh, any take on an HDFC Bank?
I believe there has been a recovery in the HDFC Bank. So and the 50-day moving average is at 1550. So my sense, my understanding is positive. I think it can go back to 1600 levels over the next couple of days. So view remains positive. So somebody wants to take a risk, I think should take it's better taking instead of taking a risk, I think doing a long straddle, taking the call and put of the same strike price of 1530 would be more advisable from the overnight positional point of view.
Okay. HDFC Bank, and it's all about HDFC Bank really. If you look at the contributors list, really, I mean, what's happening to the Nifty, a part of it is being led by HDFC Bank. Dipan, I know you gave an answer on this one, but I just want to ask this again. If HDFC Bank manages to surprise on the upside, on deposits, on LDR, on a couple of other factors, would you be tempted to go out and invest into HDFC Bank, or would you believe there are better banks out there to invest in?
No, I think depends on the risk appetite of the investor. So if you don't have HDFC Bank in your portfolio, and there are a few portfolios which don't have HDFC Bank, and you have a risk-averse kind of temperament, then I think this is a good time to tank up on HDFC Bank. It will be a steady performer over the next several years or so. And I suspect over the longer run, it will certainly match the returns of the Sensex and Nifty and even provide some alpha over there. So yes, I think positive on HDFC Bank, but one cannot get overboard or overweight in that particular counter. And one needs to keep a good balance between HDFC Bank, other banking stocks, and the rest of your portfolio.
By the way, just pull up that, just before we get into the other big story, just pull up the contributors list right now. And I just want to make that point. If you leave out HDFC Bank, which is 63 points, yes, you shave off a significant part of the gain on the Nifty, but it'd still be in the green. So yes, it's HDFC Bank largely, but a lot of others are participating. Airtel a case in point, ICICI Bank a case in point. The only thing which is not participating, Tamanna, is autos. It's quite interesting that it's not doing that ahead of the big visit.
Oh, absolutely. I think I don't know if it's great news for the auto companies ahead of the big visit. And the big visit we're talking about is Elon Musk, expected to visit India over the next week. Monday onwards, we will be seeing him there. Remember, just talking about auto companies, a few years ago, when Musk first wanted to come to India, it was our own OEMs who were all up in arms that, don't let him come, please encourage Make in India. Well, he is definitely set to come here. Tushar is tracking all things Musk. Tushar, you're on the Musk beat for the next couple of days. We've been coming up with corny names of how to welcome Musk to India. But tell us what we know so far. What is he going to do here? How long is he here for? Where is he going? And who is he meeting?
So thank you for that, Tamanna. So Elon Musk is essentially coming to India with the promise of cars, internet from the skies, as well as space technology, if you want to have it. So his trip to India will be for 2 days, spread over 20th to 22nd, the week of the 22nd, for 48 hours. Essentially, he'll begin the trip by meeting Prime Minister Narendra Modi in New Delhi, following which he's expected to make an announcement of Tesla's investment plans in India. So what is exactly on the agenda? First of all, Tesla's India plans. Musk is expected to unveil plans to invest about $2 to $3 billion for a Tesla plant in India. Is also plans to export from the country. So essentially, location is important. The 3 likely locations, what the reports are saying so far, are Gujarat, Maharashtra, and Tamil Nadu, all of which have access to a port because they're coastal states, as well as well-developed automotive hubs. India, to bring in Tesla, India has actually tweaked its EV policy, which reduces the import duty on cars, electric cars, to 15% from 70 to 100% earlier. That was actually the sticking point for Tesla to enter India, and it was actually lobbying with New Delhi to reduce this import duty on electric cars. That now has happened, so we now have Musk coming in. Tesla already is manufacturing, as we know, right-hand drive cars at its plant in Berlin. Now, this is specifically for the India market, so these cars will eventually come to India. A made in India Tesla car, while Tesla has ruled out that it is going to make a cheaper car, a made in India Tesla may not be that far-flung an expectation. It may just come out to be about rupees 25 lakh, that's what, rupees $20,000 or some such. There's Indian automakers are unlikely to be immediately impacted by these companies, the likes of Tata Motors, who's the market leader in the electric car space, or Mahindra & Mahindra, or Maruti Suzuki. But it will be a big development for the auto auxiliaries in Samvardhana Motherson Sumi, Sansera, RK Forgings, Unavanda, Sona Comstar. All of these can benefit from the localization angle of the EV policy. Remember, anybody who's setting up a plant in India with an investment of $500 million has to achieve 50% localization in 5 years. So here's where all the auto auxiliaries will step in. Tesla also is reportedly in tie-up with Tata Electronics to make components for its locally made cars. So that's the cars angle. In terms of the Starlink portfolio of Elon Musk, Starlink is also being in discussions with the Indian government to enter the market. Remember, it's a market dominated by Airtel and Reliance Jio, both of whom also have access to, have received approvals for satellite internet, but they don't have the spectrum yet. So we can now see a battle between Starlink, Airtel OneWeb, and Reliance Jio. The third agenda can be the space tech space. He's supposedly going to meet local startups, space startups such as Dhruva Space, Pixel, Skyroot, Digantra, and Anukul when he is here. In precursor to his visit, India has actually tweaked its FDI policy for the space sector ahead of his visit. Tamanna.
All right. We're going to be, of course, tracking all things Musk over the next few days and see what really comes out of it. It's interesting. Tesla's India entry is being talked about at a time when they are having to let go of people worldwide. Their sales numbers are not looking that great, but then, of course, India is that new frontier. How much a Tesla will work here is a different story altogether, but definitely an up for the entire ecosystem. Wondering if Deepan and Brijesh want to come in. Deepan, first on autos, and I'll start with Bajaj Auto. Before we get to a Tesla, let's talk about, Hamara Bajaj. Good numbers, but the streets responded by saying, let's, sell off now and book some profits. How do you look at a Bajaj Auto?
I think there's a sell-on news kind of syndrome playing out over here. And this will repeat itself in a lot of other auto shares. Last few months, auto shares have been rallying. Last few weeks, more so on account of good quarterly numbers. Bajaj Auto already has reported a great set of numbers. And now going forward, I think one cannot expect the same kind of growth rates. Industry, they say, is expected to grow by 7-8% or so. And to a large extent, rising average selling prices have also got discounted. There could be some pressure on operating profit margins on account of higher raw material costs as well. So I think it's going to get a bit tough for auto companies, and what they reported for last 3-4 quarters. Certainly you will see some kind of slowdown taking place over there. Now that order book positions also have dwindled because of better supplies, and valuations are not cheap anymore for the auto sector, having seen such kind of a rally. So from that point of view, our view on auto and Bajaj Auto in particular is neutral. And at best, they will give returns in line with the Sensex and Nifty.
And just to take that conversation forward that we were having with Tushar a couple of minutes ago, Deepan, on, you've had a clutch of auto anchs really jump up with the anticipation of what a Tesla in India means, who could get some work here because they have to make in India, others will also come in. Any take there or anything you're liking in that auto anch space?
Well, Taman, I think we've been positive on companies like Minda Corp, Minda Industries, Varroc Engineering, Endurance Technologies, and most importantly, Sona BLW. But Sona BLW remains very, very expensive. It's kind of an aspirational stock that whenever valuations are at reasonable levels, one could look at buying into that company. So these are the companies, I think, which generally benefit from A, exports, B, there could be tier 1 suppliers to Tesla or any new player coming into India. Mind you, BYD also has entered India. So it could be them or some of the existing OEMs which are ramping up their EV space for domestic and export market. And also, I think these companies have got products which don't get impacted so much because of the shift to electrification in the transportation sector. So yes, one of the ways to play this entire EV investment trend could be through these companies which I just named. But as I said, I think, we are getting into an earnings season. There could be a lot of stock-specific volatility, could be some disappointments also as far as these auto ancillaries are concerned. So just wait and watch, let this earnings season play out, and then take a call on any auto ancillary or auto OEM for that matter.
Okay. Well, actually, on that auto, Brijesh, any thoughts here? Some of the auto stocks have done well. We were talking to Forgings earlier, Ramakrishna Forging, some others. Any of the other OEMs? Is there a thought? Is there a trade?
So I think from the auto space, there are two picks, which I believe it is going to see some good upside momentum. One would be the Escorts, which has been the favorite in like today when the market was correcting from the start of the morning. This was one which was picking up the momentum. So structure for the Escorts from the from the weekly and monthly perspective is quite positive. I think we should be talking of another 200, 250 points plus more on the Escorts. So I believe somebody wants to take a long position with today's low as a stop loss. I think they should be taking a long trade in the Escorts. Secondly, if you watch Eicher Motors, this is a little bit of heavy stock, but then this never corrected with the market, and there was a good amount of breakout during the start of April month. It's a very strong breakout which we have seen, and I think in times to come, this Eicher Motors can easily go back to 5,000 plus level. It will a little bit of a longer time frame, but then definitely both these stocks, even if the market corrects, even if the auto space corrects, I see very limited downside in this particular stock. So both remains the very strong buy trade setup, Escorts and Eicher Motors.
Okay. And a BTST from you, Brijesh, or an STBT as the case may be?
So in that case, I think Jindal Steel is something which in the last 15-20 minutes has picked up the volume. So currently it is trading at 928. So I believe we will see some 15-20 points move by Monday. Until and unless we don't see any major gap down in the market, I am pretty confident that this should work. So Jindal Steel at current level with the stop loss of 915, we can talk of 950 levels on the higher side, 950.
Okay. Brijesh, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your perspective. Really appreciate your time. Dipan, just finally, very quickly, since metals have come up, are you constructive metals currently or are you avoiding them?
I think, as I said, we are cautious on the market and therefore don't want to look at anything in, that enthusiastically at this point of time, wait for the earnings season. But yes, there are some very, I would say, influential voices which feel that we could be entering into a commodity super cycle, considering the way gold and crude oil has rallied. So it's certainly possible for metal stocks and metal prices to move up. But then, one needs to be a bit selective which stocks to buy. And when you look at the entire spectrum, apart from Vedanta, the steel companies, are still quite expensive on a historical basis, what the valuations were. And then there are the PSUs like, say, NBFC and Steel Authority, which continue to disappoint when it comes to numbers. So it's an evolving situation, and we just want to stay put for the time being.
Anything on your shopping list at all, Deepan?
No, Tamanna.
Nothing. Not even in HDFC if numbers are good.
The only thing on the shopping list is a pizza when you want to watch IPL. That's all.
So then Zomato, maybe. All right. On that note, TGIF, thank you so much for joining us, Deepan. And have a great weekend. Meanwhile, while we're looking at a fairly good close, I would say a very good close considering where we started for the markets. Remember, poll season is also underway. First phase polling is on today. And you also had Home Minister Amit Shah filing his nomination from the Gandhinagar seat. Now, in an exclusive interview with NDTV's Vasudha Venugopal, Amit Shah says that the BJP is hoping for its best ever performance in southern India in this election. Listen it.
देखिए, रोड शो में सबसे स्पेशल बात ये थी कि मैं उस क्षेत्र में रोड शो कर रहा था जहां मैंने पोस्टर चिपकाए है, पार्टी के लिए वॉल पेंटिंग किया है। यही क्षेत्र से मैं बहुत छोटे कार्यकर्ता से यहां तक पहुंचा हूं। 30 साल से यहीं की जनता मुझे विधायक भी बनाई, सांसद भी बनाई, पार्टी का अध्यक्ष भी मैं बना, देश का गृह मंत्री बना, मोदी जी का साथी बनकर गुजरात में और देश में उनके मंत्रिमंडल का हिस्सा रहा। ये मेरे लिए बहुत गर्व की बात है और मैं आज मानता हूँ कि मेरे जीवन में गांधीनगर की जनता का प्रेम और आशीर्वाद बहुत महत्वपूर्ण है। कल जिस प्रकार से हर उम्र की माताओं बहनों ने आकर 7 साल की बच्ची से लेकर 91 साल की माता तक पुष्प बरसाए और आशीर्वाद दिया है, भले वो शायद 100 मीटर दूर मुझसे खड़ी हो, मगर मेरे लिए बड़ा भावुक क्षण था।
अमित भाई, देश का पहला फेज पोलिंग शुरू हो गया है। साउथ पे सबसे ज़्यादा फोकस मुझे ऐसा लग रहा है। साउथ से क्या उम्मीदें हैं सर इस बार?
देखिए, इस बार हम साउथ में मुझे लगता है कि हमारा सबसे अच्छा प्रदर्शन करेंगे। तमिलनाडु, तेलंगाना, केरल, आंध्र, कर्नाटक, ये चारों राज्यों में हमारा मजबूत प्रदर्शन होगा। दक्षिण में पहली बार मोदी जी की पॉपुलैरिटी इस स्तर पर पहुंच चुकी है जो अब चुनावी नतीजों में कन्वर्ट होगी। हमारी वोट शेयर तो 14 में भी बढ़ी, 19 में भी बढ़ी थी, मगर हम उस स्तर पर नहीं पहुंचे थे जिससे सीट बन पाए। इस बार मुझे पूरा विश्वास है कि सीटें भी बनेगी और बड़ी संख्या में हमारे साथी वहां से चुन कर आएंगे।
Well, it'll be interesting to see on June 2nd and then on June 4th what the actual numbers come. June 2nd, the exit polls, and June 4th, the actual results. Okay, let's start wrapping up the markets. Good day for the Nifty, really. You didn't expect this at the start of the trading day. Anything but this, by the way. This is a big surprise for the most optimistic of people, to be very honest. Yes, mid caps and small caps have not participated, but little to lose out there. Very quickly, just the snapshot of the Nifty, and then we'll of course wrap up the markets, and Gautama will bring up the mid caps and small caps. But very quickly, just the Nifty 50 snapshot, the heat map, and just see that, I mean, this rise is very strong. And we know the usual suspects. HDFC Bank right up there, 2.66% higher. One principal reason, in addition to multiple others, of course, the likes of ICICI, Bajaj Finance, etc. But it's HDFC Bank which has led this big move higher. And amongst the losers, Bajaj Auto in or around the low point of the day. But Taman, I dare say Nestle too, with 1.32% low, arguably one of the weakest hands in this week.
You know, because for Nestle, even though their exchange filing said that there's no material impact of that whole study, the fact is all of the agencies have now gotten onto it. You have NCPCR saying, Fasai, please give me a report in 7 days whether there is this much content of sugar. So it's a long battle ahead. But yes, I would absolutely agree that in terms of a market close, a spectacular change. We should pull up the sectoral indices and tell you what worked. And it's all BFSI, it's all HDFC Bank. It's the might of HDFC Bank pulling this entire market, I think, today. Finance, bank, and those indices doing the best. On the lower side, I would say realty, media showing a bit of pain. IT largely because of an Infosys, and we'll see what Wipro has to offer. Just a quick look at how small cap and mid cap indices have also closed at the end of this tumultuous week. Let's see what happens over this weekend, but a bit of trepidation, a knock on the mid-cap index towards the end. Can we pull up the intraday chart of the Nifty mid-cap? Because I just want to see where that hit has come and at what point. And yeah, no, you've seen a bit of weakness through the day, perhaps not as much of a recovery as on the other side. I think, Neeraj, to my mind, a few of standout kind of movers today, a Motilal Oswal, a Just Dial,
yet again,
you know,
yes.
Yeah.
Forgings.
Forgings has done very well. Just Dial on the back of its numbers. Motilal Oswal bonus share hopes over there. And Elecon Engineering did very well today in trade. And we should pull up and see where Elecon was at the end of it. 11.5%. That spike coming. Good numbers as well. And as well, that's that stock split story. But all about the numbers next week. Result season was the slow build up. We go into that sprint next week.
Most certainly. Well put, Tamanna. And FMCG, IT, right in the thick of things next week. But of course, the election season underway, and we'll get you daily updates on all our shows as well. But for now, from Tamanna and me and the team that put this show together, thanks so much for watching and have a great weekend.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only...
Hello and welcome. You're watching the Small and Mid Cap Show. I am Mahima Vachrajani. Well, OrionPro is in focus post its acquisition. We have with us Mr. Ashish Rai, CEO of OrionPro Solution, who joins us now. Welcome to the show, sir.
Hi, thank you. Thanks for having me.
Yeah. So, Mr. Rai, my first question to you is that, you've acquired 67% in Arya AI. Now, I want to understand what kind of synergies are you expecting out of this particular acquisition?
Okay, yeah, thanks, Mahima. So, look, we've been, for the last few years, building out a global products and platforms player. Right, we've been reasonably successful so far. We're trusted by some of the largest banks and insurers across the globe, right, in terms of the enterprise software offerings that we built up over time. As you see, the world, the technology world, at least, is going through probably one of the most fundamental platform shifts that we've seen in a generation, maybe since the internet or the coming of the mobile as well. Right, it's a very major shift. We believe it is very relevant for our clients as well as the industry in general for us to really bring together a mature enterprise AI capability that comes through Arya.ai, right? So I mean, if you look back, right, I think there's obviously a lot of noise around foundation models and a lot of success with foundation models that's come in, right? But bulk of value creation in the enterprise happens around the business workflows that our mission critical apps support, right? So we bring together a highly mature enterprise AI framework, enterprise AI offering and platform that Arya.ai has built up for banks and insurers. They're actually trusted by probably 100 plus banks and insurers across Asia. We bring that together with OrionPro's enterprise application stack, and we create the next generation of offerings for banks and insurers who trust us, right? So that's essentially what we are bringing together.
And Mr. Rai, so I want to understand that, I was checking the revenues for Arya.ai have been, doubled over the past 3 years, from 3 crores to 8 crores to now 20 crores almost. So do you see that this trajectory will be maintained? Do you see that the revenues will double by the end of FY25 as well?
Yeah, look, we feel very, very strongly about the potential for both our organizations coming together, and you put together probably one of the most mature enterprise applications, enterprise software team in this part of the world, in Asia, together with one of the sharpest AI ML enterprise AI ML teams. Together, we believe the potential is immense. We do expect Arya to continue to grow because it's actually the 3x growth, that trajectory that they've been on the last couple of years. I believe that's reflective of the demand, and there is a significant amount of untapped demand for a mature offering in the financial industry, in the enterprise AI space, right? So I think we'll continue to do that. I believe there is a significantly larger opportunity we can tap in by both of us working together in terms of creating the next generation of offerings, right? So yeah, I mean that's from a longer term standpoint, enterprise AI is a $1 trillion opportunity, right? I think across banking and financial sector is one of the biggest spenders on tech. We are moving through one of the most fundamental shifts in the industry. So I believe, we work together in terms of tapping into that demand. Time will tell how much and to what extent we can tap into it.
Understood. So going forward, let's say in a long-term perspective, by FY25 or by the end of FY26, how much contribution from your total revenue do you expect out of this particular acquisition?
Yeah, look, I think it would be very hard to give out. We don't give out forward guidance that long, Mahima, so I would sort of stay away from that question. I think longer term, so OrionPro side is been growing at 30 to 35% for the last several years. That side will keep growing. Arya has been growing 3x or so. It will keep growing, right? So we don't give out forward guidances that way out.
Okay, so now I also want to understand that, you recently raised a QIP of around, 377 crore. So I believe that the 135 crore that you're going to pay for this particular acquisition will be used from that QIP. So the remaining amount, if you can elaborate on where this amount will be used it be used for further acquisitions? What are the plans with the fund raised?
Okay, yeah. So thanks, Mahima. So over the last couple of months, we've actually done a preferential for about 200 crores and the QIP for 370. So we raised about 570 crores with a set of investors who are aligned to the vision of building out global products and platforms player that OrionPro is building out. So we had a lot of marquee investors investing with us. A part of the proceeds obviously goes to M&A, and we'll continue to sort of do that. But as an organization, we've essentially been organically growing very strongly. A lot of the capital would go into funding the organic growth. We've expanded quite significantly. I think from a year back, just the staff strength has gone up almost, I would say, 50-55%. The order book is very strong, and we need to execute against it. So a lot of the capital would go into just for keeping the organic growth trajectory on, and then we'll continue to selectively do M&A where it makes sense in our strategic blueprint. So over the last, I would say 6 months, this is the third acquisition that we've done in, very, very specifically targeted towards a gap we had in the strategic blueprint that we are serious about doing it, right? So there is always a build versus buy choice when we're going after a very defined strategy that we have in terms of focusing on the select segments that we have, right? So we'll continue to do that. So I suppose there'll always be some level of capital that will go into M&A, and the rest of it goes into the organic growth needs of the enterprise.
Understood. Well, Mr. Rai, thank you so much for taking our time and speaking with us at NDTV Profit. We'll speak to you once the number for Q4 and FY24 come out.
Okay. Thank you.
Well, viewers, it's time to slip into a short break. But on the other side, we have Sharekhan's Kaustubh Pawaskar, who will be joining us to talk about the FMCG sector ahead of Q4 earnings. Stay tuned.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching the Small and Mid Cap Show. Well, FMCG Q3 earnings are in line next week. We have Tata Consumers who will be posting their results on Tuesday and HUL on Wednesday. But to discuss how the Q4 for FMCG company will look like, we have with us Mr. Kaustubh Pawaskar, Deputy VP Research, Sharekhan by BNP Paribas, who joins us now. Welcome to the show.
Thank you.
So my first question to you is how are you expecting the Q4 earnings for FMCG companies?
See, quarter 4 will be again a muted quarter for the consumer good companies.
Yeah, okay. Sorry, you can go on. My bad.
Yeah. So quarter 4 will be again a muted quarter for the FMCG companies. We are expecting volume growth to be 0 to low single digit volume growth. Rural demand is yet to pick up, and that is the reason volume growth momentum would continue to be muted. We are expecting urban demand to be better. However, for last 2 months, we have seen some bit of improvement in the rural demand, but whether it will sustain or not, it is something which will be monitored by the companies, and that is going to be one of the key, highlighting point in the commentary of most of the consumer good companies in the quarterly results. Revenue growth will also be in low single digit to mid single digit, because FMCG companies had passed on the benefit of decline in the raw material prices to the consumer in the form of price cuts. So this quarter we will see annualization of the price cuts, but overall we should expect a low to mid single digit kind of revenue growth for most of the consumer good companies. In terms of margins are expected to be higher on YY basis, and that should help PAT growth to be a little better than what the revenue growth would be. But Q4 would be similar to what it was in Q3 and what it was in Q2. So there won't be any significant changes in terms of performance we should expect. The only thing which will play out would be what kind of commentary managements come out with post the results, whether they are looking at any change in terms of demand environment in the rural India, or since monsoons are expected to be good, when can we see a consistent kind of a recovery in terms of volume. So that is something which will be monitorable in the quarters ahead.
Understood. But I just want to understand in terms of, volume versus value growth. I'm expecting that, the volume versus value growth should improve for Q4. But what are your views on that?
Yeah, volume growth will be better than what the value growth would be. As I said that, companies had undertaken price cuts, and the impact of that would be seen in Q4 as well. However, we believe that Q4 would be the quarter where we might see annualization of the anniversarization of the price cut, and from here we should expect stable kind of a value growth from Q1. And we have seen in the recent times commodity prices going up. Crude has reached to the level of $90 per barrel. There are some other commodities like palm or other key input prices have gone up substantially. So we should expect consumer good companies to start taking price increases if this uptick remains in the commodity prices, and that is why we should expect value growth to start coming back from Q1 of FY 2025. But obviously, the volume growth is something which is very important for the consumer good companies to see in terms of recovery, and that is something which will be monitored in the quarters ahead.
Understood. And in terms of raw materials, especially, recently the cocoa prices, the sugar prices, the coffee prices have seen a sharp up move, right? So in terms of that, do you see that, some companies which have high usage of all of these components will see some kind of hit in margins? Or do you think that, there is slowdown in the milk prices and it will be compensated for the same?
So the impact would be there, but impact will come with a lag, because we will not see much of the impact in this quarter. But if prices continues to see up move, then from Q1 or maybe from Q2 we might see it start hitting the margins if companies do not cover it up with adequate price increases. But that is something which we need, as I said, which we need to wait and watch it, how the momentum in the commodity prices would be. And if that kind of momentum continues, I think definitely companies have to pass on it to the consumers, and the gap between the increase in the raw material prices and the price increases taken, I think that gap will have an impact on the margins in the quarters.
Understood. And Kaustav, when it comes to FMCG, there is always a debate that when will the rural recovery kick in, because we've seen that the inflation is hitting people's pockets very hardly. So there's one argument where there is they've seen that the rural base that we're comparing it with was COVID year, so the base is very erratic. But what do you think? Where do you think the rural recovery will take its place and the FMCG companies will see an up move in terms of rural recovery?
So if we go through the industry reports, in fact, January, February, there was good growth in the rural market. In fact, rural growth was ahead of the urban growth. Okay. Now, is it whether it will continue or not? That is something which we need to see in the coming months. What we believe is that post-election, post-election budget, we might see some kind of benefits coming in for the rural sector. Also, monsoons are expected to be good this time. So we have IMD, SkyMed, both of them stating that monsoons will be above average this year. So if monsoons are good, we might see good agri income as well. So both these factors, will play for the improvement in the rural demand. So we, if everything plays as per the expectation, I think from second half of the year, we should see gradual recovery in the rural demand, and that should continue in the quarters, in the subsequent quarter, and then we can say that the recovery in the volume growth will be there, because urban demand has remained quite stable, and rural demand is something which need a push. So good monsoons, some benefits from the election comes in, I think that augurs well for the rural demand.
Right, I take your point. Now I'll shift focus to stock specific actions. All the large cap FMCGs are overvalued, and I checked the Bloomberg estimates as well. The valuations won't come down for at least FY25 as well. That's what the estimates suggest. But where do you think is the value, in large caps, mid caps, or small caps?
I think if you look into the performance as well, small cap or small companies have done better than the large cap. For example, Jyoti Labs or Vector Foods, Varun Beverages, or for that matter, the small players have done extremely well in terms of the performance if we compare it with the large companies. But I believe that we have to be selective in this space. I think companies who has a good earning visibility, decent valuation, I think these companies should be preferred, in the FMCG space currently. So we continue to like ITC in the large cap space, mainly on account of its discounted valuation and its the growth strategy what it has placed for its business. We like Godrej Consumer Products because of its revamped strategy in terms of the portfolio innovation, and some of its businesses like Indonesia is now recurring, doing well. Domestic business is expected to come back on track. They have already changed their Africa business model, where the large focus is on improving the profitability. So I think all these things should help GCPL to post a good earning growth in the near to medium term. Tata Consumer Products is another company we like, mainly because of its portfolio, and we have seen Tata Consumer Food business doing extremely well. They are filling the gaps by required acquisitions, and that will help them to achieve consistent growth in the coming years. So Tata Consumer Products is the another company we like. In the small space, we like Jyoti Labs because consistently it has delivered a good performance for past few quarters, and we believe that should continue, and that is why Jyoti Labs is a good bet. Also Varun Beverages and Mrs. Vector Food, these are the companies who are focusing on gaining more and more presence in the domestic market, and Varun Beverages is not only doing good in the domestic market, but now it is also gaining momentum into the international market, where it has a good presence. So I think the company should continue to do well in the coming years in terms of earning prospect. So these are some of the companies which we like in the FMCG space.
Okay, interesting. I take your top picks from the FMCG pack, but do you also track QSR and the retail sector?
Yes.
So your quick top picks in both QSR and the retail sector, and where is the value in terms of large, mid cap and small cap?
See, QSR is reeling under the discretionary special. So we have seen that same-store sales of most of the companies are being under pressure. We believe that pizza companies will take some time to recover. We expect burger and sandwiches, so the lower value product to do well because of the the pressure on the discretionary consumption. But the growth will be there for all these companies mainly because of the fact that they have not stopped with the store addition strategy and they are continuously adding stores. So that will drive the revenue growth. But for same store sales to see a material recovery, it will take time. Also, we have seen a lot of competition building up on the delivery platforms. So that is something which is also hurting most of these companies, especially the pizza players. So in this space, we like restaurant brand Asia, the Burger King, which is where its Indonesia business is on a recovery path. India business is doing good. In the retail space, again, the branded apparel, it will take some time for branded apparel to come back on track. But Trent is the only exceptional which is doing extremely well in this space. Jewelry companies are doing extremely well with the performance they have been giving in past few quarters. So Titan and Trend are our top picks in the retail space. And in overall discretionary space, we like hotel companies. So hospitality as a sector. So we like Indian hotels, Chalet Hotels, Lemon Tree, Shami Hotels, and Wonderla Holidays. These are the picks in the hospitality and travel tourism space.
Got it. Well, Mr. Pavaskar, thank you so much for taking out time and speaking with us at NDTV Profit and giving us all those insightful points on FMCG. Well, that's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
Co-presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Hello and welcome to Earnings Edge on NDTV Profit. Wipro has just declared its quarterly results and as expected, they're not looking good. Wipro's actually shrunk in FY24, meaning that the top line has come off for the full year. So Wipro's revenue, FY24 revenue, has fallen to 92,391 crore rupees from 92,762 crore rupees in FY23. However, Wipro has guided for a minus 1.5% to 0.5% revenue growth in the first quarter of FY25. My colleague Rucha is joining us for more details. Rucha.
Wipro has reported a flat revenue growth for the IT services segment, while the operating margin was up 40 basis points for the IT services segment. In terms of net profit, it was up 6% for the fourth quarter. The TCV deal wins for the year was at 14.9 billion, a decrease for 5.5% in YOY terms for the entire year.
All right. So what we are looking at is about what Rucha just mentioned, about $1.2 billion in TCV. That's 9.5% in constant currency terms. The voluntary attrition is seen as 14.2%. And if I'm not mistaken, Wipro will actually show a decline in headcount on a yearly basis as well. Remember, there has been a steady decline in the headcount of the company over the last 4 quarters, and that's likely to happen again. Just going through the numbers again, the IT services segment, the revenue was flat. The margin was about 42 basis points. Again, the guidance is a slight revision as compared to earlier from minus 1.5% to 0.5%. Now we wait for actually, so this is also the quarter, remember, this is also the quarter when CEO Thierry Delaporte exited the company to make way for Srini Pallia, a veteran of the company for about 40 years. Moving on, we have a guest joining us at this point to talk to us more about the Wipro earnings. Mr. Sandeep Agarwal, thank you for joining us.
Yeah, hi, good evening, and thanks for having me on the show. So the preliminary numbers which I can see, I think are broadly in line, because the expectation for IT services was to fall 0.5% in constant currency terms on a quarter-on-quarter basis and flattish in US dollar terms. So I think to that extent it is broadly in line number, and also margin was expected to be flattish quarter-on-quarter, versus which I think it is, if I hear it correctly, it has improved a little bit, 42 basis points. And but on the growth guidance, we were expecting, I think, -1 to +1% constant currency growth quarter-on-quarter, which I think is slightly below that. So I think broadly this can be called inline numbers, and not a bad number or not a great number.
Sure, sir. So, Mr. Agarwal, let's talk about the fact that Wipro has actually shrunk in FY24. So, we see that FY24 revenue numbers are actually less than FY23 numbers. So, where does Wipro go from here? This is actually a rare event in the Indian IT space.
Yes, absolutely. This is a very surprising thing to happen, and generally it doesn't happen. The challenge which we are seeing in case of Wipro, and this challenge has been persisting for a very long time, is that you have to remember that this is a B2B business where 10, 15 large clients or 25 large clients determine the fate of the company, and this is mostly leadership driven business. So they have been going through pain where the top leadership has been on a consistent churn, and I think that is what has impacted them badly, and that continues to hurt them. So I think other than deep value in the stock, which obviously remains with a high dividend and high buyback potential, there is no other investment rationale within the large cap space for at least Wipro.
Sure. On the basis of the headcount and the attrition number reported by the company, headcount is largely the same and attrition is also stable at 14.2%. So do you think that is the level which will sustain for Wipro, or there is room for it to come down further?
Yeah, I think attrition at 14.2 is not a bad number at all. It is a decent number. It also suggests that margins are close to peaking out. So in my view, margins may not move up much from here because what is attrition, which is one of the biggest levers. The lag effect, maybe next quarter again, their margin can improve a little bit, but that's it. So I think from the margin perspective, there is no more headroom left in my view, maybe 50, 100 basis points. But from growth perspective, they definitely need to, move up sharply. Otherwise, the challenges they have witnessed in FY24, that may further continue in FY25 also. As of now, the industry is also not very optimistic immediately, but I think it is optimistic on the fact that FY25 will be a better year than FY24. So I think hope Wipro, gets its mojo back, gets its team back, and they are able to execute well so that they don't de-grow in this year.
Sure. Another one on the revenue vertical segmentation. As I can see, BFSI has reported a 2.1% growth, which is the highest amongst the other segments, while communication is bad at negative 4.8%. So do you think that is a read-through for maybe Tech Mahindra, which is coming up next, because it has a large amount of revenue coming from the communications vertical?
See, let me put it this way that, for Wipro, some of the client concentration is also in the Middle East and some parts of Asia which, generally March is strong. So maybe, the BFSI strength is coming partially from there. As far as communication is concerned, Telecom has very different offering, and one of which is obviously what Wipro also has an offering, but they also have different set of offerings. So concluding from weakness in communication number of Wipro that Telecom numbers will be weak is something which may or may not happen. In the past, we have seen when TCS had a weak communication number, Telecom has come out with a good set of numbers from the communication segment. So
yeah, Mr. Agrawal.
I think that is very difficult to read. Okay. But yes, it definitely suggests that, communication is not out of woods.
Okay, let's move on to a bit about the deal making that we are seeing. We are seeing that the TCV is up 9.5% to $1.2 billion. Where is the deal making? Now, this is in the context of what is the nature of the deals that may be just coming in. Are discretionary deals coming back, or is it still cost optimization deals that you are seeing? Also remember, how is the consultancy piece that we should see in the case of Wipro, sir, especially in the case because of the Capco acquisition?
So, two things. One, if you see for Wipro, always third quarter deal wins are lowest, and then fourth quarter sees a big jump, and this year should not be different. So if you see FY23 in quarter 3, they have won around 978 millions of deal, and in quarter 4 they got 1100 million of deal, and this year again similarly last quarter was 909 and this time it is 1200 odd. So I think that is something which is more cyclical in nature. So I would not read too much into it, but in my view that this momentum of deal win has to move up sharply to, for the company to even post a high single digit or a mid single digit kind of growth in FY25.
So do you think these revenue, do you think the delay in deal making, conversion of deals into revenue is still persistent? I mean, the margins are not improving as much as what Wipro would want to. It's not happening yet. As well as an extension of the question, do you think how is the AI pipeline will be looking for Wipro given all the deals that it has signed in the past?
No, absolutely. AI is something where there are deals for everyone, and whoever is able to execute, they are getting their share of the pie. But the more important challenge, as you rightly mentioned, was that the conversion of deal to revenue. That is where, generally in the past also we have seen whenever Wipro has reported a weak set of numbers, that time the conversion has been very poor. So we are more worried on the conversion part, number one. Number two, we are also worried on the new deal wins momentum picking up. And till that happens, both of them have to come together to, for them to post a 6% to 8% growth, which looks little unlikely right now given the situation.
Sure, got that. And one question from my side, as I can see the utilization level is gone up just a bit from 84% to 84.8%. So what do you think can be the margin levers going ahead? The subcontracting costs also have come down, so broadly according to you, what can be the margin levers going ahead?
So in case of Wipro numbers, If you read through, the attrition is close to bottom. The subcontracting costs have also come down sharply, and even utilization can improve by another couple of %. But I don't see big levers. So as I said, another 50-100 basis point. If you do very strong execution, much better efficiency, and everything come together, they can expect a 50 to 100 basis margin improvement, which also is difficult from the current level. So whatever they have to get is through operating leverage, which only will come when the growth picks up substantially from the current run rate, and which we don't have clarity right now.
All right, Mr. Agarwal, one final question to you. We now have a new CEO at Wipro amidst a massive churn that the company has gone through in the last 3.5 years of Thierry Delaporte at the helm. So what do you think, what are your expectations from the new CEO? Will you look to steady the ship? Do you think there will be one more round of restructuring? What do you think the timeline should be like to reach industry matching profitability numbers, sir?
Again, it is one of the difficult questions. You yourself answered it that, this industry, as I told, is a B2B industry. So your leadership churn hurts the growth most. And they have not been able to stabilize that for a long, long time. We have seen 3 or 4 rounds in the last 15 years when a new CEO or joint CEO has come. They have tried their best for, let's say, 2 to 3 years, and then they have left due to some or other challenge, or you may say they have not been able to achieve the growth rate which they should have. So I think, this really needs a very big reshuffle, and you don't need any more 1 or 2 people to change. For that kind of organization to change, you need a concentrated effort of getting in 8-10 good people, very senior people, and with a mandate to really go behind the large clients and the elephant clients and get them on board. Otherwise, this is not going to change.
All right. Thank you so much, Mr. Agarwal, for those early comments on Wipro earnings. Just a quick recap. Wipro's revenue has actually shrunk in FY24 as compared to FY23. The guidance is at minus 1.5 to 0.5 for Q1 FY25. Revenue is flat sequentially. Profit is up 6%. TCV value is at 9.5% up quarter on quarter to $1.2 billion. So steady set of numbers, mixed set of numbers, but still the haze has not lifted off Wipro. For this now, we'll go into a short break. On the other side, we'll have more from the reporter's desk.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Hello and welcome. You're watching India Decides on NDTV Profit. Now, the first phase of the Lok Sabha polls kicked off today. Tripura recorded the highest voter turnout so far at 68.35%. Bihar recorded the lowest turnout at just 39.73%. I'm joined by Vedant Agarwal from Alwar, and he brings you the latest ground zero action. Vedant?
Well, there's hardly any action. It's 4 p.m. in the evening. The sun is straight up here in Alwar. But of course, keenly contested battle. Alwar is, of course, one of the most high-profile seats in the desert state. And we saw, long queues here at this polling booth in the morning. But it's about 4 p.m. and Rajasthan has recorded a little over 40% turnout till about 3 p.m., which is rather low. Because remember, last time in 2019, Rajasthan had recorded over 60% voter turnout. But these are, of course, tentative numbers. Remains to be seen how high this is. Here in Rajasthan, of course, it's a key Congress versus BJP direct battle. The Congress sort of looking to gain some of its lost prestige after it lost the assembly polls. But let's get in a word from a young voter here. He's an SSC student. अपना नाम बताइए.
मेरा नाम अमित है.
अमित, बताइए आज युवकों के, यंगस्टर्स के क्या मुद्दे हैं राजस्थान में?
सबसे मेन मुद्दा तो बेरोजगारी है. और जैसे हमारी घर की कंडीशन महंगाई है, क्योंकि बेरोजगारी इतनी हो चुकी है कि एसएससी जो पहले जब मोदी काल नहीं था 2014 से पहले, उस टाइम पे जब एसएससी की वैकेंसी आया करती थी तब 26 हज़ार एक साथ आया करती थी. और जब से 2014 के बाद जो हुआ है मोदी काल, उसमें वैकेंसी एकदम घट के 7,000 8,000 ये हो गई, मतलब आधी से भी कम हो गई. और पिछली बार जो एलडीसी की वैकेंसी आई एसएससी में, उसमें सिर्फ ऑल इंडिया 1400 वैकेंसी आई. आप ये देख सकते हो ऑल इंडिया जो 1400 वैकेंसी आ रही है, तो कितना कंपटीशन है और बेरोजगारी किस स्तर पर है.
पेपर लीक भी काफी बड़ा मुद्दा है यहाँ पर. जैसे कि 3-4 दिनों में मुझे लगा यहाँ पर कि पेपर लीक युवकों के लिए बड़ा डीमोरलाइजिंग है.
पेपर लीक तो ऑब्वियसली सबसे ज्यादा वो है, क्योंकि पेपर लीक से क्या है, जो ऑनेस्ट स्टूडेंट होते हैं उनका बिल्कुल पत्ता साफ हो जाता है. बेचारे जो तैयारी करते हैं इतनी मेहनत से, हो लेकिन बाद में पता लगता है कि पेपर लीक हो गया और पैसे दे के जो लगे हैं उनका एकदम से मोरल डाउन हो जाता है उससे.
बिल्कुल अमित, थैंक्स वेरी मच. कपल आल्सो कमिंग हियर आफ्टर कास्टिंग देयर वोट. आज राजस्थान में अलवर में वोटिंग है. किन मुद्दों पर वोट कर रहा है आज अलवर?
सर, अलवर में सबसे बड़ी चीज़ है पानी की समस्या. यहाँ पे पानी की बड़ी समस्या है, तो उसके लिए वोटिंग होनी चाहिए कि कोई भी जो नया बंदा है यहाँ पे, तो उसकी मतलब सप्लाई पानी की ठीक करे.
और ये खाली गांव की प्रॉब्लम नहीं, शहरों में ये पानी की प्रॉब्लम है. लेट्स गेट इन अ वर्ड फ्रॉम मैम आल्सो. महिलाओं के क्या मुद्दे हैं राजस्थान में?
कि मैम, महिलाओं को पानी की मतलब समस्या बहुत है यहाँ पर, कि जब मतलब पानी यहाँ पर नहीं मिल पा रहा है. हसन का तो मेन प्रॉब्लम है यहाँ पर पानी की.
अब आप पानी देख लीजिए, इतनी पॉश खोला नहीं है, जब भी यहाँ पे बड़ी प्रॉब्लम है. पानी की समस्या है. तो यहाँ पे
जनरली ये परसेप्शन है कि ये रूरल प्रॉब्लम है, लेकिन यहाँ पे ये शहरों
में प्रॉब्लम है, क्योंकि यहाँ पे सब पानी का स्तर बहुत नीचे जा चुका है. सारी बोरिंगें फेल हो चुकी हैं, तो कुछ नया ना इसको ना सेंट्रल ने कुछ कर रही है.
बहुत शुक्रिया. So of course some of the key defining issues of the elections in Rajasthan, particularly this Alwar belt, which is a very sort of hotly contested battle, is the water crisis. Of course, unemployment continues to be an important issue here. A lot of Agniveer students who are Agniveer aspirants very disillusioned by the centre's scheme. So all of these issues, but of course it remains to be seen whether it's these local issues that dominate the elections or the national issues, the defining themes of brand Modi, Vishwa Guru, etc., that the BJP has really sort of put its focus on in the in the campaign as well. In Alwar, it's a Yadav versus Yadav battle. Union Minister Bhupendra Yadav is taking on Congress's Lalit Yadav. So again, an interesting battle here in Alwar. 12 of the 25 Rajasthan seats voting today.
Thank you, Vedant. And with that, let's also go across to Ronak Kokre, who joins us from Nagpur. Ronak, what is the mood like in Nagpur?
जी देखिए, अगर नागपुर की बात की जाए तो फिलहाल यहाँ पर सुबह 7 बजे से मतदान शुरू हुआ और अब तक यहाँ पर लगभग 38% मतदान जो है पूरा हो चुका है। लेकिन नागपुर में चूंकि टेम्परेचर अभी 40 डिग्री के आसपास है, लिहाजा सुबह के वक्त काफ़ी भीड़ जो है वो मतदान केंद्रों पर देखने को मिल रही थी। लेकिन जैसे यहाँ पर धूप बढ़ती गई तो थोड़ा यहाँ पर लोगों की भीड़ जो है मतदान केंद्रों पर कम देखने को मिली। लेकिन एक बिग फाइट नागपुर में देखने को मिल रही है। केंद्रीय मंत्री नितिन गडकरी तीसरी बार हैट्रिक लगाने के लिए बीजेपी की तरफ से मैदान में, तो दूसरी तरफ कांग्रेस ने यहां से विकास ठाकरे को मैदान में उतारा। विकास ठाकरे एक जाना पहचाना नागपुर का नाम है और इतना ही नहीं तो मैं आपको बता दूं कि विकास ठाकरे पूर्व मेयर रह चुके। आप देख सकते हैं कि इस वक्त जब दिन थोड़ा सा यहां पर ढल रहा है उस वक्त यहां पर लंबी कतारें लोगों की यहां पर देखने को मिल रही है और कुछ लोग भी हमारे साथ है। ये बताइए क्या नाम है?
श्रीकांत शाक्य।
अच्छा, क्या मुद्दे हैं और किन मुद्दों के आधार पर आप लोग इस बार मतदान करने जा रहे हैं?
मुद्दे कुछ नहीं है, हम बीजेपी को सपोर्ट कर रहे हैं।
नहीं, ये मत बताइए आप क्या विकास के आधार पर मतदान कर रहे हैं?
बिल्कुल विकास के मुद्दे पे।
क्या नाम है सर आपका?
मेरा आदित्य चौधरी।
आदित्य जी, क्या मुद्दे रहेंगे, क्या करते हैं आप?
कोई देश का विकास चाहते हैं।
हाँ,
देश का विकास।
अच्छा, पिछले कुछ सालों की अगर बात की जाए तो क्या आपकी बातें यहाँ पर हुई है, आपका डेवलपमेंट हुआ है?
हाँ, हुआ है ना।
क्या नाम है बहन जी?
प्रमिला शाक्य।
अच्छा, ये बताइए वोट करते वक्त क्या ध्यान में रखा है, क्या मुद्दों पर मतदान किया है?
बहुत अच्छा लगा वोट करने पे। अब कैसे बताए, जरा अच्छा लगा।
नहीं, लेकिन आपके मुद्दे क्या क्या, महिलाओं के लिए काम किया है अब तक की सरकार ने, क्या लगता है?
बहुत कुछ विकास हुआ है, बहुत अच्छा लगा।
तो आप देख सकते हैं कि जो लोग हैं वो अब भी यहाँ पर कतारों में लगे हुए और एक अंदाज जताया जा रहा है कि पिछली बार नागपुर में 2019 में 54% मतदान हुआ था, लेकिन ये परसेंटेज ऑफ वोट जो है वो कहीं ना कहीं बढ़ेगा और